Welcome back to the stream. We are kicking. We are living. We made it back from work. It is 10:07 in the evening on this beautiful August 14th, 2025. Bitcoin is rocking and ripping back up almost to 119,000. I'm about to have some food here in maybe 15 minutes, but until then and after then, I'm going to start ripping this run. So, as you know, we are in the Pilfer Zone. We're about to get going, and we're going to kick the Bitcoin podcast back on, catch up with the day, see what's going on. Here we go.
Just ripped through $123,000 and set a new all-time high. So Bitcoin just ripped through $123,000 and set a new all-time high. And naturally, everybody's wondering, is now a good time to buy Bitcoin? Well, today we're going to be looking at the pattern that not only destroys the bears, but also tells us exactly what is coming next for Bitcoin, when Bitcoin might top in 2025, and we are going to be having a look at multiple different bull market indicators that gives us a little bit of a grasp of understanding just what might come next for Bitcoin. So let's dive straight into this pattern that I think will help explain when the generational bull run begins and when we might be getting a little bit overheated. So the red lines I have on this chart, this is showing us every Bitcoin halving. So we can see in 2012 we got a halving, 2016 we got a halving, 2020 we have a halving, and 2024 we had that halving in April. Now the blue lines I have on this chart, this is exactly 1 year after the halving. So we're looking at October 2013, July 2017, May 2021, and then April 2025. Now, what do you guys notice about what happens to the price of Bitcoin that is represented inside these red boxes after we see the blue line? So after 1 year has passed, after Bitcoin's halving, we can see we've seen an explosive rally every single time. So let me give you some numbers. So we've got a little bit of data to crunch here, and maybe we could use this to project out what we can expect for the next few months. So in 2013, 1 year after the halving, Bitcoin was priced at $88, and then literally a month later, it was $1,500. So we saw a 1,500% gain just after the parabolic phase of the bull run began, okay? 1 year after the 2012 halving. What do we see 1 year after the 2016 halving? Once again, Bitcoin entered the parabolic phase. It was at around $2,000 a coin in July 2017. So this was 1 year after the halving. Again, where did I get the dates from? I didn't just pull them out of the wazoo. These are the dates of the Bitcoin halvings. You can see November, July, May, and then April 2024. So what happened exactly 1 year after the 2016 halving? Let's zoom in a little bit. We can see Bitcoin was at around $2,000, and in the next 3 months, as you can see by this red box, Bitcoin rallied from $2,000 to $20,000. This was a 900% gain. Let's zoom in. Let's take a little bit of a peek at what happened in our pattern after the 2020 halving. So of course, we saw the halving in May 2020. That's the red line. And then 1 year after the halving, in May 2021, Bitcoin was at about $27,000 per coin. What happened over the next 3 months? Bitcoin rallied by 150% up to $169,000 a coin. And again, I've argued so many times on this channel that the Bitcoin bull run was cut prematurely short because the price was attacked by China banning Bitcoin mining, Elon Musk saying, yeah, you know what, Bitcoin's too dirty, I'm not going to accept it for payment at Tesla. And then just weeks later, we saw the World Economic Forum start talking about how dirty Bitcoin mining is. We saw BlackRock talking about ESG assets. I think we saw a coordinated attack on Bitcoin. And that's why I think that bull run was cut short. Again, I don't think many people have really experienced a real Bitcoin bull run. I think the last one we saw was 2017 when we rallied by 20x in 9 months. That would represent Bitcoin going from $120,000 today to 2.4 million by April 2026. That's what a 20x in 9 months would look like. And I don't think most people are ready for that. Before I get too crazy and start running the numbers and calculating the bull market multiples, let's see where we are right now. Let's kind of explain why we see these patterns. So Bitcoin halving happened in around April 2024. Big red line here, blue line, 1 year after the halving. April 2025, Bitcoin, we're about $73,000. So we have begun the parabolic ascent of Bitcoin's bull run. Now I want to show you something else that's really interesting about this pattern. What's interesting about all of these blue lines? May 2025, May 2021, July 2017, and then we've got October 2013. Most of these bull market acceleration phases, they start around the middle of the year and then they go absolutely nuclear towards the end of the year. Why is that? Well, that's because there might be a little bit of seasonality in Bitcoin. So this chart here has a look at the monthly returns for Bitcoin over the past 10 years. So let's take a little bit of a look here. You can see in the middle parts of the year, in April, May, June, July, August, and September, there's no real trend, okay? You can see there's not a big difference in what we are used to seeing. In August, we see plus 1.78%, July plus 7.5, June minus 0.35. The real fun kind of begins here in October. So you can see Bitcoin averages 23% moves per month in October. This is why we call October Uptober, because it only goes up. It goes up forever, Laura, in October. Now, this is really important to keep in mind because we right now are approaching Q4 2025. And it is that final quarter in the year after Bitcoin's halving that we do see Bitcoin going absolutely parabolic and it going nuclear and it just getting a little bit crazy out there. I think that's what we're going to start to see in the next few months. So again, where could this take us? This is what most people probably want to know. What does this actually mean? Well, let's look at the averages. I hope this chart is big enough for you guys to see at home, but we can see typically Bitcoin gives you 22% in October. It gives you 46% in November. No, I did not stutter. 46% is the all-time average of Bitcoin's performances in November. And this is 10 years worth of data. We're not cherry picking here. And then we've got December plus 5.4%. So what would that mean for Bitcoin? If we see plus 22%, plus 46%, plus 5%. Quick math off the top of my head says that we go from about 123 to somewhere around 150, and then we'd go from 150 to 225 in November, and then the moderately plus 5.4% in December. That would take us somewhere up around 235. So again, this is kind of what we're looking at if Bitcoin repeats what it did previously. But of course, there's the argument. What if this time is a little bit different? This cycle is already a little bit different for multiple reasons. One, we actually hit a Bitcoin all-time high before the halving in 2024. Let's have a look at the charts. We've never seen this before in Bitcoin history. Again, this is a messy chart. I might try to clean it up a little bit for you guys. But what we've seen is we saw Bitcoin breach this 69,000 all-time high before the halving. So let's clean all this trash up here so you guys can actually see what's going on. You can see Bitcoin hit $75,000 in March 2024 before the halving. This is actually something that we've never seen before in Bitcoin's life. And lots of people are now beginning to chatter and talk about the possibility of this Bitcoin cycle maybe, again, maybe just being a little bit different. I actually saw some really good tweets, really interesting tweets today from some really prominent Bitcoiners. Let's take a look at what Adam Back is now saying about the Bitcoin cycle. Again, Adam is the only man referenced in the original Bitcoin white paper all the way back in 2008. Okay, Adam knows a thing or two about Bitcoin, and he certainly knows a thing or two about money and economics, okay? He did develop Hashcash. This is obviously a form of digital money that was used, well, it wasn't a form of digital money, it was used to combat spam in emails, but Hashcash was a critical invention that was used by Satoshi to create Bitcoin. So again, Adam's been around the realm here for a little while. Let's see what he has to say about these cycles. This tweet here was absolutely blowing up on Twitter, but he said, reminder, last halving cycle top was March of 2024, $73,000 per coin. So Adam is actually talking about the 4-year windows in between halvings. And he's making the point, hey, hang on a minute, Bitcoin topped nearly 3 years and 23 months after the 2020 halving. Okay, it's interesting. So Adam says some argue the top that countered, is like most people are expecting the top 18 months after the halving. But what happens if the next cycle top isn't until Q4 2027 or Q1 2028, just before that 2028 Bitcoin bull run? So again, there's an argument for maybe why we might see something slightly different. Again, another argument for maybe why we could see something slightly different is this chart right here on the screen. What is fascinating is that Bitcoin has largely been trading in this channel. Okay, Bitcoin's just kind of been very slow and very boring since the FTX collapse. Again, there's a lot of theories for why this is. Again, just think about this for a minute. We now have nation states, we have billionaires, we have sovereign wealth funds all piling into Bitcoin right now. And these guys are not FOMOing into Bitcoin. Again, typically, once Bitcoin gets above its previous all-time high, retail money comes in hot. Retail money starts slamming the buy button on their favorite exchanges, and this triggers the price to really start going parabolic. But now the actors who are dominating the space, these big guys, they're not chasing green candles like our good friend back in the 2017 bull run were. They're being a lot more methodical. They're dollar cost averaging into their positions. They're just slowly ripping coins off the exchanges. And they are very, very, very price agnostic. Again, Michael has said for some time now, he doesn't care about what price Bitcoin is. He's going to be buying the top forever. Michael's very own words. And again, we can see this behavior and sentiment manifest itself in the price of Bitcoin. In the amount of Bitcoin actually available for sale, the supply. This is really important. Have a look at this. We now are sitting on 2.4 million Bitcoin on exchanges, but I'm more concerned about the trend. Look at the trend. That's insane. We've seen about 20% of all of Bitcoin on exchanges disappear in just 6 months, since October 2024. The trend should always be your friend. And again, I think this is, again, another consideration people need to be thinking about. Some more patterns that I'm looking at that kind of indicate where we are in this Bitcoin cycle is things like this one. So we have the market value to realized value. We can see whenever we see massive peaks and spikes in this metric, that pretty much nails the top. Right now, we are nowhere near a peak. Look at how lackluster this recent price action is on this metric. It's lackluster. The MVRV ratio is pretty conservative right now. It's not even close to the levels it has been previously. And again, this chart, again, kind of confirms my suspicions about 2021 not being a real bull run. Look at how small that little peak was in 2021. Again, it's pretty small. It's small. Let's just say that, all right? So just another little data point that I think is kind of suggesting we're not even close to a top here in Bitcoin. We can also see this is another indicator that once again highlights how 2020 was a fake bull run. It was a catfish of a bull run. You match on this one on Tinder and it looks like a 9, but you get it on a date and it looks like a 4. That's what that bull run looked like in 2021. Have a look at it. Wasn't even a real bull run. That's kind of insane. I'm probably not the one to be talking about 4s, but let's have a look at this chart. I've got a few more charts I want to show you because when you zoom into that one, you can really see that 2021 wasn't a real bull run. And even the data is a little bit conflicting. It's like, hey, what's actually going on here? So that was the market cap divided by the thermo cap peaks. Again, I don't want to dive into that too much. What I think is interesting is this chart here. Because a lot of people say that we are seeing lengthening cycles in Bitcoin. Is that true? We can see 2013 cycle. It was a quick one. It was literally a 2-pump kind of bull run. That one was. Look at how quick that was. Bitcoin pumped and rallied and peaked really quickly. You can see each cycle since then, 2017 and 2021, they're elongating just a little bit. And again, Adam Back made that interesting point about Bitcoin's cycle peak for the years of 2020 to 2024 actually happened in early 2024, which is completely different to the pattern that most people are hoping and waiting to see play out. This is obviously this pattern right here. Now, some data that I think might just influence when we see a peak and how deep that peak will be is obviously having a look at the utter I'm going to call it a catastrophic situation brewing in the options market right now. We can see that Bitcoin just pumped to a new all-time high of $123,000 per coin, but there is still $2 billion worth of shorts who might get liquidated if Bitcoin just goes a little bit further and hit $126,000 per coin. This could be setting up the perfect recipe for a supply shock, and it's not just me talking about a supply shock. Let's listen to the head of one of the largest options exchanges in the world, and let's listen to what he's looking at.
Strategy a few times, and other companies that are acquiring Bitcoin, countries that are acquiring Bitcoin, you've got roughly a little bit over 15% that is being held. That's more than $200 billion that is being held. So it's no longer, say, a product that can be ignored. It's not an asset class that can no longer be ignored.
So he said the quiet parts out loud. We have $200 billion being held by companies, private companies, nation states. These big actors, they're holding onto Bitcoin and they are not selling the Bitcoin. This is the biggest differentiation and thing that I think is underappreciated in the Bitcoin space. Who cares if governments are buying Bitcoin, but if they're never selling, what does this do to the supply and demand dynamic in the Bitcoin space? We can see there are now hundreds of public companies with Bitcoin on the balance sheet, and they are buying more and more and more every single day. And I saw this new data as well. We can see Bitcoin open interest in the options market just surged to $80 billion. Something big is brewing. Is it paper Bitcoin? Or is it simply a short squeeze? I don't know, but let's not forget, right now we do know that the whales are buying Bitcoin at a really, really aggressive rate. We can see coins are flying off the exchanges at rates we haven't seen in a very long time. We can see here, public companies alone bought $2.5 billion worth of Bitcoin last week. It doesn't matter how you crunch the numbers or crunch the maths. We are witnessing a historic supply suffocation in the Bitcoin space right now. Again, everybody's looking at the public companies, but they're ignoring what the ETFs have just been quietly doing over the past 18 months. Again, the ETFs launched in January 2024. They broke every single record imaginable, but everybody was like, oh, it's just a flash in the pan. It's just Larry Fink trying to collect some dollars off the new hype. But that's not true, because we can see consistent demand has continued to come in from the Bitcoin ETFs. This here is having a look at the institutional demand for Bitcoin. It is absolutely outweighing the amount of Bitcoin that is mined by a country mile, no pun intended. Have a look at this big green bar in 2024. Institutions bought 913,000 Bitcoin, but only 217,000 coins were mined. Institutions bought 4x the Bitcoin supply. I'm not going to dive super deep down that rabbit hole because I do have a deep dive planned on that exact topic for you guys in the not too distant future. But what is absolutely fascinating is look at this. The shrimp wallets have bought 17,000 Bitcoin over the past month. So this is just the little guys. This is you and me buying our 0.1 Bitcoins. All right, this is just the shrimp. And even they have bought more than the Bitcoin that was mined in the past month. 13,850 Bitcoin were mined in the past month. And the little guys, the shrimp, we bought more than was mined. Again, let's not forget what the whales are doing. The whales are absolutely dwarfing the supply of Bitcoin. Kajun in the chat says, shrimp, unite. Absolutely, shrimp, unite. I do want to actually have a little bit of a talk about where the Bitcoin top might be. Again, I've kind of just thrown some numbers out there. We had a little bit of a look at this chart. I do want to dive in to this chart in a little bit more detail because there's a little bit more, let's say, bullishness hiding underneath the surface here. I think there's a few things people are not considering and maybe some differences with this cycle that for me makes me, let's just say it, even more bullish than ever before. Again, I think it's, obviously it's interesting to see the big boys like Larry Fink and all of these countries and nation states and public corporations come in and buy Bitcoin. Don't get me wrong, I can't fight it, I can't change it. There's not a thing I can do in the world that would change Larry Fink's mind on Bitcoin. He wants to buy the thing. But again, I will remind you guys, if you do not hold your own Bitcoin, you do not own the coins. Again, so many people I think are trusting ETFs, they're trusting MicroStrategy, they're trusting public corporations. Public corporations is the new hot thing this bull run. Don't get me wrong, everybody's talking about it. Every week, there's nearly a new treasury company putting Bitcoin on the balance sheet. Actually, guys, recently there was something like 20 public putting Bitcoin on the balance sheet every single month. And at this rate, it is not slowing down. The number of public companies putting Bitcoin on the balance sheet, it's going absolutely parabolic right now. I want to actually show you guys a chart of just how much Bitcoin is being bought by these public corporations, because I think they and their actions, can help to explain why I think October and November might be even more bullish than most people think. Okay. Again, another chart I always like to remind you guys is this one here. Bitcoin's best 10 days typically melts faces. Have a look at this. We can see the purple columns is showing us what Bitcoin does in its best 10 days each bull run. Now, the years that I want you guys to take attention to is the 2013 bull run and the 2017 bull run. Have a look at what Bitcoin did in these years. We can see the best 10 days gave you 700% returns. This wrecked the returns that we saw in the remaining 355 days of 2013, which was 598%. Again, we saw something similar in 2017, 353% returns in Bitcoin's best 10 days compared to 225% in its remaining 355 days. So again, I just want you to think about what it would be like to be a Bitcoin holder in 2013 where we see 700% returns in its best 10 days. If you average this out, that would represent Bitcoin moving up by 70% on 10 separate days. That would represent Bitcoin nearly doubling on 10 separate days. If that happened today, we'd be looking at Bitcoin going from $123,000 today, and we'd be waking up tomorrow morning at $190,000 per coin. That is actually kind of insane when you think about it. And again, I think this kind of volatility is something that most people are simply not prepared for. Again, what happens when the price of Bitcoin always pumps? What happens to the exchanges like Coinbase? They have errors. They have
Be right
malfunctions. All of a sudden, the buy and the sell button is turned off. This is why I always encourage you. If you do not own your own Bitcoin, you don't own anything, okay? I always encourage you guys to put your Bitcoin into your own custody. I think the best way to do that is in a Bitcoin hardware wallet. Again, there is literally hundreds of different hardware wallets. I've played around with all of them. I got cold cards, I got Bitboxes, I got old school ledgers. This is the one I bought in 2017, believe it or not. She's a little bit old and scratched up. She's had a hard life dealing with me for 9 years. So again, if you do want to get your hands on some hardware wallets, Ledger is actually running a massive promotion this week where they're pretty much giving away hardware wallets. If you buy a Ledger Stacks or a Ledger Flex, they're literally going to be giving you guys something like $80 of Bitcoin when you buy the hardware wallet. No, that is not a stutter. That is reality. Have a look at this website right here. We can see if you buy a Ledger Flex, they're going to give you $70 of Bitcoin for buying the hardware wallet. The Ledger Stacks, they're going to give you $80 of Bitcoin to get a Ledger Stacks. It's insane. They're going to be giving you $50 if you buy a Ledger Nano X, $30 of free Bitcoin if you pay $79 for a Ledger Nano S. Again, I don't know what they're doing over there at Ledger, but they're pretty much giving away hardware wallets. So if you don't have one, use the link down below and get your hands on the Ledger Stacks, Ledger Flex. I really like these ones because they have touchscreens. So again, I think some of the hardware wallets are a little bit difficult to use. Not going to name names, but as you can see, this puppy right here, it's a touchscreen. It's super easy to use. This is beginner friendly, and I can't believe they're going to give you $80 of free Bitcoin if you get your hands on one of the ledgers. Again, if you're someone who's looking for maybe something different, something like a Trezor, for example, this is a Bitcoin only hardware wallet. They are also going to be giving you a 5% discount on anything you want to buy from Trezor with a promo code Luke5. So again, I've said this for years. If you don't own your own Bitcoin, you do not own anything. Get yourself some Bitcoin hardware wallets before the craziness begins. Because again, like we just looked at with this chart, the craziness is really about to accelerate in the Bitcoin space. I've had my own dose of craziness. I nearly lost a fight with an ice cube today. I don't know how many of you guys can deal with my massive bloodshot eyes today, but I think speaking about the craziness in the Bitcoin space, I think things are about to accelerate. So let's answer Dan's question in the chat. When cycle top? So if history repeats, we should expect a Bitcoin top somewhere around November or December. And I ran you through the maths just a second ago. If Bitcoin simply does repeat what it did in its seasonality charts, then we would be looking at something like a $250,000 Bitcoin in around December 2025. So that's about 5 months away. That's why on the thumbnail of today's video, I said you've got 5 months left. I don't just make up these numbers and pull them out of the wazoo. It's a real number. I think you might only have 5 months left. And I think the generational bull run might actually begin much sooner than you might think. Okay, I think we could be a month away. Because again, in this seasonality chart, September is typically one of Bitcoin's worst months. You can see it is Bitcoin's worst month, minus 4%. So who knows what's going to happen? Maybe we're going to get a little bit of a breakout here in August over the next few weeks. Maybe Bitcoin pulls back for its final shakeout in September, and then maybe it absolutely moons to 160, 170, or 180 in October. Again, I don't know. Again, I think every Bitcoin model in the space is wrong. I think your power laws, your power opinions, I think diminishing returns, I honestly think you can throw them all in the bin. I don't think they're going to hold up. God, I really hope that they fail sooner than later, because I think a lot of people, whether it happens this cycle or next cycle, they're going to lose a ton of money by trading based on these stupid charts where people just start drawing lines on it and say, oh, it's a power law. Trust the fact that, the Bitcoin data from 2011 is the same as 2021. I don't think it's the same. I think the supply and demand has completely changed everything. I think that the Bitcoin bull run that we've just entered might be completely different to anything we've ever seen before. And again, I just think right now, most people are simply too bearish on Bitcoin. So many people are going to think about selling their Bitcoin at $200,000 a coin. I think that's a terrible idea. Please never sell your Bitcoin. If you are looking to get some liquidity for your Bitcoin, once it's increased in price, I think you should check out a company like Firefish. They're a Bitcoin lending company that doesn't take custody of your Bitcoin. They're not like BlockFi. They're not like Celsius. They're not like FTX, who said, trust us, bro, we'll pay the yield. Firefish is a completely open source code Bitcoin lending company. They use peer-to-peer lends and they use multi-sig vaults, so they never actually take custody of your Bitcoin. As you can see, I've already got 2 loans with them. I've tested them for my Bitcoin bull run exit strategy that you guys are probably going to see in a deep dive video coming in the not too distant future. And they're even going to give you 30% off your first loan if you use promo code Luke. Okay, that's a significant discount. We're talking about 30% off. So again, sign up with them using that promo code, also linked down below. And just get prepared for this Bitcoin bull run, because as Dan laid out here, Bitcoin's top 270K in October. That is insane if we actually see that. Michael in the chat saying 140K in August. 50% drop in bear market Q2 2026, says Dan. Let's see what the rest of you guys are saying here in the chat. What's my boy Green Candle saying? If you have enjoyed this video, by the way, we would love a smashing of the like button. And again, make sure you subscribe to the channel. I'm on a little bit of a challenge to put out a piece of long form content every single day for the rest of the bull run. Who knows whether I'll be able to succeed or not. But if you're not subscribed, you won't be notified when they go live. So again, subscribe down below. Still can't believe there's 26,420 odd crazy people who are subscribed. So thank you. I really appreciate everyone tuning along. I appreciate people like All Night Hider more than you know, my friend. He's put links to Ledger, Trezor, Firefish, and all of the show partners in the live chat. So again, no excuses to not put your Bitcoin in your own custody. I can't believe it, but they're just giving away $80 of free Bitcoin over at Ledger when you buy a hardware wallet. Again, this deal is only going to last a couple of days, I've been told. There's no way it's going to last longer than a week. So I highly recommend you go and buy some hardware wallets and get yourself $80 of free Bitcoin as soon as possible. Oh, my man, Rock VTM's in the chat. So a lot of people are talking about $165,000 Bitcoin. I think that's probably going to be the bear market bottom for the next Bitcoin cycle. What I'm really interested in is having a look at what is happening with the amount of shorts we're seeing in the space. I haven't seen a build-up of shorts that big in some time. So again, I encourage you, please, guys, just know what you own. If you're new to Bitcoin, spend 10 hours studying Bitcoin. Spend 10 hours understanding why nobody, especially me or anybody, whether they have a PhD or not, knows what's going to happen with the price of Bitcoin. We can show you charts, we can show you stupid lines on charts and tell you and show you the history. But again, I think Bitcoin today, it's a $2.5 trillion asset. It's been around for 16 years. Bitcoin has a total addressable market cap of 900 trillion. You can assign whatever probabilities you want on Bitcoin reaching X market cap. But what I will say is that I think Bitcoin is going to be worth hundreds of trillions of dollars per coin. And I think trying to project diminishing returns when Bitcoin's at 2.5 trillion, that is 0.2% of global wealth. I think that's really dangerous, and it just does not take into account the bigger picture. I think it's insane to try to say that Bitcoin's going to be, oh, it's such a predictable asset now. It's at $2.5 trillion. I can predict this thing for the next 10 years. It's going to get more and more boring. The volatility is going to get lower and lower. I just encourage you guys to be really careful with what you believe. I just don't believe we're going to see that. Oh shit, I can't say that on a live stream, but RockVTM, another $50 super chat. Thank you, my friend. I think your message, don't wait to buy Bitcoin. Buy Bitcoin and wait, is the perfect message to end this live stream on. Thank you so much, RockVTM, for the super chat. Thank you so much for the 912 of you guys tuning in live at 8:30 on a Wednesday night to listen to a crazy kid with a wild haircut and a bloodshot eye talk about Bitcoin. I hope you guys enjoyed it. And with all that said, I'll see you in another video tomorrow.
That guy was good. Let's watch him again. He's got a new...
A new 46-page report just made a Bitcoin price prediction so bullish that you're going to have to see it to believe it, because they claim that we only have 10 years left before we will see Bitcoin in the tens of millions of dollars per coin. And before we even dive into this report, it is so bullish that I have to add some caveats here, because when you hear the numbers and the predictions that this report made, you're probably going to instantly turn off the video. But I want you guys to remember some big reputable names like Fidelity, who is a $4.9 trillion asset manager, has also made some outlandishly bullish Bitcoin price predictions in the past. They're a little bit famous for this $1 billion Bitcoin price prediction by 2038. And again, they're a $5 trillion firm. They made the case that holding just 0.001 Bitcoin could make you rich. And again, let's not forget, we've got BlackRock as well. They're an $11 trillion asset manager that quietly published a paper a couple of years ago where they said the optimal allocation to Bitcoin is 85%. So again, I just want to set the table. This report we're going to look at, it's not alone. It's not the only insanely bullish Bitcoin price prediction we've seen. We have reputable names who have come out with very bullish reports on Bitcoin. So with all of that said, let's get into this, because this is so bullish. I nearly fell off my chair when I was reading this report. Now, what is this report titled? It is titled The Supply and Demand Dynamics of Bitcoin. Okay, so this is literally 49 pages. You can see what it's titled, Bitcoin Supply and Demand Dynamics. I've literally read this entire thing, and I'm going to summarize this as best I can. So the entire report is built off of this little formula right here. You can see they are the first entity or the first institution that I have ever found that accurately accounts for Bitcoin's supply and demand. This is what this box is looking at, the demand shift in Bitcoin, and it's comparing this to the supply shift in Bitcoin. And these guys, again, they've run so many simulations, but they're taking into account the liquid supply of Bitcoin and how much Bitcoin is actually available for sale. Again, this is really important because there's a lot of models out there today, but my biggest gripe with all of these models is the fact that they do not account for the changing supply and demand dynamic that we're seeing in Bitcoin today. Because we are seeing billionaires, nation states, public corporations, private corporations buy Bitcoin at some of the most aggressive rates that I have ever seen. Just to kind of put this into a little bit more perspective, it's very important that you guys know that right now, there is somewhere around 14 million Bitcoin that is classified as illiquid. So this means that it hasn't traded hands in the past 6 months, and you can see this amount is only growing year after year. It's setting higher lows and higher highs, higher lows and higher highs. And you guys are always familiar with this chart here that maps how much Bitcoin is actually liquid and how much Bitcoin is available for sale on the exchanges. Now, this report, I love it because it's going to actually dive into how we should be factoring in Bitcoin's price with this change in supply and demand dynamic. So you can see this table here that we have on screen. We can see that if we assume that in the year 2036, there is 10 million Bitcoin that is actually liquid and available for sale, and it's constantly changing hands, you can see that they are 95% sure, with a probability band here on the left, that Bitcoin will be worth $14,760,000 per coin. This would represent a $307.6 trillion market cap, and this would represent Bitcoin's CAGR being somewhere around 57.22%. So that's kind of insane. And they genuinely believe that Bitcoin can be worth $1 million by December 5th, 2026, if it is on this trajectory. Now, again, that's bullish, don't get me wrong. That's the headline number that most people have been reporting today on Twitter. But things get even more bullish if you assume that there's actually less Bitcoin than that available for sale. Because again, I'm going to be personally surprised if in the year 2036, we've got 10 million Bitcoin that's actually circulating and is available, classified as a liquid supply of Bitcoin. So I want to move through and have a look at the slightly more bullish numbers that I have prepared for you, because things get even more crazy when we start making some different assumptions. So right now there's somewhere around 5 million Bitcoin that is classified as liquid supply. I just showed you the chart where there is 14 million Bitcoin that's illiquid. So we've mined 19.8 today. So that indicates that there's about 5.8 million Bitcoin that is liquid today. What happens to the price of Bitcoin if we assume that, say, 2 million Bitcoin is liquid in the year 2036? We can see this model predicts $3,362,000 Bitcoin. And what's really interesting is this is kind of a hyperbolic function. It's exponentially bullish. The less amount of Bitcoin that's actually liquid on the exchanges, as you can see on the right-hand side of this column, the higher the Bitcoin price is. So what happens if you assume that 500,000 Bitcoin is liquid and on the exchanges and freely trades every day. These guys are predicting, again, don't shoot the messenger. This is just what they've predicted with 47 pages of research and complicated math that I can't wrap my head around. But they've run the numbers and they've said if there's 500,000 Bitcoin floating on the exchanges by 2036, price of Bitcoin is going to be $5,859,000 a coin. And I know what some people are probably thinking already. Luke, you're crazy. Luke, you've lost your mind. What do you mean there could only be 500,000 Bitcoin that are actively floating and available for sale on the exchanges? For me, I think this is actually conservative because if you just look at the trend of how much Bitcoin has left the exchanges recently, we've seen 30% of all of the available Bitcoin on the exchanges disappear over the past 5 years. We can see this number has shrank from 3.3 million to 2.4 million. So if this trend continues, you could actually have no Bitcoin on the exchanges by 2028 or 2029. That's the bullish take here. That's the insanely bullish take. And again, even if you just take the more conservative look here, looking at the illiquid amount of Bitcoin, you can simply extrapolate out this trend. You can see that somewhere around 500,000 Bitcoin has become illiquid in the past year. Extrapolate that trend out. And you're going to get bullish. You're going to see in maybe 5, 6, 7 years' time, you're going to have 17, 18, maybe even 19 million Bitcoin that is illiquid. And again, look at this trend. This chart is from 2019. So this is showing us 6 years of data. If this trend simply continues, we will enter a scenario where there is only maybe 1 million Bitcoin that circulates on the exchanges. And where is the price of Bitcoin if that hypothetical scenario plays out? I'm glad you asked. Let's dive into it. Let's assume that there's only 40,000 Bitcoin that circulate on exchanges and is available for sale and is classified as liquid. All of a sudden, the price of Bitcoin by 2036 is $20,693,947. And again, if you get even more bullish and if you assume there's 10,000 Bitcoin that circulate on the exchanges and is available for sale, the price of Bitcoin is $46 million in 2036. And again, I will remind you guys, none of these assumptions in this report is factoring in for hyperinflation or an expansion in the money supply. This is purely looking at the supply and the demand dynamics in Bitcoin. This is why I don't think anybody is bullish enough, because nobody is accounting for how much Bitcoin is actually available for sale. I do have an interesting rabbit hole to get into regarding America and whether or not they just quietly dumped thousands of Bitcoin. But again, before we get into that, I want to just do this report justice. You guys can see how much work went into this report. You guys can run your own numbers and your own assumptions at home, but I truly believe this is the first report that's actually tried to run the numbers. And as you can see, look at all of the different assumptions. Where's the price of Bitcoin if 6 million or 7 million or 8 or 9 or 10 or 3 or 5 or 7 million Bitcoin is on the exchanges? I think they've done an incredible amount of work. So kudos to the Satoshi Action Fund and Dennis Porter for putting this report together. It's clearly taken them months. And I think it's really interesting. I think it's really bullish. And I really want to show it to you guys today because I think it actually does give us an idea of what is the purchasing power of Bitcoin in a world where nobody wants to sell their Bitcoin. Again, most people here are not selling their Bitcoin, but nobody's really thought about or modeled out what happens to the price of Bitcoin. And I think I wanted to also give you guys a little bit of a visualization of what might it look like if Bitcoin were to reach some of these crazy numbers. Let's just say 3 million or 5 million or the 12 million Bitcoin price prediction that we did see in this report. I want to show you what kind of path that we might see to get there, because a lot of people, everybody's interested in the path that Bitcoin takes. Again, big numbers, sometimes it can be difficult to wrap your head around, but I want to kind of have a little bit of a look at what might happen. How would Bitcoin reach some of these crazy numbers, like $12 million Bitcoin, $46 million Bitcoin even, which is kind of crazy to say out loud, but again, 46 million by the year of 2036 is what this new report is predicting. If we see 10,000 Bitcoin being bought and sold, and is actually liquid and available for sale. Again, this is what some people forget. I'm not saying there will never be Bitcoin available for sale. There will always be some Bitcoin available for sale, but what I think most people miss is the fact that I think there's going to be much less Bitcoin than most people think in the future. Because again, Michael Saylor said this, he's very clear about this. The digital gold rush has begun, and by the year 2034, 99% of all of the Bitcoin would have been mined, meaning that the race is on for the final 1%. This is what most people just don't understand. Price is set at the margin, and I think we're all going to be surprised at exactly what Bitcoin does when we figure out that, hang on a minute, price is set at the margin. This here is a pretty interesting little visualization of maybe how an exponential money gets adopted in the digital age. Again, right now, we're seeing these diminishing returns cycles kind of play out, so to say, but you can see Bitcoin, as it kind of hits that inflection point, adoption begins to really go exponential, and it starts going up and to the right forever, Laura, which is what I really love about this report. Again, I think what I want you guys to pay attention to is when we hit that exponential curve on that chart, you can kind of see what happens to the price of Bitcoin when we do see Bitcoin hit that inflection point. Now, again, when we're looking at technologies, that inflection point, it's described in lots of different ways. Some people say that Bitcoin needs to cross a chasm. Now, again, most technologies, they do follow a very similar adoption curve. So if it is not able to demonstrate its usefulness to the masses, it will never, ever, ever cross the chasm. It will never go mainstream. It will never see exponential growth. This is what I believe the power law, diminishing returns, the rainbow chart, this is what I think all of these guys are getting wrong. They're not accounting for the fact that Bitcoin is a money. Money is a technology. If Bitcoin is going to be adopted by the majority of society, it has to follow an exponential curve. And the years that we're living in today, again, this is just fact, these years have been the slowest years of adoption. So to predict that we're going to see diminishing returns in Bitcoin when it's only $2 trillion and it's worth 0.25% of the global wealth in the world, I don't think that's intelligent. Doesn't matter how many times you say you're a PhD economist and an astrophysicist, it doesn't make a model intelligent. The reality is Bitcoin has a TAM of hundreds of trillions of dollars, and it's at 2.5 trillion today. Do we really think it's going to slow down in its adoption from now? I strongly don't think so. I think we're just now heating up. Florida Swamp Monkey in the chat, he's been he's been reading the same things I've been reading because he says that we should be expecting a $2.1 quadrillion market cap by 2060. And I tend to agree with that. I also agree with All Night High's comment. Bitcoin will milkshake up other asset classes. I couldn't agree more. Bitcoin is going to be, I think, the dominant property in the world. So I think Michael Saylor has a really good analogy. He says that over the next 10 or 20 years, all property in the world, this is going to collapse into Bitcoin. And all currencies in the world, this is going to collapse into the US dollar. So this is the US dollar milkshake thesis. And again, I've got the Bitcoin milkshake thesis. I wrote an article on this 4 years ago. Again, some people have hijacked that term more recently. But for 4 years, I've been saying Tether will not be shut down. Tether will not be attacked. At the time, Tether started buying US treasuries. And I said, watch this trend. At the time, Tether had a few $1 billion of US treasuries and they started selling risky Chinese commercial paper. I said, if they continue to buy US treasuries, the US government will be incentivized to protect them. Fast forward 5 years, Tether is now protected by the US government, and they're something like the 12th largest holder of US treasuries in the entire world. They hold more treasuries, more US government debt than my home country, Australia, does. Just to kind of put things into perspective here. This is kind of crazy. And again, anyway, I could talk about the Bitcoin milkshake thesis here for an hour, but I won't, because I want to continue breaking down Bitcoin's supply and demand dynamics and why I think you can be incredibly rich holding such a small amount of Bitcoin. I also do want to dive into the new news surrounding America and the UK, because we've got some pretty concerning things to cover here in the moment. It looks as if maybe some of the largest governments around the world could be about to dump their Bitcoin, which is obviously cause for concern. But before I talk about the UK, I want to talk about America, because there have been rumors for some time that America might be selling its Bitcoin. And now we have the UK coming out and saying some really interesting things about Bitcoin. Again, I think watching what the UK does, it's very important. We need to, again, let's not forget, they are one of the largest nation states around the world right now today. They're not something to be laughed at or something to be sneezed at, despite some of the crazy laws that they have been passing recently. And we will talk about some more developments with the Online Safety Act. And actually, while I remember, it isn't just the Online Safety Act that has me concerned. I do have some new articles that I want to break down that gives me a lot of concern. And again, this is, again, why I'm so optimistic on reports like the one we broke down today. You know, Bitcoin is positive. It is a positive force. It is, potentially a solution to a lot of the problems that we do see today. And again, I think the 1984 Orwellian shithole that CJ is referring to is one of the problems. Obviously, I'm from Australia. I'm very, very aware with problems that we're seeing in the world. Now, speaking of some of the problems we're seeing in the world, I want to talk a little bit more about what I saw come out earlier today. So obviously, there are now some new reports and new rumors suggesting that America might have fumbled the ball and sold thousands of Bitcoin because of the interview I'm about to play for you from Treasury Secretary Scott Bessent. Now, again, we're also going to be looking at why the UK might be selling its Bitcoin right now. But this interview that Scott Bessent gave on Fox News today was so insane that he had to go to Twitter only hours later and kind of retract what he said on the national news. Let's play the video for you guys, and then we're going to get into what exactly is happening.
We're going to revalue it, but we're going to keep it there. Again, we've got the large gold holding. I doubt we're going to revalue it, but we're going to keep it there, again, as a store of value for the American people. We've also started, to get into the 21st century, a Bitcoin strategic reserve. We're not going to be buying that, but we are going to use confiscated assets and continue to build that up. We're going to stop selling that. I believe that Bitcoin reserve at today's prices is somewhere between 15 and 20 billion.
So that right there is the line.
Secretary, all of these ideas to monetize the asset side of the balance sheet of America.
I might pause the clip there because the catchphrase was right there. America's Bitcoin holdings at today's value, it's only 15 to 20 billion. Hang on a minute. Where's the rest? America is supposed to be sitting on 190,000 Bitcoin. Where is the rest of its coins? Again, Bitcoin today, we're valued at $123,000 last night. We've dipped a little bit lower right now. I believe at the time of recording, we're at $118,000. But quick math tells me that America should be sitting on a little bit more than $15 billion worth of Bitcoin. And this has naturally caused a little bit of a stir on Twitter today because people are now starting to ask the question, hang on a minute, America won't buy any more Bitcoin and they're only sitting on 15 billion? Have they been selling? Again, a lot of people have been wondering why the price of Bitcoin has kind of been, let's call it what it is, stagnant. Again, we're at $123,000 right now with the amount of Bitcoin that's being ripped off the exchanges. A lot of people are now starting to wonder, hang on a minute, why is the price not much higher than it is? Well, I think this Bessent interview was an interesting one because he straight out came out and said, we're not going to be buying any more Bitcoin. That's the first thing that's a lot of people kind of raised their eyebrows at. And here's the quote that Matthew Siegel posted. Again, ETF expert. This dude's got, he's got 46,000 followers on Twitter. I thought he had more, but he said, Bessent says they're going to stop selling Bitcoin holdings. Bitcoin reserves are worth around 15 billion to 20 billion, and they're going to retain gold as a store of value. They're not going to sell gold. So maybe this kind of answers a lot of the rumors and the speculations that I think we had earlier in the week. Because let's not forget what happened earlier in the week. America's very own Bitcoin advisor to the White House, he stepped down. This is Bo Hines. He announced his departure from the White House earlier in the week. Again, I haven't broken it down in a video yet because I just didn't think it was a massive announcement. I didn't think it was newsworthy unless I actually thought there was a story there. Now, I think there might be a story here. Now we might finally maybe be getting some answers as to why Bo Hines actually left. I didn't want to just speculate when I saw this news come out earlier in the week. But there was a lot of speculation earlier in the week. Hang on a minute. Why is Bo Hines leaving Trump? And when did he leave? He left straight after Crypto Week happened in Washington, America in the middle of July. Now maybe we're getting some confirmation to the rumors as to why he stepped down. Maybe He heard that Scott Bessent was a little bit of a bear. He didn't want to buy Bitcoin. But then what's really interesting is I just played you the clip. Look at what happened after Scott Bessent went on Fox News. Literally a couple of hours later, he wrote this on Twitter. Bitcoin that has been finally forfeited to the federal government will be the foundation of the strategic Bitcoin reserve that Trump established in his March executive order. In addition, Treasury is committed to exploring budget-neutral pathways to acquire more Bitcoin, to expand the reserve, and execute on the president's promise to make the United States the Bitcoin superpower of the world. This is literally a direct contradiction to what he said 2 hours earlier on Fox News. And we can see everybody's blowing him up in the comments of his own tweet, saying, hang on a minute, what's changed, Mr. Bessent? Why did you dramatically change your tune in the past 2 hours? Budget neutral, 6102. Bo Hines out, Yarl got played. There's some interesting theories. There's some really interesting theories. Why did he make a change of tune so quickly? Why, oh why? Why, oh why do we have the UK openly talking about dumping their Bitcoin? I think this is really fascinating. We now have a lot of rumors and a lot of speculations about some of the biggest holders of Bitcoin in the world. And again, I will remind you guys that in that 2021 Bitcoin bull run, I strongly believe there was a concerted effort to create this propaganda, narrative warfare to confuse people. And this naturally led to the price of Bitcoin crashing by about 50% in the middle of a 2021 bull run. Again, what happened in the space of weeks? We saw China ban Bitcoin mining. We saw Elon Musk do a Bitcoin backflip. Again, a lot of connections there with China with Elon. We saw that backflip. Elon said, oh, I'm not going to sell my Bitcoin because I don't want to miss out on the profit, but I'm going to stop accepting it for payment because it's too dirty. And then we saw the World Economic Forum come out and start bashing proof of work mining. And we saw BlackRock start talking about an ESG asset. An asset has to be environmentally friendly, socially friendly, and it has to have a lot of governance. Again, a lot of buzzwords. But again, I think there was a concerted effort to attack the price then.
Okay, we are back. We are back. Luke Mychik. Doing good. I like listening to this guy, so let's keep him going. We're going to get going back in this Undermine too.
And it worked briefly. Bitcoin crashed 50% from 65,000 to about 28, and we rallied back up to 69. Again, we've never seen a 50% pullback like that in the middle of a bull market since 2013. Very strange timing. But again, I'm kind of putting together all of these puzzle pieces now because I'm starting to see similar signs. Are we seeing an attack on Bitcoin? Every time it gets above an all-time high, we see another new rumor or a new leak come out about Bitcoin. Again, a few weeks ago, what happened when Bitcoin got above $120,000? There was all of a sudden a bounty that was put out saying we need to find how much Bitcoin America owns. And again, let's not forget the rumors. A lot of people were like, oh, America might have sold 50,000 coins. We had a little bit of a correction, a sell-off. A few weeks later, we're back at $123,000 yesterday. And Bessent comes out with this interview. Strange timing, don't you think? That some of the biggest holders of Bitcoin, the UK and America, are right now creating a lot of FUD and confusion in the market. Because let's not forget, this is a new plan coming out of the UK. They're talking about selling $7 billion worth of Bitcoin. And I want to break down what is happening with the UK, what is happening with America, and why we're seeing a lot of these, let's call it what it is, confusing narratives now. Now, again, it's not popular to take this opinion. I've really got the tinfoil hat on tight right now, because again, everybody's just saying, number go up, it's bullish. The government's going to pump our bags. I'm just saying, let's put the handbrake on. And I don't think there's a coincidence here with the timing of all of these narratives coming out of America. And I don't think there's a coincidence why we've got the UK doing what they're doing now. Okay, I think this is strange timing. We're seeing ETFs rolled out in the UK the week after the UK started talking about dumping their 50,000 Bitcoin as well. Again, I don't know if you guys are seeing the dots that I'm slowly but surely starting to connect here, but I do think there's some really strange events going on right now. Again, before we dive into what is actually happening in America and the UK, and before we start breaking down that report in a little bit more detail, I will remind you, again, this is just another example why we shouldn't be trusting our governments. The government should not be trusted with your money or with anything, and especially your Bitcoin. So again, I'll remind you, if you're not taking self-custody of your Bitcoin, I think today is the perfect day to get started on self-custody in your Bitcoin, because I have a little bit of a special announcement. Ledger right now is literally giving you $80 of free Bitcoin if you buy some hardware wallets this week only. They're running a massive discount, a massive promotion. I learned something really interesting about a Ledger today, actually. A lot of Bitcoin hardware wallets have a screen on them. There's a few of them, but these screens are actually the only Bitcoin hardware wallets that are protected by the secure element in the ledgers. Again, there's a lot of other wallets, I won't name names, but I literally just learned today that the touchscreen hardware wallets from Ledger are not only the easiest to use, but they're actually the most secure Bitcoin hardware wallets out there. So again, I'd highly recommend you check them out. They are literally going to give you $80 of free Bitcoin if you buy a Ledger Stacks, and I believe you get a similar discount on a Ledger Flex. You get $70 of free Bitcoin. So again, if you have been putting off buying a hardware wallet, this offer is only going to run for a couple of days. So I highly encourage you guys to take advantage of this while it lasts. I don't know what they're doing over there at Ledger. They're literally just throwing Bitcoin at you. You can see you can even buy a Ledger Nano S for $79, and it's going to come with a $30 voucher of Bitcoin. It's kind of insane. I think this is going to be the best deal that you're probably ever going to see. So again, take advantage of that while it lasts. I do have a link down below that you guys can use to go and take advantage of this offer. Again, I love these hardware wallets. They're touchscreen, super easy to use. Again, I think a touchscreen hardware wallet solves so many problems in the space. Look at this. I can even navigate this with my big, hot, sweaty sausage fingers. Look at how easy that is. I think there's a ton of great hardware wallets in the space, but I learned today that the touchscreens in Ledgers are literally the only ones that are backed by their secure element chip. So check that out. All Night Hiders even popped a link for Ledger in the chat. I also have a link down below in the description for you guys. And again, I'll always remind you, never, ever, ever write down your Bitcoin 12 or 24 words on something like this. Again, what do we do with paper? Paper is for ripping. Paper is not for your Bitcoin 12 or 24 words. This is why I also encourage you guys to check out what Stampseed is building. They create what I believe should be the industry standards for Bitcoin backups, and that is titanium plates. Again, a lot of people use stainless steel. It's okay, but titanium is better. It is more heat resistant. And again, they're going to give you a 15% discount on anything you want to buy from Stampseed with the promo code LUKE15. So I highly recommend you check them out. I think they're an essential tool in your Bitcoin toolbox, so to say. Okay, very, very important. Now let's move on and let's talk a little bit more about what exactly is going on with this new report, because I think it's bullish, and I do want to crunch some more numbers. I do like to crunch numbers. So let's dive into it. We can see this is the insanely bullish report that was dropped by Satoshi Action Fund and Dennis Porter. Kudos to them. But I want to run through a few more assumptions for you guys, because I want to show you some more conservative cases. I've showed you the bullish assumptions. Let's dive into the more conservative ones as well. So we can see, I love this chart, because have a look at the black line. Look at the Bitcoin price. This black line is literally saying we could see a $20 million Bitcoin price by 2032. That's 6 years away, believe it or not. That's insanely bullish. And again, I love this report because it's based on simple supply and demand. This table here actually shows you, look at these columns. What happens if there's less than 10,000 Bitcoin on the exchanges and is liquid? So the liquid amount of Bitcoin. They actually can't give you a projection for what the price of Bitcoin will be. They just say it's hyperbolic. It's too bullish to track. I thought that was a pretty interesting assumption. And again, this is kind of like my base case. Like my base case is by 2036, there's going to be very little Bitcoin on the exchanges. Again, I'm not saying there's zero. But my base case is that we're going to see a world where there's not a lot of Bitcoin on exchanges. And my base case is kind of what is lined out in one of these tables, where they show you that there could be like, 500,000 Bitcoin that is liquid. That means it goes on and off the exchanges in a 6-month time frame. That's kind of my base case. So I want to find that little part of the report for you guys, because that's pretty much what I'm expecting. Well, let's say that's my conservative estimate in public. I'm probably a little bit more bullish than that privately, to be entirely frank with you guys. But you guys will just call me crazy. This little report here shows, hey, there's 3.6 million Bitcoin that's liquid, $10 million Bitcoin price tag. But wait, we can get even more bullish than that. I know there's another part of this report where it tries to model what happens when there's even less Bitcoin than that. Here it is. So if there's 40,000 coins on the exchanges, that is liquid. That means it goes on and off the exchange in a 6-month time frame. I believe that is what liquid supply means. Price of Bitcoin by 2036 is $20 million per coin. That's kind of my base case. Again, you've got to be conservative and assume there's 500,000 Bitcoin that's going on and off the exchanges. You're looking at a Bitcoin price tag of 5.8 million. I'm probably more on the bullish side there, guys, and that's purely because of this chart. I'm going to pop on screen. This is the Bitcoin on exchanges. In the not too distant future, the amount of Bitcoin that's actually liquid is not going to be much. And I think this is also highlighted by this growing trend of Bitcoin becoming more and more illiquid. The amount of liquid supply continues to set new all-time highs every couple of years here, which I think is incredibly bullish. Look at McLovin in the chat. After much technical analysis, I've concluded I need more Bitcoin. Yep. CJ, $5 million by the end of 2029 is a pretty fair estimation. It's bullish. That's bullish. It's bullish. I'm not saying it's 100% going to happen, but I think there's a higher probability than most people think, which is why I wanted to break down this report this morning for you guys. There's a ton of you guys who were very patient in the chat, so thank you for that. We got McLovin in the chat. Hello, Rock VTM, my friend. Bitcoin Bull. We got a few new guys in here. I'd like to get your thoughts on the report, whether you think it's too bullish. I personally think it's one of the first reports that's actually tried to model what goes on with the price of Bitcoin based on the supply and the change in supply. That's good. I do like that. And again, I think this is something that's just not given enough attention in the Bitcoin space. Too many people. How do
I open this door?
They're following models that I don't think are going to work. Like, for example, the power law. Too many people are trusting the power law. Again, we shouldn't be trusting anyone.
You have to have the blessing.
Especially me. I tell you this all the time. Please don't trust me. Don't trust anything I say. Go and verify and fact check everything I say for yourself. And anybody who says that you're not allowed to question them, that should give you a massive red flag. Speaking of, without naming names, oh, look what I found, the power law. The model that can't be questioned. All I'm going to say is, guys, I think Bitcoin, again, it's the most important technology we've ever created. I think it's going to be bigger than fire, the internet, and the printing press. And I think it's going to be really difficult to try to project or predict how Bitcoin's adopted. That's all I'm going to say. So I think everybody's going to be wrong. All models are going to be wrong. And I think everybody is just not bullish enough. They're too bearish. They don't have enough Bitcoin. Again, I'll remind you guys, if you are looking for somewhere to get your hands on some Bitcoin in a non-KYC friendly way, highly recommend you check out what Simple Mining is doing. They're a great Bitcoin-only mining company where you can get started mining with these guys today. And if you use the link down below in the description, because you're friends of mine, they're going to hook you up with a year's worth of free repairs on any Bitcoin mining rigs that you're using for hosted mining. So you can do hosted mining with them, where you can literally just get started mining online. You don't need to buy your own machine, or you can buy your own machine from Simple Mining. They have a ton of different offers and services for you. And I always like to remind you guys, mining your Bitcoin is the most OG cypherpunk way to get your hands on Bitcoin. So many people know we shouldn't be buying Bitcoin on an exchange. Again, I need to be careful with what I say from a tax perspective, but there's lots of ways to get your hands on Bitcoin without attaching your identity to it. So I think mining's a great solution. Check them out. There's a link for Simple Mining down below. I think they're another very, very important tool that should be in your Bitcoin toolkit. Now, Foxy's got a great comment here. Before I circle back to the report, I want to quickly answer this question. Any advice on running a node? So I think we should. Short answer, everybody should run a node. And it's getting easier and easier every year to run a node because technology is getting better and better. When I first ran my node, this was in 2020, and no pun intended, the only plug and play option was with my node. That was the company. So again, I used that. I set it up in a few hours on a weekend. And now I believe it would be even easier to set up a node. So I think everybody should do it. Everybody should look into the most recent debate happening in the Bitcoin space between Bitcoin Core and Bitcoin Knots. I'm personally running Bitcoin Knots because I just don't think that jamming JPEGs on the Bitcoin blockchain should be accepted. I don't want to get into the whole debate of whether it's stoppable, whether it's a good thing, whether it's a bad thing, I'm running Bitcoin Mods. I encourage everyone to look into running a node. Helps you be a little bit more sovereign. Because again, whenever you're sending money and you're making transactions from a Bitcoin wallet, unless you're running your own node, you're using someone else's node to broadcast your transaction. And that means they have your XPub, and that means they know how much Bitcoin is in your wallet. So again, you're going to be completely sovereign and completely private. If you run your own nodes, you can broadcast your own transactions and keep your XPub private. I hope that wasn't too technical, but that's the simplest way I can explain it. CJ in the chat, he'd used MineNode. Congrats. I also have a Raspberry Pi 4. It's funny. I don't even think people are recommending using Raspberry Pis anymore because that hardware is so outdated. I smiled because it gave me a little bit of nostalgia buying my Raspberry Pi online. A lot of you guys are incredibly bullish in the chat. 1 million by end of year 2025 and 10 million by end of year 2030. That's insane. That's bullish right there. I thought I was bullish. What would that look like on a price chart of Bitcoin? 10 million by 2030. Let's have a look. We're going to have to zoom all the way out to see 10 million. Again, but here's the thing. This is what most people... So I have the bull markets here circled in these red boxes. I'm going to show you. This is what 1 million looks like on a chart. So again, maybe if we see that by 2030, this is what some people are talking about. Zoom all the way out to 2030. Like, if you guys look at the trend here, like, again, please don't trust my tea leaves and my stupid lines on charts that I'm drawing. This is more of a demonstrative purpose. But the top of that red box is at $10 million Bitcoin. Doesn't look completely insane to get up around that price level by 2030. I think a lot of people hear that number and they're like, that's ridiculous. Yeah, it's high. It's not completely insane, though. Just a perspective for you guys. It's not completely insane. Now, yeah, the $7 billion Bitcoin, that looks insane on a price chart. That's where I actually think Bitcoin's going. If we're talking 20 years out, that's today's purchasing power. Now that's going to look insane on a chart. Let me try to get a $7 billion Bitcoin price prediction on a chart. My lord, okay, that is insane. Okay, let's take this up to 20 billion. That's 100 million. Let's go higher. That's a billion. Wow, look at this. This is my official Bitcoin price prediction. I'm going to save this stream for future purposes. I think by the year 2040, Bitcoin is well over $1 billion per coin. This here is 4 billion. So this is the exact maths for Bitcoin. If Bitcoin is the only money in 10 years' time, let's call it 2035, and if we still have $1.8 trillion of economic trade that must be facilitated by Bitcoin, if there's only 450 Bitcoin mined every day, and this is the only Bitcoin available to facilitate that global trade, the price of Bitcoin will be $4 billion per coin. That's just the maths. If all of the Bitcoin is being hodled. And again, I'll remind you, in 10 years' time, there's going to be less than 450 Bitcoin mined every day. It halves in 2028 to 225 per day. Then it halves again in 2032 to about 112 Bitcoin per day. And by 2036, there'll be like, what's that, 67 Bitcoin mined every day? Or hang on, 57 Bitcoin mined every day. So the maths is actually even more bullish. But this is my official 2035 Bitcoin price prediction. I filmed it. It's on YouTube. It's live. I think we're going to be over 4 billion by 2035. So there you go. You guys can hold my feet to the fire. And even at $5 billion a Bitcoin, I will still never be selling my Bitcoin because you should never sell your Bitcoin. What do the rich people do? They borrow against their assets. What should you do? Don't panic, because there are some options that let you borrow against your Bitcoin in a safe way. Again, very important caveat. There's a lot of unsafe ways to get yield on your Bitcoin. Never trust a company that doesn't give you some sort of custody of your Bitcoin. This is why I really like Firefish. Firefish is a completely peer-to-peer Bitcoin lending company. They don't take custody of your Bitcoin, and they will openly tell you. We're using multi-signature vaults. They've got an open source code base, and I think they're so good, I've used them myself. So again, if you are looking to borrow against your Bitcoin, highly recommend you use them. Check them out. Super easy to use. I've got a couple of loans myself on Firefish. They're really easy to use. You can get a 2-year loan. You can even repay the loan early if you want to. I experimented with this feature earlier in the week on my $1,000 loan. You can see I applied to repay one of my loans earlier, and I can just click a button, go and repay my loan, scan a QR code, bingo bango. I get access to my Bitcoin again. I really like Firefish. I just highly recommend you guys check them out and learn more about them. If you just want to learn more about them, the CEO was on the Stefan Levera podcast a little while ago. So go check out that interview Stefan did with Igor, and check out Firefish. They're even going to give you 30% off your first loan if you use the promo code Luke. So again, a lot of great Bitcoin options for you guys to level up today. Long live stream, 47 minutes. I apologize that you guys had to put up with me for 47 minutes with my big bloodshot eye. My eye's actually slowly getting better. I lost the fight of an ice cube earlier in the week, so apologies if you've had to deal with my bloodshot eyes. But with all that said, guys, hope that was a bullish stream. We didn't hit a new all-time high tonight. Maybe we'll do that tomorrow. But with all that said, I'll sign off, and I'll see you all in the next live stream.
Alright, that guy's dope. Yeah, it's lame. I couldn't get through there. I guess you have to have the blessing to get through there. That's so lame. I carried it so far. And some pilfer just popped out of nowhere while I was like clearing trash in the room. Alright, let's get the next one going. There we go.
By now, you've probably heard the news. Scott Bessent, the current U.S. Treasury Secretary and the man many believe would spearhead a national Bitcoin reserve, went on TV this morning and flat out said the government would not be buying Bitcoin. Now, that's a gut punch for the community, especially after months of the administration hyping up the idea of nation-state accumulation to Bitcoiners before and after the election. His comments even hinted that they may have sold some Bitcoin along the way. But in just the last few hours, a bombshell update has dropped, and it might turn the entire story on its head. So, what was said? What indicators do we have that the government may have sold some Bitcoin? And what development in the last couple hours changes the whole story? Well, smash that like button and strap in because we're going to break it down for you right now. I am Ben with BTC Sessions. This is your weekly session. All right, I want to welcome, of course, to the stage my co-host with the most, Mr. Nathan Fitzsimmons of Bitcoin Mentor. How you doing, man?
I'm doing pretty good. Did you see that the Socialist Republic of Canada that we're stuck in continued to embarrass itself this week?
I did. I saw it from afar because I was doing some traveling. I was at in Riga for the Baltic Honey Badger Conference, and yeah, just when you think it can't get worse.
Oh no, it can get
my
worse.
God.
It can get worse. Absolutely, and they keep illustrating that every step of the way.
Absolutely, absolutely. Well, we'll discuss that in a little bit, but let's get to the bottom of what the hell has been going on today, because it's a bit of a roller coaster. We had one bit of information this morning that seemed pretty compelling, and then we had a bit of a whipsaw here. So first, let's kind of chat about how things have transpired over time here. So, why in the first place is everybody hyped up? So, those of you that are new to the channel, that are just kind of tuning in for the first time, what is kind of the overarching theme here? And it's that, Trump ran on a platform of Bitcoin. This is going to be the Bitcoin capital of the world, and there's going to be a Bitcoin strategic reserve. And so, here's a clip of Trump, and he's talking about in recent years the U.S. government selling Bitcoin. That you never sell your Bitcoin. So let's just take a listen.
Unfortunately, in recent years, the U.S. government has foolishly sold tens of thousands of additional Bitcoin that were worth billions and billions of dollars had they not sold them, but they did sell them, mostly during the Biden administration. And not a good thing to have done. From this day on, America will follow the rule that every Bitcoin knows very well: never sell your Bitcoin. That's a little phrase that they have. I don't know if that's right or not. Who the hell knows?
So again, interesting that he says mostly under the Biden administration, mostly. so who knows there? But let's kind of continue on, like what they were saying, before and post election. Again, he signed an executive order to establish a strategic Bitcoin reserve. Executive order directed the secretaries of Treasury and Commerce to develop budget-neutral strategies for acquiring additional Bitcoin that have no incremental costs on taxpayers. Okay, fair enough. And this is like from the article here on Globe and Mail, and there's the quote again: budget-neutral strategies that have no incremental costs on taxpayers. What else was promised? Well, we had Trump's digital assets chief, Bo Hines, again confirming White House plans for Bitcoin strategic reserve. Asked about the scale of the reserve and how much Bitcoin the government currently holds, he did not provide any specifics, and we may find out why in a moment. I can't discuss that right now. There are several reasons we're not disclosing that right now. There might be a time when we do, but I will say we want as much as we can possibly get, and we're going to continue to work on that. So again, hinting like, hey, we're figuring this out. We're gonna be accumulating Bitcoin aggressively, it would seem. And it's not just the reserve stuff. There's been other moves that are seemingly quite positive. Again, Trump signing an executive order to allow Bitcoin into 401ks. We also had him nominating pro-Bitcoin advocate Stephen Moran to the Federal Reserve Board. He says Bitcoin should have a meaningful role in the U.S. monetary policy. Now, with that in mind, 5 days ago, interesting development. White House crypto advisor Bo Hines, the same guy who's like, we want as much as we can get, he left. He's gone. He steps down. There's no longer, he's pursuing things in the private sector. Well, that's very interesting. And then as of this morning, we have Scott Bessent on Fox Business, and let's take a listen to what he said this morning. This morning.
We've got the large gold holding. I doubt we're going to revalue it, but we are going to keep it there, again, as a store of value for the American people. We've also started, to get into the 21st century, a Bitcoin strategic reserve. We're not going to be buying that, but we are going to use confiscated assets and continue to build that up. We're going to stop selling that. I believe that Bitcoin reserve at today's prices is somewhere between 15 and 20 billion.
There's a lot there. So again, to reiterate, we've got to, at first, he said, I doubt we're going to revalue gold. He also then said, we've got a strategic Bitcoin reserve. We're not going to be buying it. We're not going to be buying Bitcoin. But he said that we're going to, basically he said, like, we won't buy it, but if we steal some from people, we'll put it in there. So that's neat. And then beyond that, he said, and we're going to stop selling it. Might that indicate that there was some selling taking place? And then furthermore, the last thing was the valuation on the Bitcoin that they currently hold, which he said between 15 and 20 billion dollars. Now, Larry Lepard summed it up quite nicely here. He said, okay, So who sold 50,000 coins? At one point, the claim was that the U.S. controlled 210,000 Bitcoin. And when you math that out with what Besant just said at 15 to 20 billion, the math ain't mathin'. When you look at even as recent as December 15th of last year, it would appear that under a filing, they held just over 198,000 Bitcoin, with the price lower than it was at the time when he made this announcement. That was still over $23.3 billion. So again, why is there now less than that? And of course, when Besant spoke, you can see, I think I can see exactly when he said that. It looks like it was right about there. So we saw the price go from the euphoria of some new all-time highs last night. Last night it got to like 124 and a bit. And now we're flitting around 117, closer to $118,000. So the market did not like that. However, this is there's been a major change in the past couple of hours, and we can only speculate as to why. But he did say we're not going to be buying Bitcoin, and he basically outlined, like, if we confiscate it, we'll keep it. But not much else other than that. And then the ire of Bitcoiners online was clearly felt, because the Treasury Secretary, Scott Bessent, then came out and shared this tweet around 1:45 this afternoon, my time, so a couple hours forward from there. Bitcoin that has been finally forfeited to the federal government will be the foundation of the strategic Bitcoin reserve that President Trump established in his March executive order. In addition, the Treasury is committed to exploring budget-neutral pathways to acquire more Bitcoin to expand the reserve and to execute on the president's promise to make the United States the Bitcoin superpower of the world. So it would seem that compared to what he was saying this morning, he's kind of done an about-face and gone back to the pre-existing narrative that, hey, we're still pursuing ways to accumulate more Bitcoin outside of the way that he spoke of, which was just stealing it from people. You also have Senator Cynthia Lummis chiming in here. Secretary Scott Bessent is right. A budget-neutral path to building the SPR is the way. We cannot save our country from $37 trillion in debt by purchasing more Bitcoin, but we can revalue gold. So the opposite of what he said we're not going to revalue it. She said we can revalue gold reserves to today's prices and transfer the increase in value to build the SPR. America needs the Bitcoin Act. Now, what I'll say is they don't have that fucking gold. There's no way. There's no way. There's a reason why they're not keen on that. It's not there. I don't know. What do you think, Nathan?
Well, it's funny that we never got that audit, did we? We never got that audit of Fort Knox. I'm curious how much is there. It's weird to me that this idea keeps getting floated around. Like, it feels like they're trying to meme it into existence. Like, I think the first time I ever heard the idea of revaluing the gold came from Luke Groman. I'm not sure if it was one of his kind of brainchilds or it was something that's been considered for a long time, but I feel like that one is getting normalized in the media, and they're gonna make some moves on that at some point. I think it's definitely within the realm of possibility. In terms of the response, like, what a nice sort of indication of where Bitcoiners are in terms of political influence. It was wonderfully outlined, I think, with the election of Trump, because he did get a lot of support from the libertarian base, especially on free Ross aspect. But even now, right, there's a lot of people doing quick about faces, quick 180s if they piss off the Bitcoin crowd, because it's not only just a virulent group that's very passionate about it, but they've also got the capital behind them. And I bet you that some donors knocked on his door when he came out. I bet you that was where the pressure came from. With regards to his initial statements, I'm not sure that he was necessarily lying or maybe downplaying or even misspoke. I saw Joe Consorti had a wonderful point about this as well, that he's a debt salesman. He's got to get people to buy treasuries. And so he's got to walk this line between keeping Bitcoiners and donors happy, getting some potentially into the strategic Bitcoin reserve, but still being like, look, I'm all about Bitcoin, but I want you to buy my debt. That's what I want you to buy.
Yeah. How do you simultaneously stack the soundest money on earth that is a clear replacement for the US dollar and US treasuries while getting people to use US dollars and buy US treasuries? Yes. Guys, we like Bitcoin, but, like, have you seen my shitcoin?
That's exactly, and even to further illustrate too, to Senator Lummis's point, one thing I'll disagree with is you absolutely could just buy Bitcoin. Screw the debt, the budget neutral thing. You want to save the U.S., that's probably the way you actually have to do it, but it ain't going to save necessarily the U.S. dollar. And again, going back to this idea of revaluing the gold, I saw a wonderful theory kind of floated out there too, because we recently had the very brief window with the tariffs on the gold. And trying to make sense of that, one idea that I was shown that did kind of, everything lined up for me was the idea of tariff on gold, short squeeze the gold, revalue by Bitcoin. Do I think that they're going to do that? Not necessarily. Do I think it would be a good idea for them? Yeah, I do.
Yeah. Again, and I see people chirping in the chat, and I agree. Like, Doug, at the end of the day, you got to ask yourself, do you actually trust this administration? And, like, the answer is never trust any politician, right? Like, they will say one thing and do the opposite if it suits them better at any point in time. And we've seen that time and time again. Should never be surprised by it. And furthermore, to kind of round out this topic here, it's if you are waiting on government decisions to inform whether or not you're going to obtain, use, and secure Bitcoin, you are doing it wrong. Don't go and wait. Just start learning right now and make sure that you're not only getting Bitcoin, but getting it into your own self-custody. It is so important. If you want help with that, just scan the QR code. There's the Learn page that we have set up on the BTC Sessions website. And literally, it's just full of skills that you can learn from beginner stuff to intermediate to master. And you can just level up as a Bitcoiner, and none of this will matter. none of it will matter because you will be safe in self-custody with your own Bitcoin. And beyond that, if you want to dive deeper, there's playlists for deeper dives on all of the topics there. So, you know, level up. Don't wait for the government to tell you whether or not Bitcoin's valuable. We know it is. We know it's important. And we know that if you are self-sovereign, then you can just sit back and, you know, the news is fun to listen to, but you don't need to be reliant on it. With that, Nathan, on the other side of the jump, did you see the craziness yesterday with the supposed Google ban on Bitcoin wallets requiring licensing and all that, the about face, all of the stuff that went down?
Oh, yeah, it was incredible to watch. And again, it's just like we have the Treasury Secretary responding to Bitcoiners not being exactly happy, and we have Google responding to Bitcoiners not exactly being happy. But it wasn't really a good day for Google in a number of aspects. So I'm not surprised that things were, again, a little bit of a roller coaster ride. I mean, their statements are changing faster than the Bitcoin price. They're more volatile currently than the Bitcoin price. It's ridiculous.
We are going to be touching on that. There's plenty more than just like the initial ban that went on, and there's a resolution to it. And I didn't realize like this was already taking place before people noticed it the other day. And there's some real examples and a follow-up to the original article that actually expose it. So we're going to kind of go through that. And you know, there's seemingly a positive outcome to it, but like, is there? We'll see about that. Everybody that's tuning in, again, if you're brand new here, welcome. If you're a returning viewer, welcome. Everybody, if you're enjoying the show, please do smash that like button. We're going to give a quick shout out to our sponsors. And on the other side of the jump, we're also going to give away some sats. So get out your Lightning wallets. We will be right back in 1 minute. Bitcoin Well is the best place to be buying and selling Bitcoin in Canada and the US. And now with Bitcoin Well Infinite, it's also the best place to be making large buys at their OTC desk of over $50,000. Their white glove service gives you fast transactions, no slippage, and the lowest fees. You can scan the QR code on the screen or simply head to bitcoinwell.com/BTC sessions to sign up today. And you can share your own personalized referral link to earn commissions.
If you've been around Bitcoin for more than a minute, you've definitely seen something made by CryptoCloaks. Since 2017, they've been the go-to for badass 3D printed Bitcoin gear, from custom home mining rigs to sleek hardware wallet mounts that make your setup look pro. I've been stacking Cloaks gear for years, and most recently I grabbed their Gamma case for my miner. Let me tell you, it turns some heads. You can customize everything, and of course, the legendary Bitcoin grenade, yeah, that's them. Hit the link in the show notes or scan the QR code to visit CryptoCloaks.com and stack your own custom Cloaks gear today.
Debify is the best and easiest way to borrow against your Bitcoin in a non-custodial way. Funds are held in a multi-sig escrow where you hold a key, and the platform allows for excellent hardware like the Cold Card Mark IV and the Q. You have access to flexible conditions, the best rates, and institutional-grade liquidity. If you're looking to make use of your capital, don't sell your Bitcoin, borrow against it. You can head over to debify.com to check them out, or simply scan the QR code on the screen. All right, we are right back in, and we're going to give away some sats before we outline what in the hell happened with Google banning Bitcoin wallets from their app store the other day. So we're over here on Bitcoin Well, awesome place to be stacking sats in Canada and the US. And the way it works, also they have Bitcoin Well points. And so when you sign up, buy Bitcoin, refer friends, you earn points, and you can easily use them to grab yourself some swag, or you can use points to toss a coin in the well. And every time you do, you have a chance to win up to 1 million sats. So all you need right now is a Lightning wallet. And in that wallet, you're going to scan the QR code. Whoever scans this QR code first will steal whatever amount of sats we get from everyone else. So you got to be quick on the draw here, but whoever scans this is going to get away with 378 sats. If you do snag them first, let us know in the chat. We love to hear it. But with that, let's talk about what the hell happened the other day with Google, because it was, again, also a roller coaster. Like the whipsaw was, I've got some whiplash from it. But Google Play Store bans wallets that don't have a banking license. So there's an update here, and we'll go through that in a sec. But they say Google Play Store introduced a policy that requires any software wallet developer to obtain a license before publishing cryptocurrency wallet apps to the Google Play Store to ensure a safe and compliant ecosystem for users. That sounds so pretty. The policy targets 15 jurisdictions, including the EU and the United States, laying out which regulations Google Play Store expects software wallet developers to comply with. This includes being a registered money service business with FinCEN in the US, as well as obtaining a MiCA license in the EU. Again, for forcing AML and KYC on non-custodial wallets in the US, basically, again, registering with FinCEN as a money service business, or with a state as a money service transmitter, and a federal or state chartered bank entity would be the only other people that can get around that. And then you'd have to adhere to AML and KYC, all of this stuff, which is crazy. And the interesting thing is, once this article started, again, receiving the ire of Bitcoiners, people went insane over this thing. Rightfully so. Rightfully so, because like the policy was crazy. Like you had to register if you're in Canada, it was with FinTrack, you know, all of these different things. Even if you were like, it just specified any Bitcoin wallet. It didn't differentiate between exchanges that hold other people's money and self-custody. However, you know, not only did Bitcoiners get mad, market didn't like it either. Here's Eric Yiggs. Great backlashing, everyone. And you see the Google price just like wick down, pretty Alphabet rather, all of a sudden right around the time that news broke, and then kind of come back to normal. But at the same time, we were also seeing for the first time Bitcoin's market cap flipping Alphabet, aka Google. So while we were enjoying our fresh all-time highs the other night, we were also enjoying a fresh slapping of Google as we surpassed them. And their drop in market cap may have also contributed to that flipping. So it's a matter of time before we're up there and we're knocking on the door of gold. I think that Apple, Microsoft, and NVIDIA, I mean, they've got to come in no matter what. Gold will be a harder one to tackle because the leap between NVIDIA and gold right now is large.
Bit of a 5x there, so it's a bit of a stretch at the. It's like the last 5 pounds. You lose the first quite easy, but getting to that number 1 spot will take a little while. But realistically, like Nvidia is less than a 2x above where Bitcoin currently is, and in Bitcoin's history, that's not really outside the realm of possibility. But yes, it was fun to see Google take a hit in the market, both in terms of the leaderboard and that wick down. It didn't quite reset at the same height because again, apparently going after Bitcoin is bad for business.
Indeed, and they did an about face, actually. Here's an update from Lola, who wrote the original article. So Google has changed its Play Store policy in response to our reporting. Here's why this is a big deal for developers.
The miners
Since
flask
our
might
story
have done it.
several people reached out to me about Google Play Store delisting non-custodial wallets well before the policy in question came into effect in July, asking for local licenses under what was previously known as their blockchain-based content policy. One of these wallets was Electrum Wallet, the mobile version, who thankfully documented their ordeal with the Google Play Store publicly. It seems that as soon as a local jurisdiction codified licensing requirements for software wallets, Google wanted to see that the developers obtained said license, making no distinction between custodial and non-custodial wallets. If no license was provided, it appears that Google auto-banned flagged wallets for policy violations, leaving it up to developers to prove that they did not need a license under local laws. In the case of Electrum, getting their wallet back into the Play Store took over 100 days. That's 100 days in which no new installs were possible while existing users weren't able to pull updates. A big deal, seeing how some updates push critical security fixes. By fixing their newest policy to now specifically exempt non-custodial wallets, non-custodial wallet developers will no longer have to prove that they don't need a license if they are flagged, but can simply point to the fact that they are non-custodial, referencing Google's
we're about to get
policy.
him.
Never thought I'd say this, but thank you, Google, for fixing this, and thanks everyone who helped raise hell to make it happen. And the tweet from Google responding directly to the original article. Thanks for flagging this. Non-custodial wallets are not in the scope of Google Play's cryptocurrency exchange.
Okay, so I didn't get whatever that thing, the other thing was.
Clear. So once again, Bitcoiners for the win. Now that said, Google's also dabbling in the Bitcoin space in other ways at the same time. They just took an 8% stake in Bitcoin miner TerraWolf. This is, and I'll share the article here. This is a $3.7 billion deal. And so they've landed an infrastructure deal, 10-year AI hosting deal. Google is taking a stake in the company as it helps fund the project. TerraWolf, who owns and operates industrial-scale data centers in the U.S., which are tailored for high-performance compute, hosting, and Bitcoin mining. Again, they announced that it signed 2 10-year co-location agreements with FluidStack. And this is a mix of AI and Bitcoin mining. But yeah, they're deploying more than 200 megawatts of IT load. And yeah, $3.7 billion in contracted revenue over the initial 10-year terms. And yeah, Google's got a stake in that. Interesting. Nonetheless, it's not all roses. I think it's important that Bitcoiners, like, for every little win, we also need to remain vigilant. There's still plenty of bad stuff on the horizon, and we need to keep raising shit over stuff like this. So, you've got a Democratic senator introducing a Senate bill to tighten controls on Bitcoin ATMs. If passed, the bill would require ATM operators to obtain a money transmitter license and collect detailed consumer information for each transaction. Not great. You can see that coming a mile away. Of course, they're going to be wanting to do that. This one, really scary. As much as I don't give a shit about Ethereum, I do give a shit about people being arrested for writing code, let alone writing reports about code. And that's exactly what happened here. There's a developer. He was arrested at passport control in Turkey over his contributions, not to Tornado Cash, to a paper that assessed the efficacy of privacy on Ethereum and Tornado Cash. So he basically just wrote a paper saying, like, is Tornado Cash effective for privacy on Ethereum? And he was arrested. He did end up being released, but he was held for a while specifically because of this reason, which is crazy. And of course, unfortunately, the actual original case, Roman Storm, who created Tornado Cash, he was found guilty of unlicensed money transmission conspiracy. Now, he wasn't found guilty under a couple other things. They could not reach a decision on charges of conspiracy to commit money laundering and violate U.S. sanctions. So it resulted in a mistrial on those two, but he was found guilty of unlicensed money transmission conspiracy. And, they can appeal that. I'm sure they will appeal that, but that's unfortunate. And then outside of that, again, still, guys, the Samurai Wallet developers, they pled guilty to unlicensed money transmission. And that's really, really shitty. Like, I mean... how do you feel, Nathan, when it comes to these things? Like, we're getting some wins, but there's still these looming dark clouds with stories like this.
Well, I'm reminded that, Bitcoin had a good reaction to what happened with Google and to what happened with Scott Bessent. And Bitcoin has that anti-fragile nature, but that anti-fragile nature isn't just a passive thing that you allow to happen. That anti-fragile nature comes from people reacting and then taking steps to get around those hurdles or to prepare for what's coming. So it's another reminder that, like, if you have not dove into maybe some of the more advanced tools or privacy tools or things that are out there, it's time to start exploring them to make sure that you're fully, that if Google decides not to list a wallet, you're not screwed, that you have other options available, that you know where to go, that you're kind of prepared in advance, that it's your actions today in response to these sort of things that build out that anti-fragile nature. And I don't think this is the end of it. I mean, there's no way the state is going down without a fight necessarily. I find it unbelievably tragic. I feel particularly like for the Samurai wallet developer guys, taking the plea deal, it's like, I get it. You were in a cage for what, like 461 days or something like that. I can see why they just want to be done with it and kind of move on and do their time, regardless how they actually, even if they feel that they are in fact guilty, whether or not I think that they are in fact guilty. So, we're going to have wins. Getting Ross out was a win. We're still going to take some hits. The battle's not over yet, and it's kind of up to us to continue to highlight these issues and to talk about them and to, again, keep up with the skills that is necessary to get around.
Yeah. And I mean, harkening back to the Google Play thing, like, had that actually remained true and they hadn't done an about face and said, actually, you know what, this is fine, what would people have done? Well, number one, already, if you're on an iPhone, you don't have really much options. It's like you've got the App Store, and if it's available, you have progressive web apps, where basically it's through the browser, but it looks like an app on your home screen. That's pretty much it. That's what you've got. Now, if you're on Android phone, you have some more options. So you can use something like Obtainium. This allows you to, again, install and update apps directly from their release pages and receive notifications when new releases are made available. I've had this, actually, I was talking to Seth for Privacy about this, and he recommended checking out Obtainium. Francis Pouliot also uses this. And so, again, F-Droid is another option to be able to get apps on an Android phone without having to use the Google Play Store. Now, furthermore, in the realm of Freedom Technologies, we've also seen the creation of the Zap Store. And so this is at zapstore.dev. Zapstore.dev, and you can download and install this app store. And the cool thing about it is that it's integrated with Nostr, which is basically a censorship-resistant, like, social graph. So think of, you own your contacts yourself. It uses public and private key cryptography, and not only that, that allows that rather than just kind of a trust me bro instance of, well, is this uploaded by the right person? They can basically, anybody that's a developer and uploading, they upload and sign with their Nostr key. So there's like this social proof with it, and your social graph can directly vouch for the developers and, oh, I've used this and it's safe. And so you actually have direct feedback from your connections as to the efficacy and safety of different applications. And of course, with that built-in Bitcoin, you can directly tip the developers in Bitcoin and Lightning, which is really cool. But I'm super bullish on this. I think that's great. Again, if you're on Android, you can add this app store, no problem. If you want to go outside of even Android, you can also change the OS on your phone. You can de-Google your phone with something like Graphene OS. And so, there's a couple steps to go through. Maybe I'll have to make a video on how to do this, but Graphene OS is an option. Calyx OS is another option. But yeah, you can choose alternatives to Android and iOS, right? There's more out there. And then even just beyond that, something's not available where you are, you need to start looking at things like VPNs. I did make a tutorial on how to use Mullvad VPN, which does not require any personal information, and you can pay with Bitcoin. So I think that that's an important thing that you should be looking into, because again, if you're in a place that doesn't allow certain things, like Canada blocking news on Facebook and Instagram, you can just click a little drop down and say that you're somewhere else that doesn't censor news, and and enjoy that, or get the app that you need. So again, it's really important that you pick up these skills and you learn. Again, I'm shilling this all day and night here. The Learn page, just start. Learn the skill set, learn what you need to know so that you can continue to be self-sovereign in the face of people telling you otherwise. And so we're going to talk a little bit more about the insanity of the Canadian government, because as bad as things can be seemingly at times in the US, Canada's always there to step in and say, hold my beer. So any last minute thoughts on just people leveling up before we do a quick jump?
No, I'd say, learn from my mistakes. Don't sleep on Nostr as well, too. I did not give that as much credit or time, particularly when it first came out. And I had a wonderful conversation with Roland from LB Hub just this week drop. And I went and double checked, so I was pretty sure it's there. But LB Hub, incredible. Nostr Wallet Connect, the other things that you can do with it, very, very helpful. And Zap Store is, in fact, on the LB Hub store as well, too. I just verified that it's there. So another great place to sync up and get that going.
Yeah, super awesome. On the other side of the jump, Canada made some insane moves this past week, just in terms of like draconian, like whole new type of lockdown. It's pretty wild. We're going to chat about that and a number of other things. A reason why Bitcoin only. There's a major privacy-focused cryptocurrency that is experiencing a 51% attack. If you don't know what that is, we'll also reiterate that. But we'll be back in 1 minute. Quick shout out to our sponsors. Stay tuned. And if you haven't already, please do smash that like button. We'll see you guys in a sec. Looking for a simple and secure way to manage your Bitcoin on mobile? Aqua Wallet has you covered. It's user-friendly and puts you in full control of your Bitcoin with secure self-custody. Aqua also supports Lightning and Liquid Network, making fast, cheap Bitcoin payments and asset transfers easier than ever. Plus, it even supports stablecoins, giving you ultimate flexibility. Built on open source code, Aqua is transparent, trustworthy, and perfect for beginner and pros alike. Ready to upgrade your Bitcoin experience? Click the link in the show notes or scan the QR code on the screen now to download Aqua Wallet today. Securing your Bitcoin doesn't have to be complicated or invasive. With Nunchuck's Honey Badger plan, you get state-of-the-art multisig with built-in inheritance planning and no KYC required. Nunchuck is trusted by users to secure billions of dollars in Bitcoin. The Honey Badger plan offers 204 assisted multisig, guiding you step-by-step on mobile or desktop. It works seamlessly with hardware wallets like TapSigner, Coldcard, Jade, and plenty of others, so you are always in control. Plus, with non-KYC inheritance planning, you can ensure your Bitcoin goes to your loved ones. No private info needed. Take control of your Bitcoin today. Click the link in the show notes or scan the QR code on the screen to check out the Honey Badger plan. CoinKite has been in the game for years, creating hands down the best and most secure hardware when it comes to securing your Bitcoin. The Coldcard Q is an absolute powerhouse and my daily driver, and its discounts, or simply skip
Your screen and go outside, touch grass, have some sun. Usually feels a little bit better. Why, Ben, do you ask?
Do you like getting $25,000 fines for enjoying the woods?
I don't. Usually, especially, you have young family, kids over on this side. I look for activities that are a little bit cheaper. That's why I would normally go to said woods or on a path or outside in general. It's usually within my budget.
Yeah. Well, it might be outside of your budget if you are in Nova Scotia, who has basically done, from what I can tell, is the first Canadian climate lockdown. Now, why is this? They indicate worry over forest fires and have told citizens that you are not allowed to basically go into the woods, whether it be for hiking or fishing or camping or really any reason. There are some government-approved areas, specific campgrounds. So as long as it gets the green check of approval from the government for a very specific spot, you may be able to experience some woods. But outside of that, if you go to the woods, including if you own land that has woods, if you go into your own woods, you can receive a $25,000 fine. And so what we see here on the screen, this gentleman, absolute legend, Jeff Evely, and what he did is he said, I want to challenge this in court, but in order to do so, I need to get the fine. So he walked into the office of the conservation officers in Nova Scotia, and he said, I'm aware that there's a fine for walking into the woods. I want to be cordial about this and polite, but I want to inform you guys that I would like to get this fine so that I can fight it in court. So there are woods out back on the other side of the office. If you guys want to follow me out there just to document this, I'm going to record as well. I'm going to go in the woods. And they're like, sir, if you go in the woods, we're going to have to give you that fine. He's like, I'm aware. So do you guys want to follow me out? And he goes out, literally just walks in the woods, and then he comes back inside the office so they can issue him the fine. Now, the funny thing is, you'll notice that he says, they handed me a fine for $28,872.50. And when he asked, hold on, I thought it was $25,000. They said, oh yes, $25,000, but there's a victim fee because of his victims. So 28,000 some odd dollars for the victim, additional $3,500 for the victim fee on top of the original fine. But absolute insanity, and that's not the only insanity here. Premier of Newfoundland announces anyone in Newfoundland who breaks the fire ban will face 6 months in jail, and the fines now go from hundreds or a few $1,000s or something to $150,000 in some instances. It's crazy. So if you have a little bonfire or something like that, it's all right, we're going to give you this fine that the average Canadian, it's triple the average Canadian income, and then they say failure to pay it will result in jail time. It's unbelievable. Now we're just walking down the tyranny path of tyranny here, but let's continue. Private property rights are no longer safe in BC. British Columbia Supreme Court has declared Aboriginal title over private lands in Richmond, land which overlaps the port with port terminals and warehouses, including one operated by Amazon. And it says, of course, the decision will be appealed. But here's a little breakdown on it, very eloquently put by Ron Butler here on X. Why recent First Nations land ownership court decision in BC is totally nuts. After a 5-year trial, longest in Canadian history, 800 acres in the city of Richmond Hill, BC, was awarded to the Cowichan, I'm not sure, tribes, ending 200 years of accepted property law in Canada. At the stroke of a pen, a fuckwit judge negated one of the most important aspects of law in a free society, property rights. If a court can decide a First Nations claim supersedes existing multi-decade property titles, this country is in more trouble than I thought. Even the NDP Premier of BC, David Eby, was appalled, saying holding clear title to private property is a requirement of a successful economy. Incredibly, this judgment in favor of one band infuriated 2 other bands that were part of the case in opposition to the band that won. Let's all just agree this stuff is completely insane. A 5-year, multi-million in fees court case paid for by the taxpayers. Yep, all the entities fighting were governments, government agencies, or Aboriginal bands supported by government money. Lawyers made bank. We all lost. So, yeah, very, very interesting. Nathan, have you ever considered a second passport?
Oh, I absolutely have. I have wonderful friends that have gone down this rabbit hole, and I've been eyeing up that I need to get out of Canada at some point in time. There's kind of no way around it. My hope is that I can leave Canada without leaving my home, that Alberta will just break off and do its own thing in a glorious and beautiful way. But these things are only going to get worse, and it's only going to continue to accelerate. What's so disappointing, particularly with the fire bandits, I would have figured that more of the population would have at least somewhat of like a, you say, a hostile response after everything that happened in COVID. But no, it's the same thing. The age verification in the UK for your safety. Google with the non-custodial wallets for your safety. And again, you can't go in the woods for your safety. They originally, because they got so much backlash, at least online, regarding like, you know, me walking in the woods doesn't create a fire, that I forget who it was. I think it was like a Liberal MP or somebody out there as well came out and said, no, it's not that. It's that if you get hurt, we can't come help you. If you get hurt, we can't come help you because we're busy dealing with forest fire. So that's why you can't go. It's absolutely ridiculous. Out of my way. You weren't going to come and help me anyways. You never are. You're the government. But more importantly, one thing I want to illustrate for anyone who may still be kind of, again, maybe coming to these realizations that these people don't have your best interest, this screams they don't trust you. They're treating you like a parent and you're a bad child that they don't like and they beat on the weekends, saying that like only with a big stick will you comply with what I want because I can't trust you to walk through the woods and not burn the whole place down. And if they can't trust us, why the hell should we ever trust them?
100%. And again, I echo your let's hope that the Alberta sovereignty movement gains even more steam. I would love to see an independent Alberta. I do not know which way it's going to go, but they are ramping up for a referendum vote next year. I mean, that seems to be a thing that's coming to fruition. So it'll just be, do they have the support? And yeah, I see people call it the big cities. What about the big cities? Yeah, that's the trouble. Those are the ones that are going to vote against it. But nonetheless, you know, even in the realm of second passports, this is kind of what Bitcoin enables is flag theory, right? If you can manage to get to a point where you're at least you know, economically independent, then you can then begin to look at going places where you're treated best. And that's an important part of sovereignty is that flag theory. My wife, she just got her second passport through our friend Katie over at Citizen X. And, you know, you see a lot of these things popping up for Bitcoiners, you know, in groups like Citizen X that can like handhold people through obtaining a second passport, either through blood, so like lineage, or just like investment programs, things like that. So I think that's key to the sovereignty movement. And I think it also incentivizes governments with enough time and enough people doing it to, instead of treating their constituents like subjects, treating them like customers. Come to us because this is what we're offering in exchange for perhaps some small taxes. You know, like they get to make the case of why you should be in their jurisdiction, not the case of, I mean, they don't even bother making a case, they just steal from you, right? And make things difficult. So I look forward to watching that dynamic in a digital world with censorship resistant money playing out in the coming decades. I think it'll be a hell of a trip, but I do want to change gears a little bit because I want to talk a little bit about, have you heard about the 51% attack on Monero, my friend?
I have been. For people that might be new here, can you quickly describe what is a 51% attack?
So, the original promise of, you know, quote unquote blockchain, when people just use the term blockchain blanket, they interpret it as a silver bullet of like, it's immutable, you can't reverse transactions. Now in Bitcoin, it's very true. It's incredibly difficult to reverse a transaction. Not that, you know, you can't have times where you're uncertain which transaction is going to go through and where the money's going to end up. And you might have a 10-minute period where it's like, what's going to be the real transaction? That is possible. But Bitcoin is the system where you are the most certain you possibly can be that transaction is immutable and reversible. The reason for that is because of miners. Miners use energy to build blocks of transactions and link them together block by block. And in order to reverse those transactions, somebody has to execute and use the same amount of energy to redo all the previous work that is done. And so the long and the short of it is, it makes it exorbitantly expensive to go back and undo and change transactions because you have to expel energy to do that. And the amount of energy required in Bitcoin is just so damn expensive that it's not economically viable. However, in Monero right now, we are seeing a 51% attack because the cost of executing it is not that much where it's economically unviable. So Cubic just reached 51% share of Monero hash rate. This is a huge feat. They will be the first to manipulate a cryptocurrency with a 51% attack. I don't think that's true. I think there's been other instances, especially 2017 around then. They intend to orphan all blocks from every other miner, meaning they won't build on top of those blocks. They'll just use their own chain. The only way to mine Monero will be through them, and they are 3 times more profitable than mining Monero directly. They are giving half the profit to miners and selling the other half of the profit to buy Cubic and send it to the burn wallet. If they mine 100% of the Monero blocks, that gives them 432 Monero mined per day. This is $118,000 roughly at the current price. They keep 50% of that and give the rest to miners, making their profits 59 grand a day. Of Cubic being burned every day, 414,000 burned a week, and 1.65 million burned every month. This is insane. This history being made here. Cubic is less than a $300 million market cap and will be the sole miner of a $6 billion market cap coin. This is a picture here of the reorg that happened. So basically, you have like the original chain, and then you have the replacement transactions that came in. So you can see the split. This is where, when you have a fork like this, it means that two miners have mined competing blocks of transactions. And this happens in Bitcoin from time to time. It's possible, and it usually is just timing. It happens at the same time. And so it takes 10 minutes for whoever mines the next block to decide, okay, we're going to build on this chain or this chain, and whatever's the longest is the most valid. The problem here is that you had a valid chain that had, what, 1, 2, 3, 4, 5, 6, 7 blocks. And then Qubit comes in and they're like, yeah, fuck you guys, here's the real chain. And just started mining over here and continuing on. So basically reversing these transactions. Now, I'm sure a bunch of those transactions were included in the other blocks, but now that's the valid chain. So like they kind of undid the previous work. They had the hash power to do this. And so this is summed up really nicely with Francis. Francis Bouliot here, founder of Bull Bitcoin. I'll read the original tweet. This is from, June 11th of 2023. The point Monero users don't get. If you convert Monero to Bitcoin, your privacy is only as good as your Bitcoin OPSEC. To be truly private, Monero users must thus remain in a circular economy. To have a circular economy, you need holders. To have holders, you must outperform all other currencies. And there's the chart of Monero versus Bitcoin just gradually trending to zero. Now, again, his latest update, brutal update, without a circular economy, Monero privacy is meaningless. And anyway, super testnet research shows it's not that great anyways. He has shown some examples of de-anonymizing Monero transactions. A Monero circular economy participants get absolutely wrecked compared to BTC circular economies. Let it go. Use Lightning and Liquid instead. So again, unfortunately, you know, privacy is a noble thing, but at the expense of a functioning currency that can maintain its purchasing power, even grow in purchasing power. Unfortunately, that's not enough. And again, without enough hash rate to secure the network and protect it from attacks like this, also not enough. So that's unfortunate. Any takes on this, Nathan?
No, it just goes to highlight in like a smaller example, because the incentives lined up that basically they would mine Monero and then spend it in order to pump their shitcoin, right? And so they had a game theory incentive that actually it was strategically advantageous for them to attack the Monero network, more or less. Additionally, I don't know if they'll be able to do, I saw Crowder talking about this as well too, I don't know if they'll be able to do that for any sort of sustained period of time, or it's more of a publicity stunt, but it does show you the giant glaring weakness that at the end of the day, like as Jeff Booth always says, right, if you need to remain decentralized and secure, and Monero, the hash power behind, and it's a different algorithm as well, I forget which one it is, the hash power behind Monero is not sufficiently decentralized, and it's not enough to secure the network. And for anyone thinking about like getting into like hobbyist and home mining, it's just another reminder that like every little bit does help, right? It's not necessarily a bad idea. There's tons of concern around like the Chinese mining concentration, and we got to have that at least disassembled with the China mining ban back in 2021, and things look pretty good, but there's still some centralization out there. So if you want to participate, if you want to help, if you want to lottery mine, it's still a good idea, because we do need to make sure that we have this defense structure in place.
Yeah, 100%. And again, to the point early on, we've been sharing the Learn page. There's plenty of examples of how to mine at home. So yeah, go to btcsessions.ca/learn, and there's one example video of home mining on the main page there. Just go to the bottom. There's a whole playlist on different ways to mine at home. So yeah, partake in the network. But I do want to continue on. I was very excited about this. If you're running a Start9, which is your own home node solution running full Bitcoin node, you can now also install Fedimint onto it. Fedimint being an eCash privacy system built atop Bitcoin. Very interesting, pretty cool. You can play around with it if you want to sideload it. I will be doing a video on how to use it as well, but really, really cool. Basically, you can pool funds in a multi-sig, and they sit there, and then you can send instantly between members of the mint, instant, free, and perfectly private. And then if you're interacting with people outside of the mint, you can string those transactions together via Lightning, which gives you the privacy of the crowd. So there's no indication which person in the mint sent. And when the transaction comes into the mint via Lightning, there's no indication which person is actually receiving that transaction. So really cool, very interesting. Good to see this rolled out on Start9. I did also want to mention in the realm of mining, because we were talking about it before, Jack's new open source mining project is called the Proto Rig and Proto Mining. So they had an announcement, and so I'm just going to kind of, Rob Warren broke this down, which is great, Bikes and Bitcoin on X. He says, what seems like a simple hardware announcement is actually a massive evolution of how mining farms work. Let's dig in. He said, everyone's been wrestling over how to squeeze another joule per terahash out of the newest generation miner. Proto rebuilt the farm from the machine level up. To understand why this matters, you must understand how Bitcoin mines make money and what their largest cost centers are. The three largest expenses for miners are facility builds and retrofits, electrical costs, and machine purchases and maintenance. So operators pay immense amounts of money setting up very specific facilities, but they run into serious problems years down the road. Machine size, power draw, footprint can change. This can mean massive retrofit costs. It's not sustainable to spend tens of millions of dollars on facilities filled with hundreds of millions of dollars of machines, only to redesign your tens of millions of dollar facility the next time you spend hundreds of millions on newer machines. Instead, Proto has done something incredible. They treat the chassis of the machine as farm infrastructure and allow you to hot swap the boards, fans, and power supplies as technology advances. So they basically got kind of like a default box, and then you swap in the parts. So it's very compartmentalized, and you've just got like individual facets that you can reinstall. You'll probably pay more to initially set up the full facility after all the chassis and infrastructure costs. However, a Proto rig should be much more profitable over time. Why? The machine, when a machine fails, due to the fan going down or the board failing, you don't lose the productive hash power of just that part. You lose the full machine. This is like how it is right now for the duration of the failure and for the time you take to pull, disassemble, and repair the machine. By maintaining the chassis and infrastructure and making the components modular, Proto allows you to keep failures highly localized and repairable via hot swap. Hot swaps reduce repair time. Again, he continues on here. When it comes to upgrade your fleet, you only have to upgrade components instead of entire machines. This allows lower marginal costs, increases marginal profitability and revenues. Again, he says this is the magic of what they've done. Instead of chasing the white rabbit to lower joules per terahash, we found a meaningful profitability gain by eliminating downtime, retrofit, and upgrade costs. Yeah, so anyways, very interesting. I'm curious to play around with what they've got. I haven't seen pricing or anything like that, but pretty cool. I don't know. Thoughts?
I love it. And what it reminds me of is like the immense productivity and efficiency gains that you can actually get with standardization, right? That's a really, really, really powerful thing. Think about how much easier it is for developers and components builders to have like a standard USB-C or a money, standard Bitcoin, or the internet, standard HTTP, TCP/IP, right? When we can almost like coalesce on a framework, then it makes it very easy to make changes, adapt, again, build, and continue, and have it also be backwards compatible as well. So I'm not saying this will end up being it, but the idea of having almost like a standard mining housing setup means that, again, like changing out parts on your computer, if you got a desktop at home, it makes it really easy to upgrade, evolve, improve, and keep it up. And I think that's wonderful, right? I think you get a lot more out of it by starting to standardize, right?
Yep, 100%. And yeah, I look forward to seeing the competition in their response, because yeah, could get spicy. Now, there's one last thing I wanted to highlight today, and this is this from Opportunity Cost, but this is TFTC. TFTC put together this video here, and it's a great video on the Federal Reserve. They did it all with AI and everything, but it's awesome. So I kind of just want to watch it. Do you want to watch it with me?
Let's just watch it and then send it to your friends afterwards, guys.
Yes, let's give it a go. You can find them at OpCost app on X. But
Jekyll Island, November 1910. 7 bankers meeting in secret to create America's central bank. We just can't call it that. The 1907 panic nearly destroyed us. Banks failed, fortunes vanished. We want to control America's money supply, create booms, trigger busts, and profit from both. And how will we do that? We'll create money from nothing, loan it to the government, and charge interest. Legal counterfeiting, my friends. But there's a cost. Every dollar we print steals value from existing dollars. It's a hidden tax that flows directly to us. And it gets worse. If we ever get off the gold standard, governments can print money for wars. Endless wars become possible. And profitable. Since Americans hate central banks, we'll call it the Federal Reserve. Sounds governmental, doesn't it? It's not. The president will appoint board members, but we'll pick who he appoints. We'll have 12 regional banks. Looks decentralized, democratic even. But New York banks control them all. That's us. You're probably wondering how we're going to get this through Congress. December 23rd, 1913. Most of Congress home for Christmas. Perfect timing for passing unpopular legislation. I'll publicly oppose our own bill in Congress. They'll pass it thinking they beat Wall Street. We'll fund university chairs, write the textbooks. They'll teach our system as economic science. Beautiful. Every American born after this will inherit debt on money we created from nothing. Generational servitude. The Federal Reserve. Not federal, no reserves. But everyone will think it's their government protecting them.
Good afternoon.
That's just beautiful.
Done. Well done.
Such a wonderful, concise, like 2-minute concentration of everything that you need to pass on and just convince your no Quinta friends who are still not quite seeing the problem yet. Just watch this. And if you have any doubts about it, research it.
Yeah, 100%. Well, I think as good a time as any to round out. Really enjoyed this one, and I hope everybody else did. Again, if you're brand new here, welcome to the channel. Make sure you give that like button a smash if you enjoyed it, and if you're returning, ditto for that. Be sure, please, please, please do take the initiative to make sure you're learning self-custody and you're learning all the Bitcoin tools to keep yourself sovereign. At the end of every show, I play a little clip, once again, encouraging you guys to use those tools. Nathan, thanks for being here. Everybody else, thanks for being here. I'm Ben. That's Nathan. And this has been your weekly session. See you guys again soon.
Hey you, yes, you watching the Bitcoin price movements and the latest exciting news. It's awesome to stay informed, but the real power of Bitcoin comes from taking control. Don't just watch, take action. Head over to btcsessions.ca/learn for free step-by-step tutorials that guide you through every major skill you need to know, plus full video playlists for deeper dives on any topic you like. And if you're ready for the ultimate fast track, scroll to the bottom and check out bitcoinmentor.io for premium one-on-one experience with my team of Bitcoin experts to ensure you get it right the first time. Don't wait. Secure your Bitcoin future today. Hit the link in the show notes or scan the QR code on the screen.
Goodbye.
Bitcoin touched a fresh all-time high above 124K last night before getting slammed over 5% this morning. So what killed the rally? Was it a hotter than expected PPI print that just torpedoed September rate cut hopes? Or was it a bombshell interview with the Treasury Secretary walking back months of bullish talk on the strategic Bitcoin reserve? We'll get to the bottom of it, and stick around till the end because we'll look at Adam Back's new take on the 4-year cycle, and it might change the way you think about where we really are in this Bitcoin bull market. Welcome to No Second Best, the show where conviction meets reality and reality points straight to Bitcoin. I'm your host Hurley. Now let's get into it. Bitcoin teased the big breakout once again, rising up to a new all-time high of over 124K last night, before crashing back down over 5% this morning. At the time of recording, the price is consolidating around 118K.
Gross.
So what kneecapped this latest rally? It seems a few things were in play, so let's dissect them one by one. Firstly, US Producer Price Index, or PPI, came in much hotter than expected this morning at 3.7%, signaling rising producer costs that could foreshadow broader inflation. Prior to this data, the markets had predicted the chances of Fed interest rate cuts in September at nearly 100%. Now, those forecasts will have to be sharply redrawn as the threat of sticky inflation looks to vindicate Fed Chair Powell and sticks a thorn in the side of President Trump, who's been advocating for large interest rate cuts since being elected. Now, whether we see elevated inflation prints again at the next Fed meeting or not is still up in the air. But it looks like the market took this to be short-term bearish news, as a sell-off that started in the early morning accelerated after the PPI print. And of course, we got a fresh flush of long liquidations, which saw over $100 billion wiped out of the broader crypto industry. Another factor in the legs being cut out of this rally was an interview that aired live this morning on Fox Business with Treasury Secretary Scott Bessent.
Mr. Secretary, you're also pretty much revaluing gold, right? The Treasury has pegged the 261.5 million ounces of gold at $42.22 an ounce from a price set back in 1973 for $11 billion. If you look at current market prices of gold, you're talking about a number way above $750 billion. What's the story on gold?
We've got the large gold holding. I doubt we're going to revalue it, but we are going to keep it there, again, as a store of value for the American people. We've also started to get into the 21st century, a Bitcoin strategic reserve. We're not going to be buying that, but we are going to use confiscated assets and continue to build that up. We're going to stop selling that. I believe that Bitcoin reserve at today's prices is somewhere between 15 and 20 billion.
So definitely some very interesting comments from Bessent. He seems to have gone back on some things previously talked about by the administration. Firstly, he made it clear that it is unlikely that the US Treasury revalues their gold holdings, which was something that was brought forward by the administration on numerous occasions as a potential avenue for increased revenue that could also be used to add to their Bitcoin holdings. In fact, just last week, the Fed published an article citing the possible avenue of revaluing gold and even added in a footnote Senator Cynthia Lummis's Bitcoin bill as a framework for using some of the proceeds to add to their Bitcoin holdings. More notably, Bessent said that they do not plan on buying more Bitcoin for the reserve, which along with revaluing their gold holdings was a major talking point of Bo Hines, the former executive director of Trump's Council on Digital Assets. Bo Hines stepped down from his position over the weekend, and now Bessent makes clear that they do not plan on buying more Bitcoin for the reserve. It's unclear if the two are linked, but it really makes you wonder what went on behind the scenes. The third notable comment Bessent made was the US government's current Bitcoin holdings. He said they hold roughly $15 to $20 billion worth, which when you do the math is quite a bit less than what was previously thought. $15 billion worth at today's prices would be around 125,000 Bitcoin, and $20 billion worth would be around 175,000 Bitcoin, both amounts being quite a bit lower than the previously reported total of over 200,000 coins. So whether this means the outgoing administration sold a chunk of their holdings on the way out, or if Bessent is just spitballing approximate totals, again, it's unclear. What is clear is that these comments come across as a bit of a gut punch to the hype surrounding the strategic Bitcoin reserve this administration has flaunted over the last 6 months. But let's zoom out for a second. Neither the Bitcoin thesis nor even this current bull run has relied on the US government buying Bitcoin. Scott Bessent, as the Treasury Secretary, is a US debt salesman first and foremost. Any sizable Bitcoin purchase would be a clear admission that the US fiscal outlook is in very real danger, so it's always been a very low probability. This is just another stark reminder to always follow the incentives, and never take what politicians say as lip service at face value. The incentives for this administration and their pro-crypto policy has always been about votes, donations, and extending dollar dominance through stablecoins. The US government aping into Bitcoin now would be a signal to rival nations around the world that the US fiscal situation is worse than anyone previously imagined, which would further hurt confidence in the dollar as the world's reserve currency. This aligns with what I've generally thought since the start of this year. This part of Bitcoin's adoption is about corporate and institutional adoption. We are, however, being teased in this cycle with what I think will be the next big narrative towards the end of the decade and into the 2030s, which is nation-state adoption. So the people that are panic selling because the US government said on national TV that they won't be pumping your bags don't really understand Bitcoin. Bitcoin is an exit from a monetary system that's engineered for debasement, for political expediency, and for transferring wealth from savers to debtors. Whether the US Treasury owns 200,000 coins or zero doesn't change the fact that the 21 million supply is fixed, that every year your dollars are worth less and less, and that over time, capital will flow toward the one asset no central banker can print. Government support comes and goes with the political winds. The Bitcoin network doesn't care. It keeps producing blocks roughly every 10 minutes. And it keeps rewarding those with the foresight to opt out now before the global scramble really begins. So yes, follow the incentives. But more importantly, remember the one incentive that never changes, the desire to protect your purchasing power. That's why we're here. That's why we stack. And that's why this game is only just beginning. And if you want help making that transition the right way, with a dedicated advisor, deep research, custom strategy, and direct access to Bitcoin experts, that's exactly what we do at Swan Private. Whether you're a high net worth individual, a corporate treasury, or just someone who wants to move serious capital into Bitcoin with professional guidance, Swan Private is your partner for generational wealth. Visit swan.com/private to learn more. And speaking of the long game, join us in Washington, D.C. this September for BTC in D.C. This is more than just a conference. It's where Bitcoin meets policy, where the builders, thinkers, and decision makers shaping Bitcoin's future will be in the room together. Visit btcindc.com and use promo code SWAN for 10% off tickets. And finally, a quick shout out to Mara, the world's largest publicly traded Bitcoin miner, for supporting this show and for helping make Bitcoin the world's most decentralized and secure monetary network. Now, before we close for today, I want to bring a fresh perspective on the 4-year cycle debate that we've covered a lot on this channel. Bitcoin mega OG, Adam Back, who many of you know as the godfather of proof of work, and who was also cited directly in Satoshi's Bitcoin white paper, well, he posted a new way to look at the 4-year Bitcoin cycle. Adam Back proposes a novel way to look at cycle start and end dates. Most people look at cycles either by measuring the cycle peak to peak or the bottom to peak. In this view, cycle tops are the highest price point between two halving dates. This would mean that the last cycle top wasn't November 2021, but March 2024 when the price hit 73K. In his model, this cycle end estimate would be around March 2028. He also acknowledges that some argue the top that counted was November 2021 at 69K, and that a 4-year interval would be November 2025, which is only 3 months from now. But he adds, quote, "Does it feel like the bull market will fade in 3 months? Who knows? Personally, I don't think so. Dips aside, I'd expect more all-time highs later." User Brett illustrated this thesis in chart form, and as you can see, using this example, we can theoretically still have large corrections or even a full-on bear market. Back is just saying that we will likely see more all-time highs before the next halving in 2028. Just some food for thought as we enter uncharted territory in terms of Bitcoin cycle dynamics. Whatever you believe, one thing is for sure. This is a very unprecedented bull market for Bitcoin. And so it's fun to extrapolate and try to predict what the next few months and years will look like. I'll leave you with this chart, which shows that over the past 3 years, the S&P 500 is down 80% when priced in Bitcoin. Just another example that there is no second best. But I'd love to hear what you think of back cycle theory. And do you think Scott Bessent just put an axe in the strategic Bitcoin reserve? And will the hot PPI print cause sticky inflation and delay Fed rate cuts even further? Let me know in the comments. Don't forget to like this video, share it with a friend, and subscribe to the Swan Bitcoin channel for more signal every single day. Thanks for watching, and remember, there is no second best money.
Here we go.
Let's talk MSTR. It is not a fun day to be talking MSTR. I can't believe I'm doing 4 videos in 4 days. Someone in my group said earlier, MSTR fatigue. They're feeling MSTR fatigue, as am I. I think that's the perfect way of describing how a bunch of us are feeling. Anyways, first we're going to talk context for Bitcoin. I'm going to do it really quickly because this is an MSTR focused video. But Bitcoin behind me, this is a linear chart, and that green channel has contained Bitcoin's price action for 8 years. And we're currently consolidating above it. That is very bullish, okay? We need to establish context first. Here is the Bitcoin log scale chart. If you're new here, I would watch some of my previous content to understand the relevance of this chart and those white lines. Those white lines define the levels on the Bitcoin log scale chart. When we break through to a new level, you get the biggest expansive move that essentially reliably defines the top, except for in 2017 there, defines the top of the next level. So you're gonna get a big move if you can stay above. And the reason I say stay above is because, well, we already broke through the first week of July, and now we're just consolidating above here on the log chart. So on the green chart, the level that we're essentially trying to stay above this week is about 116,900. On the log chart, it is about 118,000. We've already got 4 weekly closes above it, working on the 5th now. It's only a matter of time, if you ask me, till Bitcoin explodes higher. The question is, how low are we going to go before it finally gets started? You know, because so far, and I'm re-recording this video because I like to try to do as good a job as I can for you guys on these YouTube videos. How hard has it felt to hold Bitcoin recently? Is it just me? It's felt extremely easy. Now, MSTR, on the other hand, has not been fun to hold. Bitcoin's been super easy, though. So, I don't know. Like, I can't tell if they're going to try to inflict some pain on the Bitcoin holders. Like, maybe even something as simple as just connecting some of the lines here, not making this a super long line, sorry. Maybe just extending this out, and then they drop it down to like next week, like 111K. Do I think that's gonna happen? Not necessarily, but if it happened, like, would it finally get rid of enough leverage and they can say, okay, now we can go higher, we can go to 200K. I think we're going at least 200K. And if you think that sounds silly, again, just check the log chart and look at all of the previous breakouts. They have been extremely significant. Just for reference, because I've done this enough recently, I'm just going to measure the last log scale breakout. Price ran 270% in 21 weeks, okay? If we run 100%, it's taken us to 232K because the breakout was at 116,000. So just for reference, guys, unless you really think this time's going to be different, in which case, you know, place your chips and good luck. I want to talk about MSTR now. I want to talk about, I don't even know what order to do this, man. I have so many charts prepared. I'm going to try to breeze through it. The last one took a little bit longer than normal. Let's say, okay, this is me trying to think, did we bottom today? Like, did we triple bottom here around this 365 level? Well, you call it triple bottom on the weekly chart, at least. Like 3 weeks in a row, 365.
All right, we found the fountain again.
Call that a triple bottom. Well, what I was essentially looking at was the RSI here, just to share kind of my thoughts. Hopefully you guys can see it pretty well. I'll try not to hide it behind me. Down here, now I flipped it back to daily candles. When MSTR, and MSTR does seem to like kind of set level. Actually, let's zoom out really quickly. And let me just show you guys what MSTR is essentially doing, okay? It had a base here. Then it had a base here. Then it had a base here. Then you could argue it had a base here, had a base here. And now essentially what we're trying to do is establish a new base up here. Is this making sense? Like, hopefully, I mean, I know I just drew some horizontal lines on a chart, but like, do you see what I see here? These are weekly candles, high time frame. Every close above the previous level is significant, okay? What we're on the cusp of doing is dropping down from, you know, this level right here back down to this level, which would not be fun, okay? I'm not saying that I think we're going to do that, but, you know, we need to hold 365, which is crazy to be saying right now. I didn't think I'd be saying that. Also, do you notice this pattern from before with the white line that I drew here and how it's like knock up against it, consolidate, knock up against it, consolidate, breakthrough, okay? We are currently on the knock up against it, down, fake out, okay? We got above it, now we're back down. Who knows how much more time we spend before hopefully we break through. You know, it's similarities in these patterns. I've seen people say the price action on Bitcoin looks like 2021 and the price action on MSTR looks like 2021. The reason, guys, and the reason I have like, I literally have a 1 hour video on my channel. I have a 30-minute video just from 2 days ago on my channel. I've got a 15-minute video from yesterday. Like, you can't just do one damn screenshot. That's why if you're just going to Twitter, like, you're missing so much context. Oh, look, one screenshot, a couple bars look similar. Yeah, guys, patterns repeat all the time. Not just like Bitcoin patterns to Bitcoin. but like literally on MSTR, like different equities, across different equities, you see a lot of similar patterns. There's a guy called Stock Pattern Pro. Literally follow him. He does great work, and he'll show you how many patterns repeat. Anyways, I just wanted to show that right here, okay, that line, when we first hit this bottom, okay, now I want to look at the RSI real quick with you. When we first got to the bottom, the RSI was down near 30, okay? The next time we got to the bottom, the RSI was up at 40 or closer to 40, okay? What I'm really referring to, if you guys can see it, is down here, okay? So it's like the first time you get here at this bottom around 231, RSI's in the shitter, okay? We're cursing today. It's one of those days. The next time we're down there, RSI is pretty significantly higher, okay? RSI divergence, kind of showing us, hey, it wants to go up. And look what played out afterwards, okay? And then we did actually revisit it again. And guess what happened the next time? Let's just call it, 1, 2, 3 for simplicity. Well, 1 was RSI 28, 2 was RSI 36, and 3 was RSI 37, basically. Something like that. Okay, I'm doing a broad stroke here. I'm doing it on the fly. I don't feel like re-recording this again. You guys seeing the divergences here? And then what happened? Boom. We explode higher, okay? Over here, potentially, if this is the bottom, 365 again, you seeing what I'm seeing right here? First time we're down here, RSI 35. Next time we're down here, RSI 40. Not bad, right? I mean, indicative of a potential upswing. And by the way, like, I've got a million ways of looking at the overhead resistances that we should theoretically explode when we break through them. This one on this linear chart up here is what I'm looking at. In terms of, like, let's say next week, where it's going to be around $410. My guess is that, because there's definitely other resistances between, what we're looking at here, but my guess is that, when we get up here, we do bounce down and then explode through. So I think that will act as resistance the next time we touch it. Okay, now I said, did we bottom? Well, there's other ways to look at this, and I didn't want this video to become a long video, but it's inevitably going to. I apologize. Do you guys see these pink lines here? And I'm re-recording this part. I wish I didn't have to, but let's do it. First, this is MSTR on the log scale. These white lines on the MSTR log chart have defined the breakouts. Don't trust me. Go look for yourself, okay? We break above it. MSTR runs 935% in 26 weeks. Here, we break above it. Well, first there was a fake out. If you survive that, MSTR runs 446% in 22 weeks. Next time, okay, you break above, you backtest, boom, gone. 243% in 7 weeks, okay? We had a recent fake out. You've heard me talk about that, right? Right here. Well, we had the resistance, you had the breakout, you had the fake out, and now we're waiting for the explosion. This may not look like much, but guys, it's a log scale chart. That is 600. These expansion lines, if they're angled upwards, I just call them expansion lines. If they're angled down, I call them decline lines. The white decline lines have defined the breakouts. What is the purpose of these pink expansion lines? I'm re-recording this. I really don't want to be re-recording this, but here we go. Let's go. This might be the shittiest DD you ever see me do, but I swear it's not. If you just see what I'm seeing, and I'm doing my best to kind of zoom in and show you and talk you through it, okay? This expansion angle, every single pink line is the exact same expansion angle. If I try to like zoom in and show you how many touch points there are on these, and I'm sure you could add more to this chart. I'm just trying to show you a few relevant ones. The reason I'm sharing this is because, well, you do get a lot of, resistances. Maybe that's not a good resistance, kind of knife through it, then used it as support, boom, broke through, resistance, boom, flipped it to, it did flip it to support. You can see right there, even these are weekly bars too, okay? So I'm just trying to show you guys, these are relevant, you know what I mean? This next one here that you see, I just tried to highlight, essentially it gapped up above it. So the gap started at that, okay? And then it used it as essentially support on that candle before essentially the next week. It kind of lost it, back test resistance. I'm just trying to show you guys, these are relevant. They're not random, okay? And then essentially it came back into play over here where ultimately this last leg up in the 2024 November run used that line, okay? Now I want to show you guys something because we just talked about did we bottom today? And I'm talking about another scenario now. It's not a fun scenario. Anybody who's still watching, thank you. It's not going to be fun though, okay? You've been warned. You have been warned. Earmuffs, okay? So what I did is I took the same expansion line. Essentially, this wasn't here on my chart, right? And what I did is I took one of the previous ones because they're all the same angle, so I copy paste them and I put it right there, okay? And then I got to make sure that it is extended both directions. And then I said, you know what? MSTR has been around for like almost 30 years now. Let's go all the way back here to the inception of MSTR, to the .com bubble, okay? Where MSTR was doing its thing. killing it, and then ultimately declines some insane amount. I heard it was like the most that any company that actually survived declined, something like that. Now, what do you notice? I don't see too many touch points here. This is just me connecting today as the bottom, and I'm looking back in time. So I actually kind of see, like if it's knifing through the body of the candle, I don't count that. You basically had this body of that candle, basically that week opened up. Wait, these are weeks. These are weekly candles. That weekly candle opened on this line. This one ended on that line. Here you had basically the same thing, 2 different weeks there. You had overhead resistance, body of that candle. So this could be it. Like this could actually work if we bottom today. But how could you not wonder, right? Am I the only one watching this that's wondering if we just adjust this thing down literally to the weak MSTR, MicroStrategy, now known as strategy, back when it was strategy, when it IPO'd right here, you know, how could you not wonder what that would look like? Well, I almost wish I didn't do this, but now we're all in this together. Let's look. Follow it all the way out, okay? And if you think this stuff's random and this is shitty DD, all I would invite you to do is jump in the charts and look for yourself. You can literally backtest this on any equity, any asset class. Don't take me at my word. I'm a literal talking head on the screen. Also, disclosure, I own MSTR, I own Bitcoin. I'm not a financial advisor. This is not financial advice. Got it out the way. Almost forgot I had to do it again because I am re-recording this video, trying to make it better, trying to make it expedited. If we do it this way, guys, and we look next week, MSTR would essentially bottom around 338. We get a candle like that. It would not be fun, but also, I mean, just check the touch points here. They do kind of line up a little bit. I mean, you could argue that the other one lined up better. I would not necessarily disagree, but this one also does theoretically line up decently well itself. It also aligns with the inception of MSTR on the stock market as a publicly traded company. 338, well, what would that look like? The one thing I want to talk about is what it would look like in terms of the red expansion channel here. But before I do that, I want to just make a quick point. I thought I had a fresh MSTR chart somewhere. I guess it's this one. I want to make a quick point here about essentially MSTR as an equity and its expansion angle, basically the maturity of this equity, okay? As represented by the expansion angle. Okay, MSTR basically, these are daily candles. I'm going to switch it to weekly real quick, okay? So that's 2000. Ever since 2000, literally for over a decade, guys, it was basically flat. Like, do you see behind me here? If I just hide where it spiked after announcing the Bitcoin strategy, it's basically flat. It's doing nothing. It's not keeping pace with inflation would be my guess, okay? That's the first expansion angle that I'm going to keep on this chart. The next one, though, after they start doing its Bitcoin thing, starts to expand like that. It's getting interesting now, right? The next one that I would draw, and these are my red channels. These are my most aggressive expansion angles as equities and asset classes mature. Boom. Okay. Then it becomes this. Do you see what's happening? And honestly, the reason I think Bitcoin exists is to take pressure off of like the stock market and other things where the bubbles are becoming too obvious, and normal Americans, like I'm sure most people watching this video, if not all, are feeling it in their wallets. Well, we can't have it too obvious that the stock market grows at like a 30% clip every year. So let's inflate other bubbles, basically take pressure off the stock market. Because as you know, or maybe you didn't know, the people with the wealth, which by the way, wealth to me is a relative measure because money's not real because it's not backed by anything, right? So it's just a relative measure. The wealthy people are inflating their, net worths by buying assets, not by sitting with number in database representative of US dollar. What's a US dollar? In the bank, you know what I mean? Where it's getting wrecked by inflation, they're buying assets. The concept of inflating new bubbles like a crypto bubble is not a new thing. Anyways, expansion angle, boom. Gotta get it off my soapbox. Now this is the next one, okay? You guys see what we're doing here? We just keep getting more and more aggressive with these expansion angles. Hopefully this doesn't look like the world's second shittiest DD after that previous chart, but I'm trying to talk you through the logic. Like, this is not something that I thought up, by the way. This is literally how it works as these asset classes mature. So that last channel I just put on is the most aggressive one. I will delete the rest, okay? If today was the bottom, then we were setting, and I hate these types of days, man. I hate these types of days where we are setting the expansion angle of MSTR in real time. Like literally, we just connected the bottoms again, and we were down here at 365. And what it's doing is it's essentially capping how high MSTR is going to go, like in this bull run, if you ask me. Like, yes, it's capable of breaking above these red channels, but it starts to become more of a stretch when you say it's going to do that. It doesn't mean it can't do it. It does it every single time in the past. So it's not like it can't. It will ultimately eventually do it. But anyways, you guys get what I'm talking about here. So this is the current expansion angle of MSTR if we bottom today. Now, I like to just go hunting for previous price action and looking for like connecting the wicks to get a feel, is this an actual representation of how MSTR has been moving recently? And you could make an argument that, you know, just by looking at adjusting the tops of this and looking at how many wicks it connects, that yeah, this could be it, you know? I was also taking another view here, here on the J's chart, and I put in a big ugly candle next week, essentially down to 338. I adjusted the parabola and I said, what would this look like? You know, and that's basically all I did, thought experiment. And this red channel here, and it's daily bars, but if you kind of adjust it down, I could also see how we are stacking. I mean, maybe it's not fair to do weekly on one and daily on the other, okay? So I'll switch this to weekly as well. But I mean, I can see a lot of touch points all in here. And this is with 338. This previous one that we had just looked at was with 365, as saying that we bottom today, we can go higher, okay? But I need everybody to just at least hear me out or see what I'm seeing with 338. Move this down again. You're getting more touch points. If we connect, essentially, this is the one that really had me wondering. Because at this angle, too, you're getting all the bottoms here. You're getting kind of, hey, we don't want to break below it. It's kind of acting as that line of previous support for these moves. Then you break in. Then it, boom, provides overhead resistance. You break down below it. Breaks above it. Comes into play again here. Comes into play again here. We fell short of it here with the 456. Anyways, just talking through the scenarios, guys. Not meant to be treated as an exact science. 438 to me is also below the 200-day. And it would just be so insane to do that again to us for seemingly no reason, unless there's some unforeseen black swan event on the horizon that I don't know about. You know what I mean? Like the tariff sell-off here knifed through that 200-day. But this is a weekly candle, and I mean, literally, this week must have been hectic, but we ended up closing 3% above the 200-day. But we ended up trading that week 7% below the 200-day. You know what I mean? That must have been a crazy week. So I can't complain about MSTR fatigue because I wasn't even really trading MSTR. I was just in Bitcoin. Anyways, guys, in terms of what you might want to know, okay? Sorry that I'm doing this at the end of the video. Hey, it's free. Come on. Can you blame me? Right here, that would be the first support I would want to hold. That's at about 365, as you could probably guess. If I do a quick fib, retrace, top to bottom, essentially the next fib level beneath us is at like 350, and that's basically almost coinciding with the 200-day. So perhaps we would wick just below the 200-day, get to 350, or the 200-day would hold. It's at about 352 right now. The 338 concept is literally just based on this alone on the log chart and the significance of those lines. It would essentially be an interesting way of like paying homage to the genesis of MSTR via the log chart and that expansion line before we essentially blast it off into the stratosphere. Just having fun with an idea there. What I think ultimately happens, guys, whether or not we go to 338, like if 338 to me, it's like, oh no, do we give up? No. Below 338, do we? Yeah, probably. But I think essentially, by the way, someone in my group told me max pain for MSTR options expiration tomorrow's 390. Well, it would be great to get back up to the 0.5 fib at 387, 388. Okay, that would be amazing. Anything above that, I would basically copy paste my weekly forecast for this week to next week and say, okay, well, we need to get 424 back in play, the 0.618 fib. Okay, get up there. That doesn't mean that we can't wick above it. You know, we could trade above it, but I imagine the weekly candle would close right around there, guys. These Fibonacci levels are significant. After that, what's in play? 456. I imagine we could even trade as high as 476. That's the 0.786 fib. The weekly candle, my best guess would be we'd close back at 456 though, and then we would just be level jumping. I talked about this concept in my video yesterday. Then we would want to start stacking up because we haven't spent that much time around this 786 fib. We don't have to. We do not have to, but you tend to, right? To me, that's a healthy move. And then once we get above the previous all-time high, I talked about how, you know, we'll have the channel resistances up here. We'll have the 600 kind of hidden resistance here on the log chart right up here that not many people are going to be talking about. If we can get above this resistance, flip it to support, and blast off, then I guess the next thing, I'm getting ahead of myself here, but it's kind of exciting after all the bearish news. The next overhead resistance would be this red channel, and depending on when we get there, it'll be like 650. Above that, it's just over. You know what I mean? Above that, we're all rich. If you're irresponsibly long MSTR like I am, how much would it be worth to you to have somebody who's in the charts daily looking for the perfect entry for shares and options, and eventually looking to see if we might have topped and it's time to take profits. If this is something that interests you, I want to invite you to check out my MSTR Generational Wealth community linked below.
Lost it already. Oh my gosh. Was that my arrows hit him? Is that what happened? I didn't think I swung at him. I'm gonna have to check that out again. Well, I guess this is just a gold farm run. Hopefully we can find our golden powder. Lame. Yeah, the one tiny little piece of gold must have popped into multiple pieces of gold. And then a bunch of pilfers started coming up out of the floor at me as I was trying to do combat. I was thinking it was just the one pilfer and I wouldn't have to worry about it. Well, that's annoying. Dang it. Alright, I'm gonna take a very quick break. I'll be right back. Turn the next one on.
What are the positives with stablecoins, and what are the concerns that we should have, if any?
We can hate on stablecoins, but I think that hate is sort of a first world perspective because you probably have a bank account, right, Eric?
Yes.
So you're kind of speaking about this topic from a position of power and luxury where a lot of people just don't have a bank account, but they want dollars. So what do you do in that case?
You can't just flip off a light switch and turn the dollar off and turn a Bitcoin standard on. It would be absolute mayhem.
I think it's actually going to be a quick transition because...
Do you think that Bitcoin extends the life of the dollar, or do you think it's going to bring the dollar to an end quicker?
It does feel like Bitcoin is extending it by integrating with it. I think when things get bad enough, every card is on the table. Some of those cards are bad cards. It's the rolling out of a CBDC like in Europe, starting to control the internet like in the UK. And that's why I say plan accordingly.
Is it possible that the United States government is acquiring Bitcoin quietly?
I don't think it's possible. It's hard for any government to do stuff in secret. Well, things that are beneficial for the country, it's hard for them to do it in secret.
All right, Samson Mao. It's an honor to be here and have this conversation with you. How are you doing today?
Great. Great to be here with you, Eric.
Yes, well, thank you. And so I want to start this out with a tweet that you just put up the other day in response to Brian Armstrong. Brian Armstrong says, if you don't believe me or don't get it, I don't have time to try to convince you. Sorry. Satoshi wrote that 15 years ago today. It took some time, but there are hundreds of millions of people that get it now. And your reply was, in the immortal words of Kurt Cobain, he's the one who likes all our pretty songs. He likes to sing along. He likes to shoot his gun, but he knows not what it means. Knows not what it means. Tell me about that. I love that, by the way.
Well, it just means that Brian doesn't get it. Like, he's quoting Satoshi scripture without understanding it whatsoever. And if you're following Brian's talking points lately on media and X, he's becoming a bit more maximalist, right? And he's talking about Bitcoin being, you know, the best asset to be created ever. And you can't really do that while you're peddling Fartcoin and other shitcoins out there nonstop, or even worse, advocating for Ethereum and talking about how great Ethereum is. It doesn't work together. And I just think he misses that completely. And I saw people responding to his Satoshi quote and saying, like, you're the one that doesn't get it. And I kind of agree. I mean, if he got it, he wouldn't have been in the place he was during the block size war, trying to co-opt Bitcoin, leading the charge of companies trying to control and corrupt it, and saying things like, you know, Bitcoin clients are like block explorers. You know, you want lots of them competing. And when he says that, he means lots of different consensus rules at play in the marketplace, as if it was consensus compatible. I don't even know how that would work. But he's never really come to God and said, you know, I messed up and I'm wrong on all these things. And he's just kind of still promoting altcoins and talking about how great Bitcoin is. And I just don't think you can do both.
Yeah, I agree with that. I struggle immensely with Brian Armstrong. He seems to be clearly a profit maxi. And you know, it's funny you bring up Fartcoin. I feel like it was maybe 2 weeks ago. I get an email from Coinbase. Fartcoin is a top mover. And it's like maddening that he's promoting all that garbage. And you know, I also think about him from time to time. I would imagine that he's saving in Bitcoin. He probably doesn't hold any Fartcoin. Yeah, so I'm curious, actually. I wasn't around during the block size wars, so I got in the end of 2017, maybe towards the end of all of that. Can you tell me about how that went down and what was your involvement in the block size wars? For somebody who wasn't there.
So I was the COO at BTC China back then, or BTCC. It's an exchange and mining pool back in the day, one of the biggest. And because we were a large part of the mining hash rate, I think at our peak we're something like 18% of the network. The core devs, Gavin Andreessen and Mike Hearn came to us and said, you know, it's time to upgrade to Bitcoin XT. And that was kind of my first foray into Bitcoin development drama. But they had kind of split off from the rest of the Bitcoin core developers, and they were pushing their own fork. They were presenting it as if it was an upgrade, and this is the next thing you have to change to. And that's kind of what pushed me down the rabbit hole to figure out exactly what was going on and what it meant and how everything worked. So that kind of escalated, I guess, when more and more actors piled on, including Brian Armstrong, on the big block side. They were trying to change the protocol and co-opt it to have bigger blocks. And I think it was the beginning of a slippery slope if you could petition and change the Bitcoin protocol for your own goals and to your own ends, especially for corporations to do so. So I think it was an important thing. And the opposition was this small block camp, which were saying you can't just change consensus rules. You can tighten them, but you can't loosen them. And that if you change something like block size, it opens the door to changing the 21 million supply limit. And of course, the small blockers won because we were right, and also because Bitcoin is incredibly hard to change. So you had effectively every big company in the space pushing for this change. And at that time, maybe Bitcoiners today don't really appreciate it, but it was like everybody trying to force a change on Bitcoin. All the big companies, Coinbase, almost every exchange, almost every mining pool and mining company. So to put it into context of today, it'd be like Coinbase with Marathon, with BlackRock, and everybody else saying, we're going to increase the Bitcoin limit to 42 million now. And saying you have no say in the matter because you're just a pleb with a Bitcoin node.
Interesting. So yeah, I was curious as you were saying that, like, what would be the incentive for them to increase the block size? How would they be able to effectively, like, if they did double the supply of Bitcoin, would they be able to do so in a way where they're the recipients of the new coins and dilute other people? Like, what's the incentive to try to co-opt it, I suppose? Like, I still don't understand how that could work.
Well, it depends on how you view all the players back then, and we'll never know their true motivations. But as I said, it's a slippery slope. It's an innocuous change saying, okay, we need to scale Bitcoin, fees are high, and we don't want fees to be high. We don't want people to pay 25 cents or $1 per Bitcoin transaction. So what do we need to do? We need to make the blocks bigger so we can have cheaper transactions. It's like Ethereum and raising the gas limits and all that. I'm not that familiar with all the inner workings of Ethereum. I don't want to be, but it's similar to that. But that opens the door for more changes, more consensus level changes to the code, like increasing the supply. And I don't know if they wouldn't have direct access. They would still need to mine it, but given that a lot of them are dominant, especially like the mining side, you had Bitmain with a lot of their sub-pools, their pool and sub-pools, they would directly benefit if that change were to happen because they would get more coins. But I mean, at that point, Bitcoin becomes like an altcoin. It's just malleable, changeable at will, and unreliable, not immutable anymore. So I think another motivation could have been that Bitcoin is stagnating, because back then you had all these alts, and they have features. Adam likes to call them feature coins. Adam Back likes to call them feature coins, but they have some interesting feature. Like Ethereum is like programmable. That's their marketing speak. I mean, technically anything is programmable, but not everything is immutable and permissionless and decentralized. So I think there was a push to make Bitcoin more relevant in comparison to things like altcoins and Ethereum. And if you go back and look at it, after Brian Armstrong lost the war and he was kind of mitigated, he went hardcore into Ethereum because that was what he wanted. He wanted something he could change all the time and be in control of and dictate a roadmap too, and have this, it's high-tech tech story backing him.
Yeah, that all makes sense. I'm also wondering, how did you come to the conclusion that the small block was better? Because it does seem logical, like, hey, we should scale this thing, we should increase the block size. I think Hal Finney made a post very early on saying that he thought we would end up having Bitcoin banks, and he kind of, I forget the specifics around the post, but he indicated an understanding that you would have this scale in layers. But during the block size wars, how did you come to that conclusion that the small block was the better way to go?
Well, actually, I would credit Adam Back. So at the very start, I was a bit skeptical of Gavin and Mike Hearn, but I also thought maybe it is a good idea to increase the block size. So there's an interview where, I think it's Bitcoin Magazine, I did say, yeah, it's good to have bigger blocks because fees will be lower and it'll be better for Bitcoin's growth. But again, a lot of people fell into that trap. I think Wences too, he was a big blocker and he repented later on and acknowledged it. But I think back then, the understanding of how Bitcoin worked was not as readily available and as prevalent as it is today. Like, you can get all of these resources at your fingertip. But back then, there was not a lot of communication. There were not a lot of published sources out there about how these things work. We hadn't gone through the block size war, so there was no block size war book by Johnny Beer, and we were going through a learning process. So on the surface, it sounds logical, and I think a lot of people fell into that trap, myself included at first, thinking, yeah, it's probably good that we increase adoption by lowering the fees. But when I spoke with Adam, I think we had a 3-hour conversation. He kind of went through all the intricacies of why it doesn't really work, because then you have to change all the time if you want to lower the fees, and also fees are a part of the system. It's how Bitcoin works. Like, if Bitcoin becomes more valuable, it'll cost more to transact Bitcoin for a number of reasons. But the most important thing is, like, understanding that this is a consensus rule change and how consensus is enforced by the whole network. You can't arbitrarily change it, and by changing it, you would effectively create a fork and split into 2 coins. And that's kind of what happened with Bitcoin Cash or Bcash.
Yeah, as something comes to mind that Saylor said, I've heard him say a few times, he's like, just don't change it. Can we just not change it? Let's keep it the way it is.
iCoin Technology has released a slick new hardware wallet. It looks like a mini iPhone with a high-res 3-inch touchscreen and camera on it. The device has no Wi-Fi, no cellular connection, and no GPS. It is an air-gapped hardware wallet which uses QR codes and a camera to communicate with the Bitcoin network. It has a built-in camera which is required for air-gap operation, and it has an optional Bluetooth compatibility. It's really a brand new user interface and user experience for a Bitcoin hardware wallet. iCoin makes self-custody accessible, easy to use, and non-intimidating. It even comes with an optional custom iCoin thermal printer, so you can print out the private key and its associated QR code when you're setting up the wallet. This makes setup quick and simple. Also, it is easy to restore the wallet just by reading the seed phrase QR code with the wallet camera. And as we always talk about on this show, the only way you can truly own your Bitcoin is by having it in self-custody. So you need a device like the iCoin wallet to truly own your Bitcoin. So go to icointechnology.com/breedlove today for 30% off the purchase of this sleek new hardware wallet. Again, that's icointechnology.com/breedlove. If you're anything like me, you understand that Bitcoin is something we can use every day to connect, to collaborate, and to build stronger, freer communities. As true Bitcoiners, you all know we are each responsible for onboarding more Bitcoiners. That's why I chose to partner with Cowbolt, an expense splitting app that settles in Bitcoin. It can be as simple as splitting a dinner bill. Your friend covers dinner and you reimburse them, but you send it back to him in Bitcoin. Now your friend has their first sats, and as I always say, where your money goes, the mind follows. By using Cowbolt to get Bitcoin into the hands of your friends and family, you can help us orange pill the world. Cowbolt is built to let you split costs, share expenses, and settle instantly, while always keeping full control of your keys. Cowbolt is simple, social, non-custodial, exactly how Bitcoin was meant to be used. If you're serious about Bitcoin, it's time to act like it. Download Cowbolt today on iOS or Android. To learn more, go to cowbolt.com. Again, that's Cowbolt, COWBOLT.com.
So on that note, in order for Bitcoin to scale, we have Lightning. You're working on Aqua. Do you think Lightning has a future? What are the challenges with Lightning, and what's the difference between Lightning and Aqua? I'm actually rather unfamiliar with that.
So Aqua is a liquid wallet at its base, but we support Lightning transactions by using atomic swaps through our partner Bolt. So when you receive Lightning into your Aqua wallet, it's auto-swapped into liquid Bitcoin. And there's a number of reasons why that's beneficial, because to use Lightning, you actually have to maintain channels and backup channels, assuming you're using Lightning, non-custodially. A lot of people use custodial Lightning wallets, and that's fine because it's easy to use and you can do really cheap transactions of sending one sat to somebody, which is cool.
Like my Strike account, essentially.
Well, kind of, yeah. But if you're using it, like running it yourself, you have to maintain the channels, back them up, open channels, maintain liquidity, and that's a lot of work. And it also impacts your ability to transact because you have to be able to route the right amount. You have to have enough liquidity in your channels in the direction you're trying to send to do that. And this is where it starts getting complicated and people start to glaze over their eyes. But Aqua abstracts all of that away because we swap to something stable like liquid Bitcoin, and we swap out of liquid Bitcoin there. So there's no need to deal with liquidity. All of that complexity is offloaded to Bolts, which is kind of the swap provider for that. So it just makes Lightning work. And there's a small fee when you swap into liquid and a small fee when you swap out of liquid. But that's sort of mitigated because if you were to open channels and buy liquidity, like I think Phoenix Wallet sells you liquidity for 1%, then you're effectively paying for it anyways. And I think it took some time for people to understand that the model is basically you pay up front in some of these other wallets, whereas with Aqua, you're paying a la carte. You're paying a small fee for every swap in and swap out of liquid to Lightning. But if you're doing bigger transactions, like you're paying for groceries, gas, or something like that, then it doesn't really matter because you can net it out, and it's about the same as paying up front for opening up a $1,000 channel and paying a 1% fee versus paying 10, 20 cents for a couple of big swap ins and swap outs.
Yeah, that all makes sense. Is Aqua open source like Lightning is?
It's open source. Like Aqua is a wallet, so it's built on Liquid. Liquid is open source. Aqua is open source. Liquid is a federated model, and it's about 60 or 70 companies now operating this network. So a lot of Bitcoin companies like Bull Bitcoin, Bitfinex, us, SideSwap, ton of others, and everyone's doing different things on Liquid. You have companies like Stoker doing tokenization on Liquid, tokenizing stocks like MicroStrategy and Capital B. So a lot of different things you can do on the Liquid sidechain, but our focus is using it for payments and using it in tandem with Lightning. But Lightning has a lot of problems in and of itself, not just the complexity that I outlined before, but also the fact that you have to tie up capital. So Lightning has evolved a bit, I think, from the original vision, which is everyone would run a Lightning node on top of their Bitcoin node, and everyone would open channels themselves, to more of something like an interop layer to many different things. Like we are a Liquid-based wallet, but you could have an eCash wallet. What's one that's popular? Cashew, and that's a Chaumian mint, and that's connected over Lightning too. So you're swapping in from Lightning to the asset of the mint, and then you swap out again. But it's almost like Lightning connects everything. You can even connect to other sidechains too, like not just Liquid, but another sidechain. So it's evolved into this interoperability layer.
Interesting. I like that, and that was a great explanation. And I love building things on Bitcoin. The fact that that's happening, I think, is really important. My issue with altcoins, generally speaking, is the value proposition, in my humble opinion, is entirely flawed if it's not built on something that's immutable. It seems like all these altcoins are an extension of the broken fiat world that we have. And one of my favorite quotes of yours is altcoins have natural sellers and Bitcoin has natural buyers. I really like that. And as far as, you know, lightning and block size, I'm curious what your thoughts are on core versus knots and ordinals. Because personally, I think at times, like, I'm a free market maximalist. I think that you should be able to create and try to sell whatever you want. But then I'm a little conflicted internally because I think, like, wait, we have an opportunity to change the direction of our civilization. And it seems to be really important. Can we not draw monkeys or dick pics or whatever crazy shit that we are on the blockchain? And how does the ordinals affect the decentralized element? How many people can run a node? Do we have blockchain bloat issues? So yeah, what are your thoughts on ordinals and core versus knots?
Well, it's a complicated topic. I don't know. That's like an hour-long or 2-hour conversation in and of itself. But I'm not a fan of ordinals. I mean, if you want to do ordinals, go for it. You can inscribe things on Bitcoin. But you have to understand that the whole protocol is not a part of Bitcoin. It's some other client that's referencing and pointing to Bitcoin. And ordinals is not even new. I mean, it's sort of a copy of Counterparty, XCP. Like, it's an old thing where you're kind of doing color coins or tokens on Bitcoin. But it is a separate thing of it in and of itself. So I'm not a fan of ordinals. I don't believe in rare sats. I mean, you're just arbitrarily counting a number of a sat in a UTXO and tracking it through. But every time you create a new UTXO, you're actually destroying it. So you're just kind of tracking in your own head and saying this is that same sat through all these transactions, but it's not the same sat. So I guess that's where it all breaks down. But I mean, ordinals open up a bigger can of worms in that we've reached this sort of point in which we're arguing about spam on Bitcoin. And ordinarily, I would agree that you can't really spam Bitcoin. As long as you're paying a fee, then it's a transaction. But it gets more complicated because Bitcoin Core has seemingly started removing roadblocks to spam. So this is where I started getting more vocal about it, because they're removing things in the name of standardization and for pure logic. But there are psychological barriers. Like, if you limit the return, then you have to go out of band. And there are additional costs and risks to a miner to take these out of band transactions.
There we
and
go.
I don't think they're really factoring that in. They're only looking at things from a very
Oh
academic
shoot, I was gonna
lens
use the
of,
biscuits.
you know, can it be done? Okay, it can be done, therefore we should allow it. But I don't think that's the right mindset to deal with things like spam. Like, there are natural things that have been built into Bitcoin to stymie and deny spam. And those things have just been eroded gradually, bit by bit, by the current Bitcoin Core developers. So I think Knots is a great alternative, and I think people should use Knots if they disagree with Bitcoin Core. The other alternative is, of course, to not upgrade to Bitcoin, later Bitcoin Core versions, and stick with, 2.9. But yeah, it's a very complex topic.
Yeah. Gosh, I have a lot of questions about that specifically, but we'll jump ahead for the sake of time.
We could do another pod later.
I know.
Just on all this.
Yeah, that's a fun one. I've thought a lot about it. I've had a couple good conversations, but I haven't had the opportunity to pick the brain of somebody like you on that one.
Forget multivitamins and other supplements. Animal organs are the most nutrient-dense foods on the planet. You can get 100 times more nutrients from organs than you can from muscle meats. But the problem with eating organs is that they are difficult to find in stores, they are difficult to prepare, and even when they are prepared well, they often don't taste great. Thankfully, Heart and Soil Supplements has made consuming organ meats so much easier by providing powderized organs in capsule form. Organ meats include everything your body needs to thrive: vitamins, minerals, peptides, proteins, and growth factors. This is why organ meats were the most prized foods for our ancestors. Fortunately for us, Heart and Soil makes these treasured foods easily accessible. So go to heartandsoil.co today and use discount code BREEDLOVE to get started on your journey to optimal health and vitality. Again, that's heartandsoil.co, discount code BREEDLOVE. Would you rather have 1 Bitcoin today or 2 Bitcoin a few years from now? Bitcoin mining is a tried and true strategy for accumulating Bitcoin. Over a 2 to 4 year time frame, successful miners have consistently accumulated more Bitcoin than they otherwise would with a traditional dollar cost average strategy. Blockware Mining as a service enables you to start mining Bitcoin from your laptop. Blockware handles everything from securing the miners to sourcing low-cost power to configuring the mining pool. They do it all. Plus, with Blockware's one-of-a-kind mining marketplace, you can buy and sell live Bitcoin miners with just a few keystrokes. In this marketplace, buyers get to purchase live machines at vetted facilities, enabling them to mine with zero lead time. And sellers get the opportunity to liquidate their machines and hosting contracts at will. This means you can mine Bitcoin with zero long-term commitment and high liquidity on your mining rigs. Blockware will even cover your energy bill for 1 week per mining rig when you sign up at mining.blockwaresolutions.com/breedlove. Again, that's 1 free week of Bitcoin mining at mining.blockwaresolutions.com/breedlove. And on top of this offer, you can also use code BREEDLOVE to get $100 off your first mining rig with Blockware Solutions.
I'm curious your comments on stablecoins. The stablecoin thing seems to be kind of a contentious topic as well. People are concerned that that's the introduction of CBDCs. I think of Saylor talking about all currencies collapsing into the dollar, all properties collapsing into Bitcoin. If you're in Venezuela, access to a stablecoin is a good thing. What are the positives with stablecoins, and what are the concerns that we should have, if any?
Well, I think it's a bit of a hot topic. A lot of Bitcoiners don't like stablecoins. They're saying you should just be Bitcoin only. But I don't think that's a reality that we can just hope for and expect. because a lot of people in the world still are looking for dollar-denominated value, like stablecoins, if not the US dollar, because in many places in the world, it's actually very hard to get dollars, either in your bank account or physical cash. And I think this is why people are turning to things like Tether. Tether's completing the last mile. They're reaching people that want dollars, but can't get dollars necessarily. And I think it's simply a supply and demand thing. Like, in a perfect world, everyone would understand Bitcoin and everyone would just want Bitcoin. Not today, but yesterday. Maybe not even yesterday, like 2-3 years ago, right? That's the perfect world. But the world is not perfect, and people's understanding of the world, including Bitcoin, is not perfect. So there are people that want dollars. And I think that's a reasonable thing if they're, say, living in Venezuela or Argentina and their own currencies are hyperinflating. They're looking for something that is stable for them. Not necessarily for us as Bitcoiners, but it's stable relative to their own local currency, and that's why they're looking for this dollar value. So I think until the world reaches a full understanding of Bitcoin, you'll still have people seeking out dollar value because it is better than what they have. And a lot of debts are also dollar denominated too. So suppliers go up the supply chain, people want dollars. So if you're doing business, you're a merchant or something, you have to pay and settle in dollars. And Bitcoin still is volatile, right? As it becomes the next reserve currency of the world, there will be ups and downs. So a lot of these people can't weather that volatility too. So even if they did understand Bitcoin, they cannot go all into Bitcoin. They might allocate something to Bitcoin, but they still want that dollar value because their debts are dollar denominated. So I think for us as a Gen 3 and the developer of Aqua, we've kind of accepted that, and we understand that people want stablecoins. They want dollar value. So we put Tether front and center in the app alongside Bitcoin and Layer 2 Bitcoin so that they can transact. They can send Tether out to other chains, but they're holding Liquid Tether on the Liquid sidechain. So it's better in a number of ways. But you can still interact and interface with that entire digital dollar economy in your country. But you see Bitcoin there, you see the Bitcoin price, and you might think, okay, maybe I'll swap some into Bitcoin. And that's kind of the hope we have, that we tap into the 400, 500 million Tether users and get more of them into Bitcoin. And I think we're getting there. Some of our biggest markets for Aqua are Argentina and Brazil. So we know that we built something that has good product market fit, that meets their needs and gives them some benefits, because liquid Tether transactions are cheaper and private actually. So you can hold it in liquid Tether and swap out to Tron and Polygon Tether when you need to pay someone that wants that, and you maintain your privacy. But overall, I think we're not going to see stablecoins disappear. We can hate on stablecoins, but I think that hate is sort of a first world perspective, because you probably have a bank account, right, Eric? You have a bank account?
Totally, yes.
Yeah, so you're kind of speaking about this topic from a position of power and luxury, where a lot of people just don't have a bank account, but they want dollars. So what do you do in that case, right? So I think stablecoins definitely serve an important market. And there have been criticisms too of, you mentioned it earlier, like stablecoins are CBDC, but it's not really a CBDC definitionally because it's not from the central bank, right? You still have that extra step. And I think the resistance towards the CBDC is that the central bank, which in a lot of cases is just an arm of the government, they can just shut you off because of political dissent, whereby as long as there is one step of separation, technically you're still protected by the law, and the full extent that the law couldn't protect you. And laws are still variable too and malleable, as we see in Canada, right? Like when we had the Freedom Convoy and the protests, the government just said, okay, everyone protesting the COVID vaccine is a terrorist now, and yeah, we can freeze your account. But at least they had to do that and take that step, and ultimately that cost them reputationally and credibility in terms of credibility. But they had to take that step, and they had to force the banks, not the central bank, because central bank would just do it anyways. They don't need to do anything, right? They just pick up the phone and say, hey, cut off Eric, and then you're gone. But they have to take some step, enforce the Emergencies Act, the martial law, and then contact your bank and then deplatform you. So at least there's still that separation. And in this centralized world, I mean, that's probably the best protection you're going to get. You're never going to get a bulletproof bank account, right? It's still centralized, and that's why we have Bitcoin. But it is not definitionally a CBDC. The other thing I think people miss is that there is market demand for a stablecoin, and that market demand will be met. And the question is, who meets that demand? And I think we're very fortunate as Bitcoiners that you have a Bitcoiner, Pablo Arduino, that is the CEO of Tether, and he is a Bitcoiner through and through. And Tether is accumulating Bitcoin, massive amounts of Bitcoin. They're investing in the Bitcoin ecosystem. They're bringing USDT to Lightning and to RGB potentially too. So they're doing a lot of interesting things for Bitcoin.
Worth it.
And they are very much like advocating for Bitcoin. And the alternative would be somebody like Circle, that is the dominant stablecoin provider. And Jeremy doesn't like Bitcoin. He's said in the past, no one will use Bitcoin in 5 years. Like he said that 10 years ago or something like that. But it'd be like, Circle is basically Coinbase, right? So it's like Coinbase and Brian Armstrong with the dominant stablecoin, using that to promote Ethereum in some ways. But you can say you don't like it, but it will exist. There is market demand. So the question is, who is meeting that demand? And we're fortunate that Tether won out that race, and they're the dominant player now.
Yeah, that's very well put. You know, idealistically, I would love to see us get onto a Bitcoin standard and for the dollar to go away as quickly as possible, but that's not realistic. You know, I like to think about it through the sense of, or the lens of like, you can't just flip off a light switch and turn the dollar off and turn a Bitcoin standard on. It would be absolute mayhem. So things like Tether and stablecoins, I see them in some ways providing like a smooth transition, especially if people can download a wallet like the one you've developed, use stablecoins, and they're one click away from saving some of that into Bitcoin. So I think that that's a really good thing.
Yeah.
You know,
I mean,
go ahead.
There's discussion about will it be a quick transition off the dollar or a slow transition. I think it's actually going to be a quick transition because fiat currencies always die in a spectacular manner. It's just a question of when. And you also have to factor in that the US dollar is in a very unique position because it is largely digitized outside of stablecoins. Like, it is a digital thing. It's reached market penetration that no other prior reserve currency has reached, right? Like, it's sort of married itself with technology and ingrained itself in economies around the world. So it might actually take a few years, maybe 5 years, maybe 10, I don't know, but it will end, but it's taking longer than normally it would have. That a non-digital fiat currency would not have this lifespan.
Is that because we can essentially offshore some of the debasement required to keep the dollar monetary system solvent?
Yeah, well, if you look at history, like all the reserve currencies in the past were relatively centralized because they weren't digital. But with the dollar being mostly digital, right, you've kind of permeated every other country's financial system in some way with it. And in some way, every single other fiat currency is now linked to the dollar, right? Everything is a derivative of the dollar. If you look at the Singapore dollar, right, it's linked to the US dollar. The Hong Kong dollar is also linked in some ways to the dollar itself too. And then you have other countries that just use the dollar outright. So it's reached really high levels of permeation that we haven't seen in history before. So that's why I think it's managed to hang on this long, even with the astronomical amounts of money printing. But in the words of Vinalden, nothing stops this train. So it's just going to keep inflating. And it's just a question of when it hyperinflates.
Have you ever wanted to start a business in the Bitcoin space? If so, then the Wolf Startup Accelerator could be for you. Wolf is the first startup accelerator dedicated exclusively to businesses developing in the Bitcoin Lightning Network. 4 times each year, Wolf brings teams from around the world to New York City to work with like-minded entrepreneurs, pushing the boundaries of what's possible with Bitcoin and Lightning. The program is designed to help early-stage companies achieve product-market fit, develop their brand, secure early-stage funding, and grow businesses that fuel the global adoption of Bitcoin. Go to wolfnyc.com to learn more or apply today. Again, that's Wolf, WOLF, NYC.com. Bitcoin custody is evolving. Both self-custody and single third-party custody come with significant risk and trade-offs. OnRamp is pioneering a new standard, multi-institution custody, which eliminates single points of failure, adding fault tolerance and redundancy to your setup. OnRamp secures your Bitcoin in a segregated cold storage multi-key vault guarded by 3 independent institutional-grade custodians, none of which have unilateral control over your keys. Your funds are fully auditable on-chain, cannot be rehypothecated, and can only move or be withdrawn at your explicit direction. Multi-institution custody removes the technical, mental, and physical burdens of private key management, providing unparalleled peace of mind for you and your loved ones. Bitcoin is money, and as the price continues to appreciate, OnRamp helps you seamlessly tap into financial services like trading, inheritance, insurance, loans, IRAs, and more, all without compromising on security or accessibility. Schedule a consultation with the OnRamp team to learn more at onrampbitcoin.com/breedlove. Again, that's onrampbitcoin.com/breedlove.
From time to time, I think that Bitcoin can help extend the life of the dollar. They can allow the inflation to get pretty hot and be kind of like an escape valve for that inflation. You know, if we woke up tomorrow and they doubled the money supply, we have some COVID 2.0. Over the next year, if housing goes up 100%, that's going to cause real problems. Homelessness will be a monumental issue, right? Rent control, all sorts of things would come from that. If we woke up tomorrow and Bitcoin's $10 million a coin, I don't know if that really causes any problems for anybody. So do you think that Bitcoin extends the life of the dollar? Is it an escape valve for the debasement required for the whole system to stay solvent? Or do you think it's going to bring the dollar to an end quicker?
I'm not really sure about that yet. I mean, I've heard the argument that stablecoins are extending the life of the dollar because it's helping effectively deliver the dollar to more people in the world. But I don't know. I still hold a lot of weight in the idea that fiat currencies fail spectacularly, and that's just because when people wake up, they all wake up. It's not like we'll start transitioning off the dollar and the corner store near your house is going to keep taking the dollar and changing their prices to like $1,000 for a Kit Kat bar, right? It's just going to be a quick thing once that thing hits, and they'll just switch off and take Bitcoin because they can't afford to not take Bitcoin. They can't afford to take the dollar at some point. And I think Germany with the mark dying, that's like a good example. It happened in a year-ish, and that was a non-digital thing. So I think it'll be faster for the dollar to fail. But until that happens, it does feel like Bitcoin is extending it by integrating with it in some ways.
Yeah, and I think about like B-locks. You know, at some point I would think it's logical to think that the large banking institutions in the United States are going to start loaning you money against your Bitcoin. They take possession of the Bitcoin. The system as a whole needs to debase its supreme collateral. And that kind of segues me into the thought of like reattaching to a hard money standard. I've kind of played this out in my head in some ways at times where it's like we were at a 1-to-1 peg to gold at some point, at least in theory, and we've completely detached. Is it possible for us to reattach to a Bitcoin standard for that to help slow down the debasement required to keep the system solvent? And at some point you end up in a world where one sat is $1 and then you could just turn the dollar system off and we have this smooth, beautiful transition.
I mean, it can be done, just like anything can be done, right? The only thing that can't be done is printing Bitcoin out of thin air, but anything else is possible. So I've talked about rebasing to Bitcoin and just setting an exchange rate of 1 sat to $1. And that just takes a politician, maybe it's Trump, I don't know, but somebody just to say, we'll let you redeem your debt for this. And that's it. I mean, how do you peg a dollar to gold? It's by decree. And pegging a currency to Bitcoin is the same. It just depends on the motivations and the necessity of doing so. I think when things get bad enough, every card is on the table, and we're seeing this, right? Some of those cards are bad cards. It's the rolling out of a CBDC like in Europe, or starting to control the internet like in the UK. There are things that are happening, and you can see these things happening are a direct response to other things that they're trying to mitigate or distract you from. So there are a lot of, just take the UK as an example, there are a lot of societal problems. And now they're focusing on this one particular thing, which doesn't do anything for the other problems, but it definitely distracts and gets people enraged. But it just goes to show, like, every card is on the table now. But that rebasing the Bitcoin card is also, it's in the hands, and it can be played at any time. And that's why I say plan accordingly, because you have to be ready for when these things happen. And the best thing to do to be ready is to be in Bitcoin.
Yeah, I feel like we are in the midst of a galactic battle between good and evil, and it seems like the proverbial overlords are kind of accelerating an agenda. And at times, I wonder if that acceleration is, being driven by this immovable monetary instrument that we have been blessed with.
If you look at all the warning signs, it is all there for anyone to see, plain as day. There is infinite money now. Someone from the Federal Reserve said that in a clip before, but there's infinite money in the Federal Reserve. But it's true now, and you're seeing signs of that. If you look at the Bitcoin treasury companies like Strategy, they're borrowing at 0%, right? They're effectively tapping into the infinite money out there and converting it to Bitcoin. Even at a lower level, like you might not be Michael Saylor, but you can also tap into infinite money too. You can tap into yield generating stocks, like ones that are anchored to MicroStrategy, right? If you can borrow it 5% or 7% and get back 120, 140%, that's infinite money right there, right? Even if you're discounting for capital gains tax, that's still infinite money. And the question is, when do people figure this out? And I think when people figure out this, that you could basically, invest, I don't know, $40,000 and start making back your annual salary free, I think a lot of money is going to flow to Bitcoin. Some of it will flow to other things like high time preference activities, but a lot of it will flow to Bitcoin once people figure out that there is infinite money out there and anybody can tap into it.
Yeah, and that would be through a product like MSTY.
Yeah, or IMST, right? And I think people don't really understand that. Like, people are comparing those things to buying Bitcoin or buying MSTR and comparing the performance. But the way I view it is, you should borrow and then pay the 5-7% or whatever percent you can borrow at and buy that, right? Like, if you borrowed money to buy Bitcoin or you borrowed money to buy Strategy, maybe you'll do well, but there's a chance that it'll stay flat too, right? There is a chance. But if, at least with the dividend stocks, you can just, that you're going to get some dividend. And the interesting thing too is that you don't even need to sit in a dividend stock. You don't need to sit in either of those two, like IMST or MSTY. You can just buy it before the ex-dividend date and then get rid of it when it comes back, because it usually does come back after the dividends are paid out. Because dividend stocks, they still dip after the dividend is paid because you're assuming that there's erosion. But I don't know, a lot of people don't understand it. Like, these yield options are not paying you out of company earnings. They're actually harvesting the volatility by selling options. So they're also tied to the underlying in some way. Like, they've synthetically constructed MSTR. So when MSTR goes up, because Bitcoin goes up, it'll come back. So if you bought something at, I don't know, if it's IMST, it's like what, 50 something bucks? Like, if MSTR rips and IMST dipped after a dividend payout, it will come back up and you can exit it. And if your timing is right, you can actually grab all of these dividends every month. So you don't need to just take one. You can take the IMST comes out first. You can take the IMST dividend. If you can exit at a loss less than your gain, you can then put your funds into MSTY and get that dividend too. But there are other dividend stocks too. You can basically harvest all these dividends. So there's a lot of free money out there.
Yeah, that's interesting. I never heard somebody break it down like that. Like, I've implemented creative, very low risk forms of leverage in my life, like paying my auto loan the minimum payment as opposed to paying my vehicles off quicker, right? It's non-collateralized and I can stack sats. But, you know, I'm a rather conservative individual who's very risk adverse, which I find myself saying at times to people it's ironic for somebody who produced cannabis for 17 years and has a 100% allocation to Bitcoin. So I get concerned sometimes about the leverage and some of these treasury companies that are coming online. Like, you know, I'm just a dude, a retired farmer. I'm not a TradFi specialist. So, you know, when it comes to all these companies, I feel like it almost parallels the leverage traders that would blow up during downturns. Is there any parallel between, are these new treasury companies like the leverage traders that could blow up just at another scale? Is that something that we should be concerned about? I mean, some of them have to blow up, I would assume.
It's hard to say. I mean, with the ETFs, I would say massive volatility is sort of gone from Bitcoin. Like, I don't think you'll see huge 80% drawdowns in the future, because those are a symptom of a market that can move quickly, like trading on spot exchanges. But for a lot of these new entrants in there, they might be funds that bought IBIT or FBTC or BitB, but you know, they're not going to dump quickly on some news. And a lot of people are putting it in their 401ks or their retirement accounts. You know, they're not watching the market and saying, okay, we got to sell now. So I think you're going to see a lot more muted volatility. And that is good for leverage Bitcoin plays like a lot of treasury companies. But I still think there is some risk there, because even without an 80% drawdown, you don't know if some of the smaller ones with CEOs that are not Bitcoiners, if they will weather, you know, a prolonged dip. And even if it's like a 20-30% drawdown, can they handle that? Are they strong enough to deal with the pressure from shareholders or the board if the board is not fully aligned? And would they sell? And would that push us down further? And I think it's a possibility. But at the same time, you have a very strong cohort of Bitcoin treasury companies with strong CEOs that have conviction, like Michael Saylor and like Adam Back, and Metaplanet seems quite strong too. So I think even if some of the smaller ones capitulated, the larger ones would simply just take all their Bitcoin, right? So it's a question mark if something happens, but I do think there is paper Bitcoin in the market right now, and it's probably some less reputable exchange that is doing something like FTX, because we know FTX sold Bitcoin that they didn't have. So I don't put it past some smaller exchange selling Bitcoin that they don't have, and that's probably the one source of paper Bitcoin.
But you don't think that that's going to be any of the large ETFs or Coinbase? Because sometimes I get concerns about, like, you know, where we're at. It seems like you're going to be done manufacturing that Omega candle. I think about you all the time. I talk to some of my buddies. I'm like, when's Samson going to be done building this Omega, the God candle, you know? And it's like, so I feel like the price is a lot lower than it should be. But then at the same time, I feel like there's the largest incentive there's ever been from the proverbial overlords, if you will, to suppress the price. If we had Brian Armstrong if he's the fall guy and goes down like Sam Bankman-Fried did, that could kick this can down the road a decade or more. That would cause huge problems. So I can't really make sense of whether or not I feel like there's major suppression, or there's going to be some orchestrated event, or if we're just going to continue to tick up like we should. Is that crazy to be thinking? You know, like, I get concerned. You know, do we have a big FTX times 10 moment?
Yeah, everyone's wondering, like, who could be the source of the paper Bitcoin. I don't think it's Coinbase. I mean, I dislike Brian as much as the next guy, but I don't think he wants to go to jail, so I don't think it's going to be him. But, you know, you can't rule out anything. This is why it's important to hold your own Bitcoin, have your own keys, be sovereign. And in the light of all these potential blowups, that's your safety, right? Using Bitcoin as it was built originally, and not keeping it with someone else. If you want to invest in an ETF, if you want to invest in a treasury company, do so, but just know that you're taking on some risk. The zero risk thing is self-custody, and, you know, to each their own. Whatever you're comfortable with allocating, then do it, but just know that the safety is Bitcoin in your own hardware wallet.
Yeah, that's where you should put all of the money that you don't want to lose, as they say.
One of my highest health priorities is keeping my brain in top shape. To take care of my brain power, I do many things, such as striving to read, write, exercise, and meditate daily. One of the latest tools in my brain power toolkit is Mind Lab Pro. Mind Lab Pro is a nootropic supplement that is scientifically proven to enhance your brain power. When I take Mind Lab Pro, my mind feels like it has a better grip on the world, my thinking is more lucid, and the articulation of my speech is radically improved. Mind Lab Pro has been tested in rigorous, double-blind, placebo-controlled human trials and has been proven to enhance brain power for users in every age group. Mind Lab Pro is an advanced formulation of 11 nootropic ingredients and is backed by research from over 1,400 human trials conducted over the past 32 years. So if you're looking to enhance your brain power, Mind Lab Pro is an excellent solution. Go to mindlabpro.com/breedlove to start enhancing your brain power today. Again, that's mindlabpro.com/breedlove. Knowing when to buy Bitcoin can feel complicated, and knowing how much to buy can be overwhelming, and getting started can be a headache, but it doesn't have to be. That's exactly why I recommend Coinbits, because it solves these major blockers and is the easiest way to buy Bitcoin. With Coinbits' Round Ups feature, you can automatically convert your spare change into Bitcoin while you shop. For example, when you buy a coffee for $3.50, the extra 50 cents is rounded up and it goes straight into Bitcoin. Here's why that's a huge win for you, because you don't have to be a tech wizard or try to time the market just right with Bitcoin. With Coinbits Roundups, you simply set it, shop, and stack sats. And you can set this up in under 2 minutes. Just visit the website, connect your card, and boom, you're buying a little Bitcoin every time you spend money. So stop wasting your time with complicated exchanges or confusing shitcoin apps. Coinbits simplifies your Bitcoin savings strategy. So go to coinbits.app/breedlove. Again, that's coinbits.app/breedlove.
I'm curious. Jack Dorsey and Jeff Booth have been making comments over the last 6 months to a year that they're concerned Bitcoin won't succeed if it doesn't quickly become a medium of exchange. I think Jack Dorsey was in an interview saying that he's concerned it would fade into irrelevancy.
I don't know. I think Jack is just engagement farming.
Yeah. Okay.
I don't really see that as a risk. Bitcoin is always going to be bearer money. And if you look at the global state of things, trust in institutions is not going up, it's going down. And when that is going down, people seek bearer assets. And, you know, I think we might be blinded to that fact because ETFs are hoovering up more Bitcoin, treasury companies are hoovering up more Bitcoin. But at the same time, Bitcoin will continue to grow in value. And there are a lot of people holding their own Bitcoin still. So I don't see that as a risk because of necessity. People will need to transact Bitcoin because of necessity. It's not an ideological thing. Like, we need to spend Bitcoin because if we don't spend Bitcoin, it's going to fail. It's a necessity thing. And if it wasn't a necessity thing, then Bitcoin would fail. Like, if it depends on us to make people spend Bitcoin, then it's not going to work. Bitcoin works because the incentives work and because deep down, people want bearer assets when things are shaky. And that's just a lesson that history has taught us over and over again, right? Before it would be gold and silver or bills. Now it's going to be Bitcoin. It's just a question of when they understand that it is Bitcoin. And I think we're getting closer and closer to that inflection point.
Yeah, that's well said. And I think Bitcoin being the supreme store of value that can also be the medium of exchange. You know, people are going to want to use Bitcoin as a savings technology, and then they're going to have the aha moment that, hey, wait a second, I'm in Miami, Florida, and I can pay a rancher in Colorado for beef by sending him Bitcoin directly. You know, I've heard Saylor talk to speak on that a bit over the years. And speaking of Saylor, I think he bought 20 some odd thousand coins earlier today. He has 628,791 coins of strategy. And I made a video walking around my greenhouse talking about your quote about Max Payne, and you're concerned that Bitcoin price rips too much. And one of the things that you said in that, I think it was 10 bullet points or something along those lines, you know, Saylor wouldn't be able to get to 1% of the supply, 210,000 coins. He is absolutely shredding. And so I'm shocked at times because he's open sourced the whole strategy. And being a Bitcoin maximalist, just, you know, obsessed about what's happening, I'm watching all day long, it feels like it's so obvious and it's taking forever. It's like watching paint dry. In hindsight, you look back and you're like, wow, this is all happening really quickly. So I'm curious, do you think it's possible for any company to ever catch Michael Saylor? Like, I think he's on track to have the most valuable company in the world.
I mean, it seems impossible now. So, you know, when I posted that, I thought he wouldn't get there. He got there. He's almost at 3%. And this is why I think we've got to melt up, because there's no way that he can get to 3% and we're still sitting at sub 0.2 M. So Omega is coming. Like, there's no way. There's no way. Like, okay, let me think about it this way. Like, can Saylor get to 5%? Like, and we're still at sub 0.2 M? There's 0% chance that happens, right? So we'll see. I think Saylor's got an excellent, well-oiled money machine powering his Bitcoin reactor, and he'll keep going. And there might be some that can catch up to him. We'll see. But not catch up, but like get closer to him. I think maybe one other company could do it, but for the bulk of it, I think everyone's going to aspire to be some fraction of strategy. Like, maybe we'll aspire to be 1/5 of strategy. That's our goal, because he's just too far ahead to be caught up to.
Yeah, it seems like any attempt to catch him would push him further away. Like, maybe Meta, maybe Berkshire Hathaway. I guess they got a couple $100 billion in cash, but like, I don't think Berkshire Hathaway would make that purchase. I think Meta might be, you know, Zuckerberg could be the one guy who could make a major buy. But even then, is he going to be able to buy 650,000 coins? I just don't think that's likely.
Well, if Warren Buffett wants, I'll join as CEO and I'll help him buy Bitcoin.
Yes, you would.
Offers on the table. It's good for 2 months.
Maybe somebody on the board is listening to the What Is Money show. They should reach out to you. What are your thoughts about Saylor? So this got a lot of controversy and blowback a little bit. Mitch Hodel, I believe, asked him in Vegas about proof of reserves. Of course, the Bitcoin purist, Maxis, kind of went nuts, but his answer was effectively, you know, he brought up liabilities. He said that he asked ChatGPT, like, what the risks are. There's all these risks. So you have, I believe, one of the ETFs, if I'm correct, has proof of reserves. El Salvador has proof of reserves. It seems to be like a sales pitch. Hey, we got proof of reserves. How much does that matter or not?
I mean, I think it doesn't matter as much for a public company. I mean, it's a nice touch, but at the end of the day, you really need to know what the liabilities are, right? You need proof of reserves and, you know, proof of liabilities, but your liabilities could be dollar denominated and deeply entrenched in the financial system. So how do you audit that? There's no on-chain liabilities, right? You're going to depend on an auditor no matter what to get the full picture at the end of the day. So I think you have to be okay that, you know, he doesn't push the post reserves. I mean, he could, but it's not needed to get the full picture because this is a security. It is a stock. You're depending on a lot of TradFi systems and controls that it works. It's not Bitcoin. And I think he hasn't identified all of the wallets, but people outside have. So, if you want, you can kind of look at it and see. He's basically got all the coins, but at least he doesn't have to identify it himself, which in his view, I think I listened to clips of that. He was saying there's risks to that, right? Like, it could be targeted or whatnot. But if someone else is analyzing, then, you can assume it's accurate, but only he knows for sure where all the coins are and with which custodian. So there is some mitigation on his view of security, I guess. So for me, it doesn't really matter because it is a stock. If I wanted proof of reserves, then I would want that from, I don't know, an exchange. But even then, you don't know what the liabilities are, right? So I'll say it again, like the best thing is just have your own Bitcoin. If you're worried about some entity, some company having reserves, it means you have some exposure there and you have some risk. And if you're not comfortable with that, then don't be in that and sit in cold stored Bitcoin and you have your own proof of reserves.
Yeah, that makes sense. And as you say that, it's kind of it clarifies the value in purchasing a SEC regulated stock and how buying strategy is significantly better than holding Bitcoin on an exchange, because there is auditing, there's regulations they have to adhere to that some of these exchanges, especially the offshore exchanges, don't have to adhere to. So I'm curious, were you shocked when Trump signed the executive order for the SBR? Because I was flabbergasted. I couldn't believe he did it so early in his term. And I went onto the website, and there I am. It's like this moment. I can barely believe it's happening. I'm on like the whitehouse.gov, and I'm reading it. And it's like they can take the Bitcoin that they have, they're going to keep it, they can acquire more Bitcoin in a budget neutral way, and they can't sell it. But all other digital assets, they can sell them, and they're not going to acquire any more of them. I'm like, there's Samson's quote right there. All coins have natural sellers, Bitcoin has natural buyers. So were you surprised when he signed the SBR into effect?
Well, yes and no. I think for him it was a low-hanging fruit that he could just do something and say promises made, promises kept. Right? It didn't cost him anything. It was within his power to do so with executive order, and he paved the way for non-budget neutral acquisition. And I think that's all powerful stuff. I think what is lacking now, and many Bitcoiners are seeing this, is execution on that front. Like, where is the audit of Fort Knox? Where is the tally of all the Bitcoin held by the government? And I think we're still waiting for that. And where is the next phase in the SBR? Like, when are you going to put up a website and accumulate? So I think we should all be holding them accountable, but we should also be fair in understanding that governments are not exactly the most efficient, well-oiled machines out there. So maybe they'll get to it. And I'm more of a glass half full kind of guy, so I think they'll get to it, but we'll see. But I'm hopeful that they do execute on the SBR. But to answer your question, I think it's kind of expected. It was low-hanging fruit enough that he could do that, get a PR win, and get his donors happy. And then the rest is up to David Sachs and everyone else to execute on that.
Yeah, I'm also a glass half full kind of individual. I try not to spend time going down a doom loop mentally. It's just, at the very least, it doesn't feel as good as being optimistic.
Well, it's also a tool. So for Gentry, we like to work on nation state adoption. So we can go to other countries and say, hey, look at the SBR. And they're not going to ask, like, did they do anything? And we're not going to tell them that, but we'll say, he did that. So why don't you do that too? And if you get enough people doing that, passing legislation, creating things like a framework for an SBR, eventually one of them is going to execute on that.
Yeah, is it possible that the United States government is acquiring Bitcoin quietly? Because you think there'd be an incentive to do so. If they announce a purchase, there's that Omega candle.
I don't think it's possible. It's hard for any government to do stuff in secret. Well, things that are beneficial for the country, it's hard for them to do it in secret. Other things, it's much easier. Like, you could do a lot of things in secret, but for something like Bitcoin, like an asset, it would be like saying, can you buy gold in secret? It's probably hard. You need to, because it's part of the financial system, and you have to be all above board, right? Like, where did you buy from? How is it custodied? There's a ton of questions that have to be answered. Like, it can't just be Trump directing someone in some agency to buy and send it to his blockchain Jade wallet on his desk, right? There's got to be more controls and process in place for something like that. So I think it's really hard for a country to sneakily buy Bitcoin, even though they should. But I think it's hard. Just like it's hard for them to get to the point where they can't even buy, right? Like the city of Vancouver, Mayor Ken Sim has said that he wants the city to buy Bitcoin for its treasury, for its reserves. But he said like there's 2 years of red tape he's got to go through to even get to that point. So yeah, the answer is they could do it in theory, but in reality, they probably need to go through and cross the T's and dot the I's before they can really buy Bitcoin.
Yeah, that makes sense. I have a strong suspicion that that's what they're doing. You know, if I look back, Jason Lowry writes his book, it gets pulled, he goes silent. You know, you got this group of people around Trump that are all pro Bitcoin. I have a buddy of mine who says that I give these powerful elites too much credit, but I like to think like, look, if an 80 IQ pleb farmer like me can figure this out, so can all of these powerful individuals.
So there's a very special place called the Farm at Okefenokee. That's a 1,000-acre regenerative farm community about 45 minutes northwest of Jacksonville, Florida. The farm is a completely off-grid community that has total food, water, and energy independence. Everything on the farm is 100% organic, and it even features wild boar and bear hunting. The farm at Okefenokee is right next to the Okefenokee National Wildlife Refuge, where you can do camping and canoeing tours. So if you're like me and you're interested in the self-sovereign lifestyle, then you can get your own lot on the farm at Okefenokee if you tell them that I sent you. Once you get a lot, you can build one of 3 custom cabin options. So if you value freedom, self-sovereignty, and living in touch with nature, then join me and my family. We have lot number 21, and we're going to be building a cabin there starting December 2025. To learn more about the farm at Okefenokee, go to okefarm.com and make sure to tell them that I sent you. If you're a Bitcoiner, you need the Orange Pill app. It's where you can connect with other sovereign individuals locally and globally. It's great for when you travel, to meet local Bitcoiners, to go to Bitcoin meetups, and to find local merchants that accept sats. No distractions, no noise, just real Bitcoiners. So download the Orange Pill app today and find your local Bitcoin tribe.
That, and then just it's this incentive vortex. Trump's talking about, drill baby drill. They're going to be drilling. They're going to be fracking. If you're going to be fracking, then you got to be mining. Do you think that it's logical to think that sooner than later that the United States government gets into Bitcoin mining, subsidizing it in some sort of way? I mean, what kind of involvement do you think that they could have, and what time frame?
Well, if not the federal level, definitely at the state level, and you're already seeing a lot of that happening in Texas. But I've said this for, 6-7 years now, but eventually mining and energy generation is just the same thing. It's 2 sides of the same coin. So if you have a national utility, they're going to mine Bitcoin just because it makes sense to do so, even from a grid management perspective. The monetary upside is just icing on the cake. And as people understand what Bhutan did, mining Bitcoin and getting $1 billion in Bitcoin in their reserve, more people will do that. And that's something we're trying to do now at Gen 3. We're trying to engage with governments to start small pilot projects. We found that this might be a better strategy than engaging at the very top and meeting with the president or prime minister and trying to get him to do something, because it's really hard to get them to do something. Not just at an intellectual level, but at an execution level too, for the reasons I said before. It's hard to do things in any government.
Yeah, that's why I was shocked when he signed the SBR, that executive order, into effect. I was pretty surprised. I guess in hindsight, it's one of those things where how many people care. Like, there's not a huge aversion to that. The way it was done was in a very palatable way, but I was definitely surprised it happened so quick. So I'm also curious. So the price is set at the margin. We have, I believe, somewhere around 2 million coins are on exchanges. Is there any way to know out of those 2 million coins? And is that accurate? Is that an inaccurate number?
I mean, it's an estimate.
It's an estimate.
I think it's a fair estimate.
Does that include coins that people hold, like they technically own, like, customers who haven't taken self-custody of their Bitcoin? So that 2 million is technically not all for sale.
Yeah, it's not all for sale. I think it's definitely, it's a mix of exchange-owned coins and also holdings from people on exchanges. A lot of people have, or a lot of hedge funds and, I guess, trading firms keep funds on exchanges for, liquidity provisioning and trading.
And would those estimates, that 2 million coin estimate, include any of the ETF coins or strategies coins?
I don't think so. I think those would be with custodians.
Gotcha. That makes sense. So if that's the case, in order for us to rip to 1M, do you know what kind of tsunami of capital would need to come in during what kind of duration of time? Because I feel like there's a lot of capital that could come into Bitcoin pretty quickly. Do you have any estimates around that?
Hard to say. I think we should have been here already. So yeah. I would have thought that the ETFs opening the floodgates combined with strategy would have gotten us there already. And this is why I'm one of the believers that there is paper Bitcoin out there dampening the market. So we'll see. But, nothing stops the train. It's going to go. The dollar's going to keep on inflating and Bitcoin's going to keep going up. It's just a question of when it all converges.
Yeah. And so if there's paper Bitcoin and that becomes and that gets exposed, would that cause a crash, or would that cause the price to rip? I never really thought about that.
Hard to say. Depends on what the market thinks of it at the end of the day. But I think the 80,000 coins that were market sold is a good indicator that the market doesn't care about anything now. There's just too much power behind accumulation, whether it's strategy or other Bitcoin treasury companies or hodlers or ETF buyers too. There's just a massive amount of insatiable demand, and the demand is only going to go up.
Yeah. Do you have any idea who on earth would sell 80,000 coins? That doesn't make sense to me. I think okay, so somebody, let's say it was an OG whale that was buying for pennies or a couple dollars a coin. To get to this point and to maintain possession of 80,000 coins, they have to have a level of conviction where they didn't just sell 80,000 coins so they could go buy 42, trophy real estate properties and a bunch of SMP. Who would sell 80,000 coins? Is that a nation state?
No, it might be an early holder. I mean, there have been rumors that it's some estate sale, but nobody knows for sure.
Yeah, because what is that? That's $8 billion? I think that's $8 billion. Maybe that in an estate sale, that would make sense. But it was incredible how quickly the market just gobbled all those coins up.
Yeah, Bitcoin didn't care. It just subsumed all of it.
Yeah, and so based upon that, and you've kind of already, quite literally said this, you don't think that we're in for another 80% pullback? You think those days are likely to be behind us?
Nothing is impossible, but it does not seem likely with the current state of things.
Yeah, what Robert always says when I ask him questions like that is the only thing to expect from Bitcoin is the unexpected. Yeah, and so how possible is it? It has to be somewhat possible for a coordinated effort by nation states, large corporations to sell paper Bitcoin, to suppress the price, to benefit themselves. Is that, do you think that that's something that is likely to be happening? It's kind of happening, unlikely?
I think it's unlikely. I think it's probably someone or something less reputable that it would be doing something like that.
Sailor's price prediction: 21 years from now, a $21 million coin. That's 80 some odd $1,000 a month on average in price appreciation.
Yeah.
Is that absolutely crazy for you to wrap your mind around? Do you think that that's possible?
No, I think it's fully possible. I mean, that's like an Omega candle every month or so, and that's in line with my prediction that we're going to go to 1 million fast. See, even Sailor thinks so. Like, it's going to be fast and violent, no matter how you slice and dice it, right? If you say his prediction, if you take his prediction in the least violent way, that's like 10 Omega candles a year, right? And that's 1 million in a year. That is the least violent thing. Anything else is utter unspeakable financial market violence. Like, that's like, you know, $1 million candle in a year or a $2 million candle in 2 years, and then rapid ascension upwards. And that's all in line with Max Payne theory. So I agree.
Yeah.
Like, that's what he just quantified it in numbers, 21, 21, 21. But I've quantified it in words with Omega candles and Max Payne theory. But it's the same packaged differently.
Yeah, I love that. So do you have any final words of wisdom for Bitcoiners who might be experiencing this violent upheaval into a new echelon of living? I mean, this is going to get pretty crazy.
Plan accordingly.
Yeah. Yes, I think about it often. You know, as the price increases, optionality increases, power increases, and with great power comes great responsibility.
Yeah, like treat your Bitcoin as if it was 10 times more valuable or 100 times more valuable than it is. Secure it, you know, make sure that you're trying to stay as private as you can. Use the privacy tools afforded to you. You know, yeah, just plan as if your holdings are 100 times more valuable, and then you'll be in a good place.
Yeah, well, I appreciate that. That's well said. Well, Samson, it's been an honor to chat with you. Thank you for your time and everything that you've done for Bitcoin. I can say personally, I'm very grateful, and I think most of the people in the world who know what you've been doing feel the same way.
Awesome. Thanks, Eric. It's been blessed.
Yes, thank you.
Thanks for watching. If you enjoyed this episode, click here to find more just like it, and here to find our most recent episode. Also, make sure to like this video to help shine light on the corruption of money, and be sure to subscribe to this channel to stay connected.
I guess it's about time to get the next one going.
What is money?
Oh, as you know, that's
Here we go.
Okay, Mega Whale team, welcome back to the channel and thank you for tuning in. I hope you're all having fantastic days. In today's video, we are taking a look at the massive volatility over the past 24 hours with over $1 billion liquidated across the cryptocurrency market as Bitcoin drops back underneath the major point of support at 120,000 just hours after making a new all-time high. With this pullback, we have as well seen the total cryptocurrency and of course the total altcoin market cap drop a considerable amount, which we'll be discussing in the video today. We'll also be taking a look at the macro charts, discussing the implications this pullback will potentially have, how the price action is developing, whether or not we expect Bitcoin to go lower, and how the price could reverse. Before we get into it, make sure to smash that like button, hit that comment button, and subscribe to the channel. We post daily videos for Bitcoin focusing on the facts, the data, the technical and the structural information. No hype, no BS, no emotion, just pure, raw TA. If that is the kind of content you're interested in, you can join us on Telegram with the first link down below. You'll get access to charts, updates, videos, educational posts, news events, and everything you need to stay in the loop for cryptocurrency with Bitcoin and the relevant economic news. And if you were interested in joining our VIP channel, you can do that by clicking the pinned comment of the free channel, contacting our admin by clicking this link, checking out a 54+ month trading track record, or watching a 10-minute video showing you inside the VIP channel. You'll get access to 2 channels, the main trading channel with increased targets and stop losses, and of course a variety of group chats from the general chat to the trading chart education chat to the daily video, the news, community setup, help, and indicator/coding chat. Check it out, guys. We'd love to have you in there. Let's jump into the content. So pretty big volatility here for Bitcoin, dropping from around 124,000 to just above 117,000, a considerable drop, around $7,000 in our one-day candle here, as you can see, represented by a very large single red daily candle, and that was as a consequence of course, the price rejecting from that prior all-time high, just breaking above, being unable to sustain above that level, and dropping back below the break of structure. We discussed in yesterday's video that breaking back underneath that 122,300 level, the break of structure, was going to be the short trigger for a correction back towards our uptrend, the short-term uptrend, and the loss of 120,000 being the trigger of a further potential correction as low as this higher time frame daily uptrend. We'll discuss this in a second. So we have seen around about 75% of that correction, maybe a little bit under 75% of that correction play out ever since the breakdown of the break of structure. So if you paid attention to the video yesterday and caught that move, congratulations to you. But with this correction, of course, the total cryptocurrency market cap has seen a pretty significant pullback in the daily here, still green for that weekly. And of course, the altcoin market cap dropping back underneath, the $1.06 trillion level. Yet again, showing us why it is so important. We are waiting to see how this weekly closes. So we'll come back to all of this in the video today. Moving over to the market data, we can see here volume up a considerable amount, 25%, $605 billion over here in 24-hour volume, and liquidations jumping up just past 1.05 billion, up 159% over the past 24 hours. Again, liquidations with 881 million being long and 174 million being short. Still Ethereum with around 1/3 of those total liquidations. Bitcoin coming in second with 198 million. Moving over to the DXY. A little bit of a push upwards on the short term for DXY again. That came as a consequence to PPI data coming out. PPI data came out, producer price index came out a little bit higher than anticipated. Now, not dramatically higher, but of course, when we do see PPI go up, it is generally going to be leading for inflation to potentially rise in a future period. Again, because if costs of producers start increasing, those costs actually do get pushed onto consumers. So that is why we see CPI eventually move upwards. So a bit of fear in the market there caused by that, but generally PPI doesn't have too much of a consequence in the price in the game. That's why we saw the S&P 500 hold very well in the daily candle. At the moment, the S&P 500 has pushed up very aggressively. It is sitting just at our target, reaching our 6,500 target. This is going to be a psychological point of resistance, so we do anticipate potential corrections here for the S&P. Again, similar to what we're looking for Bitcoin, how Bitcoin broke back below the break of structure, triggering a correction. We'd expect the same for the S&P. So the S&P drops below that break of structure, that is sitting around about 6,465. We would then expect pullbacks potentially as low as mid 6,300, maybe into the 50 EMA if we're able to sustain above the break of structure. We are still challenging that psychological point of resistance at 6,500, so we're going to bounce between here. If we break through 6,500, we then expect continuations upwards. So that is the overall assessment for the broader market. So let's go ahead and jump into Bitcoin. Before we do, guys, go ahead and sign up to BitGet, BitUnix, and BingX. We actually have an exclusive campaign we're running here, exclusive to the Mega Whale community on BitUnix at the moment. So shout out to them, $25,000 prize pool. You can go ahead and check out all the information by clicking the pinned comment, join the Telegram, and then checking the information in Telegram. Of course, anyone who signs up to BitUnix via my referral down below will automatically be entered in this. If you're already signed up, you will automatically entered. So go ahead and check it out. We get a lifetime trading fee discount of 15%, which we've got a 45%.
Game.
Support me making the content and get access to all of these exclusive campaigns. We'll play an ad and we'll jump back in. If you are looking for a new exchange or just want to support the channel, sign up to BitUnix with the link down below. You'll get a lifetime trading fee discount of 15%, which can build up to 45% based on your trading volume, as well as access to a bonus reward center, and of course, all of the exclusive campaigns we run on this exchange. You'll also get access to BitUnix being a non-KYC exchange, meaning you can sign up from anywhere in the globe without regulations. And most importantly, I only promote exchanges I trust and I use. As you can see, I trade on BitUnix very regularly, being the highest VIP level with over $500 million in trading volume for the last 30 days. And lastly, if you were interested in signing up to our other 2 exchanges, BingX or BitGet, you can also do that via the links down below. You as well will get the 15% trading fee discount and everything else that comes with it. Go ahead and sign up. Thank you for supporting. Let's jump back in. Okay guys, let's go ahead and jump right back into it, starting on Bitcoin, then moving over to the higher time frame charts, and then finishing up on the total cryptocurrency and total altcoin market cap. So as we can see, Bitcoin has had a pretty significant correction, around $7,000 back towards the POC, POC being the point of control, the horizontal point within the visible range of price action where there is the most trading volume. So generally these levels act as temporary
points of resistance and points of support due to the large historical trading volume within these horizontal ranges. So as we can see, Bitcoin is temporarily slowing down in this downtrend at the POC, which is more or less expected, and we have seen a few notable events occur during this correction. Number one, we did reject from that 123k top over here. We temporarily made a new top, but we have not sustained above the buy side liquidity. This is still a point of resistance. And number two, we have broken down the 120,000 and this diagonal uptrend spanning back since the 5th of August, one that we retested numerous times prior to this recent breakdown. So no matter which way we spin it, Bitcoin is currently in a downtrend on the short term, as we have broken through this uptrending diagonal support, with current resistance sitting at 120,000 and of course 123.1 to 124.5 thousand. Current supports are of course our POC, which is going to be 117.9, and our uptrending diagonal support spanning back since 74,000 in confluence with our horizontal support at 115 to 115.6 thousand. At the moment, Bitcoin is back within this horizontal range again, as we can see by the POC, a significant amount of horizontal trading volume within the ranges between 115,000 and 120,000 over the course of the last few weeks. If we zoom out slightly to a 12-hour chart, we can take a look at the key levels in which we need to sustain above. So primarily, Bitcoin is still going to be in an uptrend no matter what happens here on the short term, provided we are able to sustain above this broader, this higher time frame diagonal uptrend spanning back since this $74,000 region. Now, the reason this level is so important, if we go ahead and bring some more indicators, is not just because of it represents the structure or the direction of the trend. It is because if we're looking at confirmation for continuations downwards, we can assess 3 different metrics. Number 1, trend. Number 2, structure. Number 3, strength. At the moment, we have a clear trend, we have a clear strength, but we do not have a clear structure. So we're going to take 2 out of the 3 points. What we need to see when we're confirming breakdowns, when we're confirming continuations, we look for, out of the 3 points of validation, we look for at least 2 to be confident in that directional continuation. In terms of trend, we are still in an uptrend. In terms of momentum, so strength being a measure of momentum, we are currently negative. We have seen a breakdown on the RSI, and we've also seen a retest rejection, so this is going to be down. Therefore, we have 1 out of 3 of the validation points. We would need to be confident in higher time frame pullbacks. However, and this is where this trend becomes very important, if we do break below this uptrend, which could originate from the loss of 115.6, and as we know, the breakdown of the shorter term uptrend, which we discussed in yesterday's video and in today's video here, the short term uptrend facilitates the potential for a correction to retest that trend line. If that trend line is lost, the expectations are that we then move into a higher time frame correction. Now, what could that look like for Bitcoin? Of course, if we take a look at what we have seen historically through this bull run, so we're looking at the price performance essentially ever since we break out of that falling wedge pattern over here, which was again the end of the bear market consolidation before we entered a new bull run, right? We are looking at similarities in the price performance in terms of momentum shifts. So when we can see our momentum shifts, particularly downward momentum shifts after expansionary moves, we had a downward momentum shift here, which resulted in a correction towards a 50 EMA and the Gaussian channel upper band. Okay, we had a downward momentum shift here, which resulted in a correction towards the Gaussian channel and the 50 EMA. Again, the same 2 points we saw here. Therefore, if we see, again, a confirmed breakdown of this trend line, we would have the confirmation of 2 out of 3 points, and we would have the negative momentum shift to facilitate a potential correction to the Gaussian channel and the 50 EMA. And this is where it becomes very important, because the loss of the upper band of the Gaussian channel results in the bear market starting. If we look historically, when macro corrections begin, it's generally when we lose the upper band of the Gaussian channel, because when we lose the upper band of the Gaussian channel, the probabilities become massively in favor of corrections towards the midline and through the lower band to the 200. So we will potentially see a steeper correction develop if these things occur. And that is why this uptrend is so important, particularly why we need to see the price sustain above this 115 level, because again, we're looking at this horizontal low, this 115 level. It acted as support for a few weeks over here, and then turn into resistance for a few days over here, and it is now support again, but it has the confluence with this diagonal uptrend. If we are able to sustain this level, we avoid potential further breakdowns for Bitcoin. Now again, this isn't to say Bitcoin is going to enter a bear market, this is just to say the directional probabilities on the weekly chart will shift in favor of corrections for Bitcoin if we start to drop back below this steeper uptrend, because again, this is representing the trajectory of the current trend. Just like we had this steep downtrend, what we saw was when we broke above that downtrend, we then initiated and entered an uptrend. So the same would be expected if we break the uptrend, we would then initiate and expect to see a downtrend, and likely targets would be the sell side liquidity, which is sitting between 98 to 100,000. So that would be the target if this trend were to break down. So a lot of bearish stuff to get out of the way first, because we need to understand the potential risks that are developing if Bitcoin does decide to see these corrections and break these key trends. It's all very well when expecting uptrends, but we need to be aware of the downside risks. So let's talk about the bullish side scenario, bullish stuff now, and then jump to the high time frame. So at the moment, we are bouncing on the POC. It's a good sign. It's a good thing we're bouncing on the POC. But, of course, we need to get back above 120,000. That is a key level. We need to break above 120,000 to facilitate any sort of continuation back upwards. So the expectations I have and the stance I'm taking is I'm taking a stance with the trend. I am short-term bearish, and I've been short-term bearish ever since we broke the break of structure, expecting corrections back to 115, then to see how the price is going to develop. If we develop short-term bounces, we then look for continuations back to 120, breaking 120, we were expecting new highs yet again. However, if we lose this level of support, we then expect corrections back into key critical levels of support, 110, 112. So playing it a level-by-level basis from now on, as Bitcoin has just created a high over here, and we've seen a pullback, so we have to expect this to be a local top. Now, when we're looking at things like the 4-year cycle, yeah, the market could continue to go up into October, beginning of October. That is definitely potential, but it is not good to, put your way of thinking into a box and have this ideology or this idea that the market has to go up because the 4-year cycle says so. Remember, the 4-year cycle isn't predictive; it is descriptive. It is there to explain what has happened and what maybe could happen if we follow through. But it is not predictive by nature. It is not giving us actual information. It's not telling us how the price action is behaving. It is not telling us what is happening in the price action. It's simply showing us patterns. It is simply showing us date range trends from historical price action and then inferring that to current price action. So it's not predictive. We're not using this to say, okay, the October 6th says it's going to be the top and therefore it's going to be the top, but it is the October 6th is the top of the 4-year cycle and therefore we should pay some degree of attention to that, but understanding it may not necessarily be the top. The 4-year cycle may break this cycle, it may not break this cycle, and eventually it is highly likely it will break at some point. So I'm not taking the 4-year cycle top, as written in stone, as gospel. We are paying attention to it, but we're also open to the idea that we could see tops before or even after the 4-year cycle top. So that is why we're trading on a level-by-level basis. So that is it, guys. For short term, those are the key levels. That is my assessment and what I'm expecting, and also how I'm playing this short-term price action. Let's move over to the weekly one more time. Now, in terms of the weekly, there's also one other key level that we will need to break down for me to turn bearish. And I am bullish, provided we remain above this level. Now, as I mentioned, although I am short-term bearish and expecting further corrections over here, only then turning bullish on the short term when we break back 120. On the higher time frame, the weekly, I mentioned already, we've only got 1 out of the 3 points to validate corrections, and therefore, we have to stay with the trend. The trend is bullish and the trend is up. However, there is another level we're watching. That is a 62.09. Historically, when we break the 62.09, we enter 10% corrections or greater. Therefore, the loss of the 62.09, if that occurs, will likely occur if Bitcoin breaks its trend line, which will just be another piece of data to suggest a correction is incoming if that trend is lost. So we need to be aware of that as a potential as well. Moving on to the total cryptocurrency market cap, a rejection here on the daily. Weekly is still looking good. Positive momentum is still good. Holding above the 3.63 trillion level, still looking good. Pretty steep correction on the daily back into these prior levels of character. Watching to see how this area holds as support. If we continue through this point of support here, we will see steeper corrections back to the 50 EMA. This is going to be a potential reversal point for the total. So we're watching to see very closely, again, with Bitcoin at the POC, at a local support, there is a chance we do see the market bounce from here. But we're watching very closely to see how Bitcoin reacts to the POC. Because again, if we do not bounce from the POC and go back to 120, we are going very close, or very likely going down to 115.6, which is this lower point of support. The total altcoin market cap, again, holding out until the weekly close, watching very closely. Historically, we have failed to close any weekly candle over the last year, really, since 2025. This is 2025 January. The entire year, we have failed to close weekly candles above 1.06. Every single time we've got above, we've seen large weekly rejections back into or below the $1.06 trillion level. At the moment, it is playing out more or less the same. We have 3 days until the weekly close, watching to see how that develops. Again, we've said already, for the total altcoin market cap to sustain above 1.06 trillion, we more or less need Bitcoin to also sustain above 120,000. If we do break through this level, expect the next leg up for the altcoin market into 1.16 trillion. But of course, if we fail to do so, we may see potential pullbacks yet again for the altcoin market. But all in all, not too concerned for the altcoin market unless we see the loss of the $1 trillion level, and as we can see, we do have support down here, the sell side liquidity at around 1.02, so that is a potential reversal point if we retest it. So pay attention to all that, guys. I hope you enjoyed today's video. Quick update, a lot of volatility, playing level by level. So to summarize the video and to leave you with one more thing, rejection from all-time high, mass liquidations. Liquidations sometimes result in reversals, which we are seeing with the short-term trend breaking down, Bitcoin retesting the POC, the altcoin market rejecting, and the total cryptocurrency market cap pulling back to change of support. If Bitcoin is unable to maintain above the POC level, we will likely see continued corrections for the market to retest its monthly, multi-month uptrend, spanning back from 74,000, where if lost, will put the market into a weekly downtrend, potentially marking its move as the local top. However, while we remain above this weekly uptrend and the 15.6k level, potential reversals are very much on the table. However, we need to wait to see whether or not those reversals develop in the POC or push one more little leg down to 115. The warning signs are there for steeper corrections. They will trigger at some point, but not right now. Pay attention moving forward. Thanks for tuning in. I'll catch you guys on Sunday's video. I'll see you then. Bye.
No, there's not enough time left to gain enough levels for that to be worth it. And 3 floors to go. I said the flow boots, I ain't gotta worry about that. I guess that's it. Keep wanting there to be more secret rooms. Alright, we're going to the shop first. I think it had a cool relic. Here we go.
What's up, everybody? Thanks for joining me on D's Analysis. We're going to be looking at MSTR and Bitcoin today with a couple different charts and indicators. Holding underneath our key level right here, this upward sloping trend line. And then on top of that, we have actually fallen back inside of this range to the downside, where you see this downward sloping trend line. We've fallen underneath there. So now we have additional confluence to the downside. So we have this downward sloping trend line. We have this upward sloping trend line. And now we're getting sandwiched between this downward sloping trend line and compressed between this key support zone. It is the smaller or more minor level out of these three zones that I have drawn out, but it is still an important level that has been established from April 21st, 2025. So it is very important. You can see we are getting a little bit of a bounce off of it, but we are back underneath this trend line. So now that we're within this trend line, it's going to open up the idea of us continuing this trend down if we were to break this horizontal structure. Now, if we were to break this structure and come back to a retest here, that's going to definitely be confluence to the downside. So we'll see where it takes us, but that's something to take note of and look out for. We're also going to be looking here on the weekly to see where we end up closing. Ideally, we'd like to see a close minimum back at 380 or so we could close outside of this downward sloping trend line, because at least if we close outside of it, then we could potentially retest off of this trend line and start to bounce and start playing with this upward sloping trend line up here. But if we start closing back inside of here, then the targets will start to look lower and lower. And then when you look on a smaller time frame, if we were to break the structure here and surpass 354, then that's going to open up a potential quick move potentially to that 325 area. So we'll see where it takes us, but if we were to get a close back underneath the structure and some kind of retest, and once we get that continuation of a move, that could definitely make it down to the structure here at that 325 mark. When you look at the weekly, you can see it's actually a pretty clean move. If we were to fall underneath here, it should be a clean move to 325 to around 312. Just looking at the weekly for MSTR. Now on the weekly SMA, we are at our 20 right now, and we definitely want to hold that. We're slightly underneath it. It's sitting around 376 or so. We're sitting at 372.94. So now that we've closed underneath it on the daily, at least, it could potentially retest. If we were to close underneath it on the weekly, then that's going to open up the idea of us potentially retesting and continuing to move down further. And like I said, if we do lose 355 and we get a solid close, that's going to open up the idea of us falling all the way down to this 50 moving average, which is sitting at that 326 mark, which will be in confluence with this key level of support. So maybe that's where we'll find a bounce, at least temporarily, if we were to fall down there. Of course, nothing has to happen. And on the daily, it's not looking the best, as the 20 is about to break underneath the 50, and that could potentially signal lower prices, at least short term. We do have the 200-day sitting right under that 355 mark, so hopefully that could be a key level of support that can help support price, at least temporarily, to slow down any kind of move to the downside. On the weekly Bollinger Band, if we do close underneath the blue band, that's also going to open up the odds of us bouncing off of that and continuing down to that green band, the bottom band. And on the daily, we're actually pretty much oversold. When you look here on the Bollinger Bands on the daily, we've actually just wicked off the bottom. So hopefully we can actually get a move up to the blue band. So this is actually a nice sign to see. So here, what we would love to see is a double bottom form, and we get that second bottom right here off of that moving average, the Bollinger Band, and this key level of support, and then we can at least make it back to the blue band and hopefully surpass that and get back inside of this upward sloping trend line. That's where we want to be. We don't want to be playing underneath that trend line. We are now playing underneath our 8-week EMA. So if we hold this close here, I would expect some kind of retest and potentially a move down further, unless we can completely flip the momentum. But if the continuation of that momentum continues, then we could potentially see lower levels. We do have a gap to fill here at 383 to around 381, this little area right here. So we'll see if we can push up to the 8-day moving average, the EMA, and see if we can retest off of that. Hopefully we can break through it and get a close. If not, if we continue this momentum to the downside, then I would expect a wick and potentially fall back inside of this downward sloping trend line. When you take a look here at Bitcoin, you can see that we got absolutely rejected extremely hard. It was looking incredibly bullish, and we got a red engulfing candle to the downside. I thought it was very bullish once we got this close above this wick here at around 123 or so. Getting that close was really a good sign, and we wiped out the entire move from the past 2 days. And one candle just absolutely wiped it out. And now we're sitting back underneath. And that's why I was saying we want to get a weekly close or a retest to continue to move higher, which we've seen here, and it actually failed And this time it looks like we actually closed on the daily very bullish, and then we still pushed back in and failed to the downside. It looks like it was a fake out. And now that we're back underneath this trend line, we'll see. Of course, we'll wait for the weekly, but if we hold a weekly close back here, it's going to be right back to the same position that we were previously in, which is bouncing off of this trend line and looking for potential lower prices or some kind of sideways action. In all reality, nothing has changed because this was just a fake out, and now we're back in the same range. It was looking pretty solid, and I don't think it's bad in any kind of way either. I don't think it's terrible, because we're still holding a pretty solid uptrend. If you were to hold it like this, then you could say that we fell underneath it and we might retest to push down further. But if you were to draw it, I guess, like this, then we still might be holding it. It all depends on how you draw it. So there's always different ways of drawing these charts and lines and everything. But overall, the sentiment's still neutral, and Bitcoin's still almost at all-time highs. So I don't think anything has really changed. And like I previously said, we've seen a top at 95, another top at around 90 for the RSI. And if you were to draw that out in a downward sloping trend line, you can see that we'd probably be sitting anywhere from like 84, 85 to like 83 for that RSI top potentially. And that would create a solid downtrend, and then potentially a little bit lower in the following cycle, and so on, as Bitcoin stabilizes and more capital flows into the asset. But overall, I still think we have higher to go, and we're currently sitting at around 73. Total crypto market cap kind of stays in the same spot right now. We're in the same camp that we were already in, which is we have a move up, sideways action, move up, sideways action, and potentially a move up higher. We'll see how much higher it goes. If we were to continue this trend, which involves touching the top of this trend line, then that would put us all the way at a 12 to 14 trillion dollar market cap. I don't know if we'll do that because we're only sitting at 4 trillion right now. That would be a very exponential move to the upside. So we'll see where it takes us. But if that were to happen, then that means we're very early in this move. If not, then potentially in the next cycle. It's just going to take a lot of capital for that to happen. Now that these market caps are increasing little by little, day by day. When you look at ETH and Bitcoin, they're all just becoming monsters in terms of market caps. So it's going to be harder to move these things. Tether dominance looked like it faked us out as well. I mean, of course, because Bitcoin dropped. So it was looking incredibly bearish. And we got a solid green candle that pushed all the way up. Now, the trend is still solidly to the downside. And honestly, it looks like that could have just been a retest of this key zone for a continuation to the downside. We'll see. I'll pull a fib here on this most recent leg, and we'll see where we're at. So we fell slightly underneath 0.5, and now we're sitting at the 382. So we'll see if this can be a continuation to the downside, which would be very bullish for Bitcoin. And when we look at Bitcoin dominance, we can see that this thing is still falling, and we've fallen underneath this white line that we drew out. And I was saying if we can get a close underneath there, that would increase the odds of us falling to this next level, which would sit around this 57 mark. That would be a pretty significant move for altcoins to start outperforming Bitcoin. But overall, we would need a larger move to the downside if we really want to see altcoin season happen. We would need to see pretty much a repeat of what we've already seen prior, which would look similar to these moves over here. I don't know when and if this is going to happen, and I do think if it happens, it'll be relatively quick. It'll be much quicker than you anticipate, because when you zoom in, you take a look here, from the start of this move, from this initial red candle, it was 1, 2, 3, 4, 5 months, and you're already at the 45 mark, which is pretty much signaling that the top for the cycle could be in. And then for this one here, it depends on where you take it from, but if you're off of this move, it was 2 candles, and if you start from this red candle over here, you had 1, 2, 3, 4, then you had a little pullback, 5, 6, 7, and then 8 months. If we were to have it at 5 months from this candle, then that would put us at 1, 2, 3, 4, 5 would be November, and then 6, 7, 8 would be February. If we were to just kind of like play it in between, we just say 6 or 7, you're looking at, that December, maybe January area. is when we could potentially touch this if altcoin season actually does play out, where altcoins are starting to outperform Bitcoin. But we need the capital to flow Bitcoin to Ether and Solana and all the larger market cap crypto into the smaller ones. And this will show that continuation. And here on ETH Bitcoin, you can kind of see that we had this incredible downtrend for a very long time, and now we're absolutely ripping to the upside. And the bearish moves are starting to be flipped. So we have this golden zone here off of this smaller leg, and we bounced off of it, use it as support, and we just surpassed our last line in the sand at 886. So it's pretty much, once it hits the 1, this bearish move is completely out of the door, and now we have to worry about this bearish leg to the downside. Depends if you want to take it from there or there. Either way, it's going to be relatively the same. We are currently at the 0.5 to the 618, which is our next golden zone on the larger leg. And if we can do a repeat of this move and we close above, retest outside of this trend line, then that could really get things going, and ETH can really start to outperform Bitcoin. So we'll see where it takes us, but right now it's looking pretty solid for ETH. ETH has been rallying pretty hard. We'll see if the trend can continue. And we are running into the 20-month SMA, which is going to be a key level that we have to break and hold on ETH divided by Bitcoin. That's going to be a very strong level to break, as you have a golden zone with this downward sloping trend line and the 20-month. So that's a lot of confidence to the downside. But we do have some pretty solid support with the 50-week, the 20-week, and the 200 is sitting up here at around 0.34. So those are kind of the levels that I would be watching for in terms of ETH Bitcoin and just crypto market in general. Let me know what you guys think in the comment section. Drop a like and subscribe. I enjoy all your support, and I'll see you guys in the next one.
Alright, we're about to wrap this run up here, guys. Appreciate y'all watching. We're just gonna chug the strength serum, grab the fire potion, run in, waste this guy. There we go. Hopefully it doesn't die too soon. I bet you're pissed about that, aren't you? Dead. Game. There we go. Appreciate y'all. This is the double heartbreak run. We had the heart buff. We lost it twice. Try again another time. Well, we've got another gold. We've got enough gold. We almost have enough gold, actually, but not quite. Have a great night, everybody.